0.2% reading on retail sales. So compared to that, a 0.2% is definitely better, but what was expected was 0.6%. So you could see it either way. Treasury yields, meanwhile, have dropped on weak retail sales. The 10-year is at 4.3%. But really, the big story all this week is going to be the two-day Fed meet that starts tonight. The next couple of days become crucial in terms of the outlook on what really is happening in the US economy. Gold, meanwhile, holds on above the $3,000 mark. More and more gold is becoming the asset that everyone is drawn to, shining away. And another reason for gold holding on to that $3,000 mark is when the Treasury Secretary comes out and says there's no guarantee there won't be a recession. I'm talking about Scott Bennett. It is something that is worrying all over. Asian markets, meanwhile, have been in the green following the US market cues. So that's a pretty screen this morning. I'll pull up the implied for you as well. The implied also looking very decent, 160 points up. One data point, though, which I thought was a little worrying, and I'll get views from Neeraj and Alex on this as well, is the fourth quarter advanced tax growth collections, which came in yesterday, announced yesterday, and they're quite muted because the cumulative number grew 14.6% as of March 16th. The cumulative advance tax by corporates grew 12.5% till mid-March versus 16.7% till mid-December. In Q4, and this is the worrying one, frankly, advance tax collection grew by a mere 0.88%. The net direct tax collection was 13% up, and the gross tax collection grew 16.2%. But look at this figure. Advance tax paid by corporates in Q4 grew by about 2.03%. Now, the government had revised upwards the direct tax collection target of 22.37 lakh crores as well. But just the point that if we are hoping for a better Q4, then some of the tea leaves that you read or signs in the wind that you read is the advance tax figure, and that's not seeming great. So I'm a little worried about that.
So my interpretation of that is generally the way that individuals and corporates both do it is that they will front load in the first three tranches. And so we've had revisions in the estimates for earnings over the course of FY25 come out, and they have revised it downwards. So they may have, over the course of the last three tranches, overpaid, and that is being adjusted in the Q4. Does it necessarily mean that Q4 will be exceptionally good? Certainly not, but it may not be very bad either.
I think exceptionally good is off the table
Definitely.
On all counts. Even with the front loading, I would say that this number is, because you're doing it a year-on-year basis as well, is cumulative, quite dismal.
It does point towards one that the year at large will not be great. We just hope that the Q4 will be better than Q3.
Yes.
So that is one. But again, and the other part is on individuals, there is no advance tax that is coming because capital gains have not been there. But individuals anyways would form a very low part of the overall piece. But still, we've gotten used to both the advance tax coming in or individual taxation being filed by people because of capital gains for the last 3 years. That will not be there this time around. So that was, it is an interesting worrying point, if you will. Let's see how it shapes up.
If anything, heading into next year, the capital losses that are booked over the course of February
will
and
offset,
March will offset gains in the next year.
Massive, you are right. Massive tax loss harvesting has happened in the last 30 odd days. I doubt it is over as yet.
It's not finished.
But yes, most people tend to do it before the 15th of March. You don't want to leave it till the very end. So a lot of tax loss harvesting has certainly happened, and rightfully so and smartly so. The small antidote on the bond side, though, I thought it was interesting that Jefferies in the Greed and Fear note have said that they are that they are removing the 20% weighting in the Chinese 10-year government bond is okay, but they are replacing it by increasing the investments in the India 10-year bonds as well by 5 percentage points each, which probably points towards a lot more global investors, and this is Chris Wood, who tracks India very, very closely, believing that the rate cut cycle is around the corner. I mean, we've seen one, and maybe there is more in store. So I would suspect that that's a point to that, and that is an antidote. One of the things, a necessary, if not a sufficient condition for an equity rally as well. So it's good to see this.
Okay, it's good to see, and certainly people who are investing in hybrid mutual funds will benefit because they have exposure to fixed income as well, and yields going down is beneficial. Let's talk about what happened in trade yesterday though. You had foreign institutions that once again sold to the extent of 4,500. Strong buying number coming through from domestic institutions to the extent of 6,000 crore rupees. Now, Indian equities of course started the week with gains, and gains were broad-based, but at the end you saw that it was off the high point of the day. You lost steam over the course of the session. The Nifty 50 gaining about 100 points or thereabouts, ending above that 22,500 mark, but remaining within that broader range that we've indicated. Even yesterday we spoke about that range of about 22,200 to 22,700, and those are where those key moving averages come into play. The broader markets also have not moved very substantially. Of course, you saw a move in the mid-cap index. The breakout remains elusive. The Nifty Bank participated yesterday, gained about 0.6% or thereabouts. Both those benchmarks, the Nifty 50 and the Nifty Bank, remain below key moving averages. The mid-cap index, as I said, saw healthy gains, 0.75% or so. The small-cap index gaining about 0.33% or so. The market breadth at the end of the day favored the declines. It didn't start that way. In fact, it started with the advances in the lead. Pharma, financials, auto, metal stocks all gained. Realty and PSU banks continued to underperform.
Yep, so one is of course what's happening on that ecosystem. You know, I missed the. I wonder if the automate. So okay, let's start with the trade setup first, and then I'll get to individual pockets of strength or weakness. One is of course, I mean, just what the markets per se did yesterday, and staying within that midpoint range, 22,500 or today we might test the upper end of the range. I think the question marks would be out that do we kind of see selling at this 22,700 odd level, or is this a trend that builds up? So the broad range is seen, but for now, trend traders have had a really tough time, right? Because you're not able to trade on an uptrend. Some people are just used to doing that, and they are having a really tough time. Could this mark the change? Remains to be seen. So that is part one. Let's move on the points for the trade setup. So one is of course this. The other pieces, I mean, yesterday along with all the data that came out, the fact that while exports fell, but imports have fallen significantly, and therefore the estimates on the CAD at 0.9% of GDP is really a big stability factor for the rupee as well, right? I mean, we've seen instances wherein CAD was whatever 3, 4, 5% of GDP, and therefore used to cause flight of capital, anxiety around what the currency could do. 0.9% of GDP is stellar. Yes, FY26 might be higher, 1.1%, etc. But for now, 0.9% of GDP, good stability for the rupee. I don't know if in part because of intervention or otherwise, but the rupee had big bumper gains yesterday, right? 24 paise at a single point of time, or 24 paise at a single point of time, which is very interesting too. And two pockets. One is cement. Now, all the conversations, I was in Chennai over the weekend, and the whole southern gang of investors, I can call them that, because Chennai is a very developed equity market cult out there, right? The Tamil Nadu Investors Association is a large body. Can't rival Mumbai, of course, but because Mumbai is the epicenter, but still very large. All very gung-ho on cement. So could be very interesting to see if price hikes around the corner. I was told that for some of the cement companies in South, they have seen a 1% price CAGR for the last 10 years in cement pricing. Saying at some point of time this has to give. It can't be that cement prices just don't go up. Yes, it's a commodity, but so is steel, so is a lot of others. So they're betting on cement. The last piece though, guys, BYD over in yesterday's session has rolled out charging mechanism, a battery mechanism which charges the battery in 5 minutes flat. 5 minutes. Now, what can this do to one, electrification, and two, to the competitors that BYD has? Yes, on the global front it's Tesla, but I think about the Indian manufacturers as well, right? Yeah. You and I all have this anxiety that 1 ghanta charge karna padega. 1 ghanta. What if this is the game changer? 5 minutes. You go in, you fill petrol for 5 minutes, you charge your car for 5 minutes, you get out. Can this be the game changer?
Wow.
So BYD is going to be the stealth story. By the way, stands for build your dreams. Build your dreams. So I think that's going to be just one point on the current account deficit. I just want, and I agree, the number is great, but a lower import is usually not the greatest sign either.
For economy.
For economy, because the lower import is pointing to muted demand, and a whole bulk of that import would have inflated gold prices built into it.
Yeah.
So then you have
But gold imports have also fallen, which is a good sign maybe.
Maybe because of the pricing, but then in the total number,
agree.
they will have a sizable share.
Yeah.
So if your imports are dropping because your domestic demand is less, then that's a bit iffy. Even
Yeah, for the economy, 100%.
No, but then economy market, the current account deficit number then
Yeah,
is
but
hiding
I'm saying
pain.
this in isolation for the rupee.
From the rupee and from the perspective of capital flows.
Yeah, rupee I'm sure is getting some boost right now from Mint Street, and perhaps it's time. But all right, so that's on the economic front, but we're getting you every angle to set up your day, and we're going across to Puneet now for the FNO cues that we should watch today. Puneet, what's on your radar?
Well, thanks for that. So, the Nifty 50 has been in the range-bound session of about 22,300 to 22,600 for the 6th consecutive session. Today, we're seeing a bump up across the highs of about 22,748 on the GIFT Nifty. It's higher than yesterday's high of about 22,577 that we saw yesterday, and multiple brokerages have come out mentioning that they're seeing a trigger on the upside because of yesterday's high, about 22,577 odd levels on the Nifty, up, as Neeraj mentioned, at 22,700 as well as 23,000. On the lower side, on the support, we are seeing immediate support at 22,200 as well as 22,300 levels, and sustaining above this level will maintain the current pullback as well as the positive outtrend that we are seeing. And let's also look at the Nifty 50 futures, because we've seen the 75% point premium on the Nifty 50, while the open interest has fallen by 2% yesterday in trade. The Nifty Bank futures also trading at a premium of roughly about 131 points. We've seen the open interest on the banking side though increase by 1.49% at a level where it's been trading in between the 47,700 to 50,000 rupee levels, and it'll be very key to watch on the upside if this level gets broken anytime soon. When you look at the open interest distribution levels as well, that's something to watch out for, because we've seen maximum call open interest at 23,500. We've also seen maximum interest at 23,000 in terms of the calls, and whereas in the puts we've seen maximum open interest at the 22,000 odd levels as well. Finally, just some stocks on the open interest gaining side first. We've seen some positive long build up on stocks like PB Fintech as well as Bajaj Finance. And Bajaj Finance, we have the big news of Alliance and that Alliance breaking up as well, but it was a key overhang according to multiple brokerages, so watch out for this one. The other one's Titagarh Railway on the short build up side, and it's been continuing its downward momentum, continuing from the short build up yesterday as well. On the open interest loser side though, we're seeing short coverings on Ramco Cement, something that the cement majors in the south have been telling about. The tax hike by Tamil Nadu is hurting them. The other ones on CDSL, we are seeing some long build up as well. So overall, some stocks to watch, but the resistance level on the upside for the Nifty will be something to watch out for.
Okay, so those are the cues that you need to watch out for on the derivative space. Meanwhile, what's on our watch list this morning? Let me start with my first pick on my watch list, and remember, this is based on the fundamental story and whether that is good, bad or ugly. So a thumbs up for Shilpa Medicare. Their arm has partnered with MAB3 Biologics for a new cancer therapy. The company will handle development, trials and manufacturing. Shilpa will provide MAB3 access to India through its extensive partner network. Now, this therapy is important because it targets novel immune checkpoints to enhance immune response and aims to make cold tumors hot for better cancer treatment response. This is a Swiss biotech company that they have partnered with, which is focused on innovative cancer therapy. So this is a big one in terms of potential in India, which unfortunately has seen over time a huge jump in cases for oncology. The other one that we're looking at this morning, and I'm picking this morning, is Vedanta. I found this letter to shareholders from Anil Agarwal quite interesting, which is why I've picked this. And this is the number, which I think is good. He expects the newly demerged companies to grow into a $100 billion company in all, is what the chairman of Vedanta, Anil Agarwal, says. He also expects the current listed Vedanta entity to continue being a powerhouse. The new demerged companies will have independent management and distinct capital structures. He also notes how demand for products of each demerged company is the need of the hour. On Vedanta's investment return, he says 5-year-old long-term investors have seen a return of 4.7 times to date, and a dividend yield of 81% in the last 5 years, the highest among peers. So that, I mean, for anything else that you might think about the stock, in terms of dividend yield, it's definitely an interesting take. IndusInd Bank is the other one that we're tracking. Now, what has been happening with IndusInd Bank is quite interesting. You've been seeing, obviously, over the 1 month, you've seen that big hit after all of the regulatory issues that have come in, questions on the management, the derivatives, discrepancies in their accounting, etc. A little bit of recovery last few sessions, but I thought what Moody's is saying is interesting to note, which is why I thumbs down to IndusInd Bank basis this. They say an upgrade is unlikely given the BCA review. The BCA may be maintained if asset quality, profitability, capital funding and liquidity remain stable and leadership and risk issues are resolved. A downgrade could occur if the external review, remember there's an external review on right now, finds serious issues, asset quality worsens or credit costs exceed 1.5% of total assets. They say weakening funding or liquidity would also be a negative. Deposit ratings would drop if the BCA is downgraded by more than one notch. When I say BCA, I mean baseline credit assessment. So that in itself is a bit of a negative. Bernstein, meanwhile, I thought an interesting note. So if you look at what they've said, they've retained and outperformed, but they've cut their target price from 1,300 to 1,000 earlier. Still pretty steep compared to where the stock is right now. It's 5 rupees up yesterday. They say stock is cheap at 0.8 times trailing PBV for a bank which delivers a return on assets of 1.5% plus. But look at the top investor concerns. One, promoter owns 15%, 50% of which was pledged. Asset quality issues, management commentary, and decline in ownership has eroded management credibility. The risk of deposit outflows, given a large wholesale book, and accounting issues raise potential of other issues arising. So their concerns don't exactly, I think, sit well with what the rating is. It's still an outperform based on valuations, but I think those 4 concerns are very much there.
And the target price looks extremely high because of the kind of drop that you've seen in the...
Yeah, they've lowered the target price
they've
from
cut
1,300 to
1,000, yeah. So I think I have the big one today. Bajaj Finance is going to be in focus, of course, and Puneet alluded to this, but let me take you through the key details. This is a thumbs up, obviously, because Allianz SE has signed a binding agreement to sell its 26% stakes in its joint ventures with the Bajaj Group. Which are these? You're talking about the Bajaj-Allianz General Insurance and you're talking about Bajaj-Allianz Life Insurance. This is set to be done at a total value of 2.6 billion euro. Now, what are people saying? Essentially, what brokerages are saying is that a long pending overhang has been removed. Why is that? Because the RBI FEMA regulations have stood in the way of Allianz increasing its stake. The sale values Allianz stake in Bajaj-Allianz General Insurance at 13,780 crore and in the life insurance business at 10,400 crore rupees. The deal is expected to be closed before July of 2026. Now, remember that Bajaj Finserv is going to be acquiring a portion of this. Bajaj Holdings and another entity is going to be acquiring the rest of it. Bajaj Finserv, in fact, is only going to be acquiring about 1% and with a payment of 940 crore rupees, which is not very substantial if you think about the cash reserves that the company has. And so it's going to be able to fund this with internal accruals as well as bridge loans, is what MK is saying. The major funding arrangements will have to be done by Bajaj Holdings and Investments, which, by the way, also has substantial cash on its books. Now, we will get you details of this, but I'm just going to mention it so that you know. The deal values both of these entities at lower than what the street and analysts had pegged it, to the extent of 15% or thereabouts between the two of those companies, and so that can be looked at as a significant positive. The other big positive, of course, is that there is a consolidation of these two entities with the Bajaj Group, and that allows for an alignment of strategy going forward, and that also is going to be seen as a positive for Bajaj Finserv. Moving quickly to Godrej Consumer, this is a thumbs up on the back of a Goldman Sachs note. What are they saying? They maintained a buy with a target price of 1,370. They say that Q3 was an aberration in an otherwise strong volume growth trajectory, and they are poised, Godrej Consumer, to be the fastest growing FMCG company in their coverage universe in the next financial year, that's FY26. Household insecticides business is on a path of structural market share led growth, and they also expect the margins to recover in the soap business as the pricing gradually passes on the palm oil inflation. The stock, by the way, has fallen about 3.6% over the last 3 months. It is still about 7.5% below or rather above the 52-week low. The final stock is real estate company Signature Global, and Nuvama has initiated coverage on the stock with a buy rating. It has set the target at 1436, which implies a 34% upside from the current market price. What are they saying? They're saying that this is a premier developer with a track record of execution. It has also got a low-cost land bank in the Gurugram market, which is attractive. The company has strong margins and rapid sales velocity, which leads usually to high capital efficiency, and is also on the way to achieving net cash status, Neeraj.
I'm choosing Manappuram Finance as the first one. Now the formal declaration that the board meeting is on March 20th to evaluate the proposal of raising funds. For a lot of people, it seems to be a done deal because this belief has been there for a while that there is some fundraise that Manappuram would do. Could it be a placement as well? Because that's the most, that's a story that has been done multiple times by multiple media houses as well on this. So keep an eye out for Manappuram. Could react a little bit now that the D date is known. Second one is Star Cement. Now it'll be interesting to hear from the company what this could mean for them. But they're a preferred bidder for Boro Hundong limestone block in Assam. It's a 400 hectare block. They are very large per se limestone blocks per se. It has a reserve of 146.75 million tons. This should be positive for Star Cements incrementally. I would reckon the stock may react. Now, SpiceJet, I'm not 100% sure, but I'm bringing this up because one way to look at it is that Ajay Singh has sold more shares, so 2 crore shares at 45 apiece, but the buyer is Plutus Wealth. Remember, the last time Plutus bought a very large stake, I think on the 5th of March or thereabouts, the stock really rallied. I think they are also participants in SpiceJet's original QIP at 62 rupees as well. So clearly, Plutus is invested and are investing more into SpiceJet. The story that people seem to be betting on is that there is a dearth of airlines, there is supply-demand mismatch, and therefore incrementally it will not be difficult for even a SpiceJet to gain market share once they get the planes, and the fundraisings might help per se. This is not a fundraise for SpiceJet, by the way. I'm just saying that the promoter selling may be masked by the fact that somebody who's been an investor is buying additional shares. So maybe, just maybe, the market doesn't mind that.
They also had a clarification yesterday about the conversion of warrants of what Ajay Singh was selling. And they have at least pitched it as a fundraise more than anything else. So I think you had an initial downtick on it, and then once that clarification came, it was sort of turned back. But I think the story this morning that we're talking about is gold, and this is something that's been buzzing in our newsroom as well, about how gold and maybe the Indian housewife who, despite everything, always collects gold, is turning out to be the smartest investor of all in recent times, because India's favorite yellow metal continues to shine on the global stage, hovering near the $3,000 mark for the second consecutive day. The safe haven asset has delivered stellar returns of over 20% in the past year, outperforming equities as investors flock to it. And of course, that's fueled by growing economic uncertainties. These concerns have been amplified by US President Donald Trump's tariff policies and their ripple effect on global markets. To talk more about the implication for investors and whether all that glitters is truly gold, I'm joined by Devang Shah, Head of Fixed Income at Axis AMC. Devang, great to have you on the show, and thank you so much for joining us. I think the key question that everyone has is this gold rush just at its peak? More to go?
Yeah, I think you summed it quite well. I think probably gold has come out to be a clear winner last year, and somewhere down the line, 1 year returns for gold has been upwards of 35%, if I'm not mistaken. So yes, completely on glued on. Yes, gold has done phenomenally well. There are very peculiar reasons why gold rallied so much in the last 12, 18, 24 months. It's one, specifically the entire geopolitical risks. I think you spoke about it. We had significant uncertainties about global wars. we had now been talking about trade wars, and trade wars leads to entire inflation being back, commodity concerns, and that is why gold is always used as a hedge whenever you have uncertain times. The second biggest driver for gold has been this entire central bank purchases. If you see across the annual demand supply for gold has been closer to 4,500 to 5,000 tons. In the last 4 years, we have seen central bank buying continuing to be upwards of 1,000 tons, and China is one of the biggest contributor for entire central bank buying. So our perspective is that the gold rush or this entire rally in prices has been because of geopolitical risk, because of somewhere down the line this entire currency issues whereby people started questioning about dollar de-dollarization. Third thing, central bank buying. I think incrementally from here on, gold prices should see some bit of, I would say, muted returns in the near term. Medium term, it continues to be a good asset allocation, and we continue to advise clients to hold on because there has been a significant run up in prices. In the near term, we have also seen significant dollar depreciation after Trump took office. I think if you have looked at the dollar move, the dollar has significantly depreciated by around 6 to 7%. That also is a boost to gold. We believe somewhere down the line, gold prices should see some bit of stability out here and probably near-term muted returns on the factor that we might see some bit of dollar strengthening. A large part of uncertainty on tariffs, which people were thinking that there will be a lot of tariffs and then currency wars. I think the US president, specifically Trump, is going slow on tariff implementation. That means we should see some break to the rally.
So, hi, Alex here. What is the view then at this point? So, at what point would you say investors should consider taking money off the table? Because a lot of investors invested in ETFs. Neeraj had an interesting data point yesterday that the incremental flows are not as significant into gold ETFs as one would have thought, considering that this asset class has been incredible. But at what point do you say people should take money off the table, book profits?
See, Alex, there is nowhere a clear time where we can probably put across, because as we always have mentioned, gold, if you look across at various time frames, pick up from 1970, 1960, 1950, 1970 band, gold did a very, very phenomenal return. Then 1970 to 1990, 20 years, gold didn't do anything well. If you look across from 2000 to 2001, I think somewhere down the line, gold has given again phenomenal returns. So there have been patches where gold gives good returns, and there has been time frames where gold doesn't give any significant return. Our perspective incrementally is that if you look across at gold returns, they have been significantly on the upstream for the last 1-2 years. There has been significant liquidity. There has been inflation concerns. There has been this entire space on de-dollarization and central bank buying. All of these led to a significant uptick in gold prices. We believe that near term, if you ask me, I think there are other asset classes which might give you similar returns. We have seen some, I would say, sell-off in equities. We believe that fixed income markets at this point of time are very, very attractive because you have the entire liquidity measures being introduced by RBI. You'll have rate cuts. So our perspective is that probably near-term gold might see some muted return. On a medium term, you can still have an asset allocation to gold.
Fantastic. All right. Thanks so much, Devang, for joining in this morning and for your perspective. Always a pleasure speaking with you.
Thank you, Alex.
All right. We have to slip into a very quick break. We've got more stock-specific action on the other side, so do stay tuned.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
Welcome back. You're watching India Market Open. Let's quickly pull up the implied. We're looking at a good start to the day, and where can you make the best bets if you're looking at a Nifty implied open of 156 points? Will you see an opportunity like yesterday where you start a little muted first few minutes and then you see that zoom up? Well, anyway, we've got our watch list ready for you. Bajaj Finserv right on top. The reason is that they're buying out Alliance's stake in the insurance joint venture. They're going to split after more than 2 decades. And after 24 years, really, Bajaj Finserv and Alliance split. But the interesting thing is, Alliance in its note has also talked about how they will use these proceeds to improve their presence in India. So what they're going to do next is also something to watch out for. Manappuram is the other one that we're tracking. Their board meetings for fundraise on Thursday. Shilpa Medicare on our watch list. They have a pact with MAB Tree Bio AG for a cancer therapy. We're also looking at IRCON. They have an order from the Meghalaya government to the tune of 285 crore rupees.
All right, let's talk about the rest of the stocks. You've got Morpin Labs. You've got a diabetes drug that has been launched. In fact, it is a drug that deals with diabetes, heart failure, and chronic kidney disease as well. RITES is the next stock we're talking about. Current orders have been revised from $5.4 million to $10.8 million, and that's quite a big jump. Bajaj Style is in focus. JM Financial has initiated coverage with a 72% upside on the stock that is perceived. And on the other end of the spectrum, you have Sona BLW, where Citi has cut its target price from 630 to 570 rupees.
Okay, now before we move further, just want to mark the implied open just to show you that we are going to start off in the green and a good green at that, which is actually a welcome sign. 2 days on a trot now that we might have a 0.5% gain or maybe more on the indices. But
what's a good green?
Good green is
the right shade.
Yeah, no, it shouldn't be just 1.1 or 0.2%.
Yeah,
as long as it can be.
Agreed. A robust green out there.
Across the screen.
Across the screen, hopefully, yes. Let's see if IT holds true on that one or no. But time for an NDTV Profit exclusive. Now, sources have told NDTV Profit that IndusInd Bank may have delayed sharing information with the external auditor appointed in October. My colleague Agni Dev, who broke the story, has these details. Agni, good morning.
Right, good morning, Neeraj sir. So, latest one in a long line of IndusInd Bank updates that we have for you. So, the bank is apparently delayed reporting its financials, bringing financials to the table of the external auditor that was appointed, which was PwC, way back in October. This is what is likely to have caused the delay in the external audit process. Something which should not take as long as 6 months is what our sources have told us. Now, we already know that the Ministry of Corporate Affairs through the ICAI is likely to look at the financials of IndusInd Bank and the auditors who signed those financials. So the auditors in question are MP Chitale and Co and MSK and Associates. So while it has been reported that ICAI is likely to look at the financials, what we bring to you is the purview of the audit. So ICAI is likely to go through the financial statements and take a call. It will even go through PwC's report once it is tabled sometime later next week or the week after that. And once the board goes through all these reviews, it is likely to refer it to a disciplinary committee which will take action against the auditors if something is found out. Now, what sources within IndusInd and around have told us is that this is a case of misrepresented financials, and this is the financials that IndusInd presented over these 6 months while its derivatives portfolio was taking a hit were probably not in conformity with India's financial auditing standards. This is a developing story. We have reached out to all the stakeholders who have been mentioned, so stay tuned for further updates.
And once again, I reiterate, we invite the management of IndusInd Bank, the promoters, to come and speak with us. We have been relentless in our coverage of this story, and we want to hear your side. We've sent you the questions you want. We've put them before our viewers as well. We welcome you to come and give us answers that investors deserve. Meanwhile, the Bajaj Group will be in focus today. That's the big story really of the day. Their JV partnership, their joint venture partnership with Alliance exits after over 2 decades. And, what is the rationale behind this? What comes next? Somit is bringing us all the details.
The 24-year-old partnership between the Alliance Group and the Bajaj Group has come to an end, and Alliance will be exiting from the existing insurance companies, that is the Bajaj General Insurance business and the Bajaj Alliance Life Insurance business. Apart from that, they have also said that once this JV is terminated, both the parties are independent to pursue their insurance strategies in India going forward. So if you look at the consideration, firstly, Alliance Group is asking for around 2.6 billion euros for its 26% stake in the General Insurance business and in the life insurance business. Now this comes to around 13,780 crore rupees for the general insurance business and close to 10,400 crore rupees for the life insurance business. How this 26% stake will be divided? Now 1.01% will be taken up by Bajaj Finance, 19.95% will be taken up by Bajaj Holding, which is a listed company, and around 5.04% stake will be taken up by a private entity of Bajaj Group, that is Jamnalal and Sons. And post this transaction, Bajaj Finance will own close to 75.01% stake in both the insurance entities, that is the general insurance entity and the life insurance entity. How will the funding happen for this? Now Bajaj Finance will need close to a cash of around 940 crore rupees, which is much less compared to their current cash balance of around 3,500 crore rupees, while for Bajaj Holding they will be required cash of around 18,600 crore rupees for this transaction, while their current cash balance stands at close to 19,000 odd crore rupees. Now when it comes to the timelines and approvals, the intended timeline or the stated timeline by Alliance is around July 16, 2026. This is by when they expect this deal to complete, and when it comes to approval, they will be needing approvals from CCI, IRDI and other regulatory boards as well. Now comes the most important part, that is a valuation. Now this deal values the life insurance business at close to 40,000 crore rupees, while the general insurance business is valued at close to 53,000 crore rupees. Now this is a discount compared to what the street has been giving the value or assigning the value to both these entities, that is the life and the general business. Now for the life business, an average of 7 broking firms value the entity at close to 49,000 crore rupees, while the general insurance business is valued at close to 63,000 crore rupees, and this deal is happening at a discount of nearly 14 to 19% based on the value asked by Alliance from the Bajaj Group. Now lastly, what could now happen going forward? Now this transition from Alliance to Bajaj will give Bajaj Group a better control operation wise. It also removes the long pending overhang that the street has been expecting an exit of Alliance Group since October, so that overhang also goes away from Bajaj Finance share prices. But on the flip side, this could potentially also mean that Alliance could now pursue their own insurance strategy in the country. Given the post the 100% FDI approval, they could start their own insurance both in the life and the general business, and they could also go ahead and tie up with any other financial service entity, and this could lead to higher competition when it comes to the life and general insurance business going forward.
That's, I think, the interesting bit that Somit has spoken about. What is the next plan? Because if you see the Alliance statement which has come in this morning as well, they reiterate that we are in no way exiting India. This is not a, let's leave India policy.
Yeah.
This sounds more like a let's switch partners policy.
Yeah, something like that. I mean, maybe part of it could also be that they were part of it. I don't know the whole story, of course, but the part of it could be that they were in a minority in this JV. Maybe they are looking for a majority. Now,
who could the potentials be then becomes the big question, I suppose. It's already quite a saturated space.
Yeah, but there are a lot of people who are small players who would be happy to even give 100% FDI if need be. Or it could also be a partnership with a large player, who knows?
Yeah. And there are a few names that stand out. Of course, what they've said is that India will continue to be one of Allianz's main growth markets. So not mincing words, they're saying very clearly that they're going to stay.
And unlikely they can do it really solo. They need, and this is interesting because it's a test of the 100% FDI policy. So far, the question was who's going to give 100% to a foreign partner. But I wonder what Sunny Agarwal and Kunal Rambia think about it. Sunny Agarwal joining in. He's from SBI Cap Securities. So is Kunal Rambia from the street. Welcome to both of you and thank you so much for speaking with us. Sunny, let's get your take on the big story this morning on what's happening in the Bajaj Group.
Good morning everyone. And I think I was just looking at the valuation at which the deal has been struck. So for general insurance, it is coming close to 33 times annualized PAT number of 1,600 crore. And for life insurance, it's at 1.8 times price to embedded value. I think it's a pretty reasonable valuation at which Bajaj is getting 26% stake in both the JVs, life and general. So I think there is if I think from what is the price that has been paid for 26%. So that's a pretty reasonable price that Bajaj as a promoter is offering for 26% stake, and that definitely I feel will be positive in long term as far as Bajaj Group as well as Bajaj Finance is concerned, as they get the entire 100% profit of this fast growing vertical. So I think overall it's positive in long term. Yes, as I was listening to your conversation, obviously Alliance Group will like to stay in the market and will either be 100% on their own or will try to strike some deal with some other partner. So they would like to be in a majority they would like to be a majority player as far as the holding is concerned. So that can lead to an increased competition. But again, that's I feel still is slightly far away, but as of now, it seems that this deal seems to be positive as far as Bajaj Finance or shareholders are concerned.
Quick follow-up to that then, Sunny, what's your call on Bajaj Finance and Finserv? Do you have a buy rating? What is the potential upside from here?
Yeah, so yes, Bajaj Finance, definitely we are positive, and that is on the back of a very strong set of number we have seen from Bajaj Finance during the last 9 months. And at the same time, the kind of growth the company is likely to post in the band of 22 to 25% over the next 5 years. So we continue to remain bullish on Bajaj Finance, and our fair value for Bajaj Finance is 9,000.
Okay, interesting to see what happens to Bajaj Holdings, Maharashtra Scooters, and a clutch of those others as well. So that's one thing that you certainly want to keep an eye out for. Kunal, good morning to you, and trying to understand, give us a view, of course, let's start with the micro. Give us a view, since we are on this story, give us a view on the Bajaj twins or the Bajaj Troika, if I can. Do you like any of these names?
Good morning, sir, and good morning to all our viewers. So if you look at the Bajaj Finance, this is the counter which we have been discussing on channel since 1.5 months. It was the only positive trending counter, and every level was a buying opportunity. The first breakout was at 7,500. Now it's been a month. The counter is in sideways consolidation. Bajaj Finance is still holding strong support of 8,200 decisively. So any uptick above 8,600 can be a new buying opportunity with the target of 9,200. That's what the charts are showing. The trend is absolutely positive. The pattern which can be tagged to this formation is a flag formation. Similarly goes with Bajaj Finance. I think that was a laggard so far, but the trend is absolutely strong with the stop of 1,800. One can look at the levels of 2,000, but yeah, that's the previous high, so one needs to be cautious near those levels. Otherwise, trend is absolutely strong.
Okay, Kunal, now we will start off higher today and testing this upper end of the upper side of the range that we seem to be wedged in, 22,200, 22,700, etc. So if we cross 22,700 and stay above that level today, does that account for something, or is it each day as it comes?
So Neeraj bhai, the overall trend of the market in last 3 months has been negative, but the 4 years trend is positive. And the short-term trend, which we call it as last 15 to 20 days trend, was sideways consolidation. As you rightly mentioned, 22,700, that's the level to watch out even on the spot Nifty. But I will not be immediately buyer because the closing is very important. See, such kind of gap ups come with a trouble that's, the new buying or the selling has to be seen above that level, right? So the closing will be important and the follow-up buying will be equally important. So if we stay about 22,700 for a day or two, then with the stop of 22,400, I expect the Nifty levels to be 23,500 to 24,000. Yes, I'm bullish, but for now, it's still sideways consolidating. We'll have to wait for the closing.
Okay. Kunal, I believe you also got a couple of buy calls that you've lined up today. What's looking good?
Morning, Alex.
Morning.
So yes, two counters which are looking very attractive to me. The first is Adani Green. Now this entire Adani pack is actually doing good. They are in sideways consolidating and near to the previous bottoms itself. Right now, I think with the present behavior and the volume action, this counter is looking very good. Stop loss can be 880 and the targets can be 940. Again, keep trailing the stop loss. This is not actually the short-term trade, but we are initiating with the short-term trade in mind. The second is Aavas Financial, looking very attractive to me again. This counter is showing extreme volatility and good volumes picking up near the lows itself. So with the stop of 1800, the first conservative target will be 2100. Again, on the weekly chart, this is a fresh breakout which is coming in. So targets can be as high as 2500 to 2550 also. But keep trailing the stop loss in both, can be short-term as well as mid-term trades.
Kunal, the other set of stocks that we've been looking at closely is apart from the bank Nifty, your entire banking pack, which had shown a pretty good upswing yesterday. What is looking attractive here? You already spoke about Bajaj, but if I were looking at the other BFSI candidates, what would be top pick? And do you have a view on IndusInd right now?
Yes, I shared one of the charts on a handle with Neeraj Bhai also today morning itself on IndusInd Bank. If you look at the IndusInd Bank formations right from the inception so far, the 20 years old trend line is absolutely intact and the support is coming near to 600 levels. We saw the bottom of 608. I think that's the zone to watch out if someone is looking at the long-term formations. Just because the counter has bounced from the support, that should not be the reason for us to buy. So there has to be a sideways consolidation. But I think the overall long-term trend is absolutely intact. Consolidation near 625 to 650 can be the good level to think of initiating buy. I personally like ICICI Bank a lot. The formations are very strong. The sideways consolidation has come to an end. The positive trend has already begun. So with the stop of around 1250, one can initiate buy on ICICI Bank. The targets can be 1350 to 1375.
Kunal, just talk about the relatively nearer term strategies, right? So for anybody who is trading in this market, the mood seems to be a sell on rise kind of strategy, which has continued for some time. And so not many people willing to bet on a consistent up move. What should the strategy be, in your opinion, if we stay above that? And I know that this is a bit of a reiteration of the first question, but in individual names, we saw this in trade yesterday, we saw this in trade on Thursday as well. After a brief run up and some strength, there's a cooling off very substantially.
Alex, actually the work on our side has also increased a lot because it's not a gung-ho kind of market. We have to be very stock specific. So in the past one and a half months, we have been discussing about Bajaj Twins. We have been discussing about Kaveri Seeds. Now these are the selected pockets where I think there is a lot of room for upside. The new breakouts are coming on. So we don't want to go on the index specific right now, but very, very stock specific moves are giving a lot of comfort. So again, on the index front, as you mentioned, 22,700 ballpark figure, I agree. But I will not be a keen buyer on index for now. If the index enters the uptrend and it starts its higher top, higher bottom formation, we'll relook at it. But for now, stock specific moves are likely to continue. And that's where we are getting good risk reward ratio, and good strength is giving us a lot of comfort in terms of getting quick exits from the entry levels.
All right, let me go across to Varsha now, joining us with more stocks to watch that should be on your radar this morning. Good morning, Varsha. What are you tracking?
Good morning. Let me start with IRCON International, wherein the JV has received 1,000 crore letter of award from Meghalaya government. Now, since this is a JV, IRCON share will be at around 285 crore. Now, they're going to construct new complex on EPC basis, which needs to be completed in next 36 months. Then on my list is Morpen Labs, wherein they've launched a product which treats type 2 diabetes, heart failure and chronic kidney disease. Now they'll of course come up with the affordable pricing considering the large diabetes market, and they're gonna manufacture this product at their US FDA approved facilities. Now since this is an off patent product, many companies have come up with the same drug, including Glenmark Pharmaceuticals and Alchem Labs. Then on my list is RITES, wherein they've received additional work on the existing deal. Now the contract is to supply and commission electric locomotives, and the value of order has been revised from $5.4 million to $10.8 million. Last on my list is Religer Enterprises, wherein they are conducting a governance review of itself and subsidiaries, and the review will assess the practices and improve controls, and of course identify potential misconduct. And for that they've hired a legal firm, Tri Legal, which will conduct the review. And the Religer's board has identified a near-term cash flow gap, and for that the board will seek immediate funding from the Berman Group. And lastly, according to them, to get this money quickly is through the short-term loan directly from the Berman Group or one of their associate companies.
Okay, thank you for that, Varsha. So, I mean, quite a few stocks to watch. I would say Religer is a pain point there. Sunny, it's a saga that's been going on. Any sort of light at the end of the tunnel that you're seeing?
Yeah, I think maybe once this entire transaction is over, I believe that things should look positive as far as both the businesses are concerned. One is financial services, and on the other hand, insurance business as far as Religer is concerned. But to be very honest, Tamanna, right now we don't have coverage on the company, and it won't be right on my part to give any view as far as valuation or any price target is concerned.
Let's talk about some of the pharma companies that are going to be in focus today, Sunny, and I'll come to you with Shilpa Medicare. We spoke about Morpen, and interesting and fairly solid moves over there in terms of expansion of portfolio. Are you liking pharma right now?
Yes, Tamanna, I think within pharma, a few names, as you rightly pointed out, Shilpa Medicare continues to be amongst our buy list. In addition to that, a few small mid-sized players such as Aarti Pharma Lab, Blue Jet Healthcare. These are the few names which we like among the mid-cap pharma name. Among the large-cap pharma name, we are bullish on Cipla and Lupin from a long-term perspective.
Okay. Why don't we also take a technical check on some of these names, because the pharma pack as a whole was in focus yesterday. It was buzzing. And what do you make of some of these names, Kunal? Some of them, of course, reacting to news updates.
See, again, Alex, if I look at Morpen Labs, again, the trend is absolutely negative. In fact, yesterday was also a lower closing. It's reaching near the March 2024 lows of 42, but I will not be a keen buyer on this. For me to shortlist the counter on technicals is simply a decline, sideways consolidation near the support, but there is no support as of now on these counters. Rather, I'm more comfortable with counters like Sun Pharma, which have again entered the uptrend. And look at the trend of last 4 years. It's absolutely intact. Strong support near 1625 kind of levels. Counter is now trading at 1705. I think every decline can be a buying opportunity in Sun Pharma with the target of 1850, but not on the other counters which we just discussed on check.
I'm not sure we discussed this yesterday, but we've at least been speaking about it in the newsroom. IEX in the context of power demand, and look at what the stock did yesterday. It was one of the top gainers, and let's pull up the chart if we can. IEX gaining quite considerably, as much as 6% in trade yesterday. Sunny, is this a strong play based on the power story and the likely increase in power demand if capacity utilization for manufacturing companies goes up? Would you buy into this at this juncture?
Yes, I think there is no doubt that it's a signally strong quarter ahead as far as the power demand is concerned. And we have already seen that peak power demand has gone to the level of close to 260 gigawatt in the month of Feb. And historically also we have seen that ahead of summer, there is a lot of trading on IEX as far as spot power buying is concerned, and to that extent we are seeing that there is slight increase in the power tariff also. and at the same time the volumes have also gone up. So again, cyclical play. So definitely stocks like the IEX or any power related company tend to do well during the summer period. Coming specifically to IEX business model, I think historically we have seen that time and again there has been some intervention by government, either in the form of changing some regulation pertaining to certain power contracts, other exchanges getting rights to trade, so on and so forth. So in terms of business from a long-term perspective, we would like to remain neutral or would like to avoid IEX. But yes, definitely from a short-term signal play, look positive.
Okay, so that's a few stocks to monitor. One more is Signature Global. It is certainly a stock in focus because of a brokerage coverage. Anushi Johnson to talk about that. Anushi, good morning.
Hey, good morning, Neeraj. So Nuvama has initiated a buy call on Signature Global, and this is with a price target of 1,436 that we are looking at. A couple of reasons that they've highlighted. Firstly, on the kind of land bank parcels that the company has, it has been one of the premier developers and mainly operates in the Gurugram side of the business, and has a consistent track record. Even if you look at the company's guidance, we can see most of them are on track to achieve the FY25 guidance as well. So what is attractive currently for the business is its low cost land bank, and this is especially in the Gurugram market in which it operates. Along with that, the expectation is that the stronger margins will aid the business performance going forward, and this will be driven by the rapid sales velocity which is taking place, leading to an overall high capital efficiency for the business. Even if you look at the balance sheet positioning of the company, it is on its way to achieve net cash status, so because of which now Nuvama is bullish on the company. Just want to reiterate on some of the FY25 guidance numbers as well. If you look at in terms of the launches that the company has they've achieved 84% of their guidance. Pre-sales 10,000 crore is the mark that they've given. They've achieved 87% by the 9-month period itself. Collections and revenue recognition also remains on a healthier part. Ongoing projects, they expect this to be completed by the next 5 to 6 quarters as well. So a handful of factors in consideration, and Nuvama believes that the sales velocity is something that would drive the performance forward, and hence we are looking at a target price of 1,436.
Okay. Nuvama is excited about Signature Global. Sunny, I wonder if you agree, and real estate has been a bit in the doldrums. If you're going to be seeing some kind of a recovery, even though temporary, would you see real estate stocks at the top of the heap, and what about Signature Global specifically?
Yeah, so coming to real estate pack, yes, I think post-correction, a few companies as we have discussed earlier also, Macrotech developer, which is predominantly a Lodha, Mumbai-based player. That's the one company which we like because of this Palava city, increase in connectivity and value unlocking we have seen over there. Deleveraging, which is playing out again in Macrotech, that's the story. Another player from Mumbai, Suntech Realty, again a very strong set of pre-sales number. A similar story where we are seeing portfolio diversification in favor of rental asset 2-3 years down the line. So Suntech Realty is another company which we like. Brigade Enterprises from Bangalore market, again a very strong set of numbers that the company has reported during December quarter, is trading at reasonable valuation. Coming to Signature, yes, I think on a relative valuation basis, trading at a reasonable valuation. My only concern is that of late we have been hearing that Gurgaon as a market has hit up significantly, and any slowdown in terms of price appreciation or any correction in price can be one of the overhang as far as Signature Global is concerned.
Time for a short break. We'll be right back with the pre-open.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Welcome back. You're watching India Market Open. We're just a minute away from the pre-open rates, and you can expect perhaps another good start to the day. The question is, what happens next? Do you see selling pressure coming in clearly at higher levels? Sunny Agarwal and Kunal Rambia with us as those first rates kick in. You know, Kunal, I'm wondering whether you're looking at IT stocks favorably at all, because they haven't quite participated in the rally that we saw yesterday. Do you see some potential there or anything that you're picking up?
Absolutely. Again, this is the entire pack which has underperformed in last one and a half month time. But again, it's right near the support. If you look at the last 5 to 6 years trend, they are just on the support, and the risk reward ratio is extremely favorable. The counters which I like the most in this entire IT pack, the first is infra. With the support of 1500, one can initiate buy on this. But again, it might not pick up immediately because it's near the support. It might just get into consolidation, but offering very good favorable risk reward ratio. And the second is TCS. Again, with the stop of around 3400, one can start accumulating this counter too. If someone is looking at the short term trade, then I think one should avoid this because the formations will take time. But I think it's near the support, so good for long term investors.
So when you say long term, what is the range you're looking at? And stop losses?
At least a quarter.
So
and the support which I mentioned.
Okay.
Yes.
Okay. Meanwhile, what's buzzing is in entire BFSI, and we spoke about it shortly before the opening rates hits. Bajaj Finance 10% up. Listen, it's the first 1 minute, so take these numbers with a pinch of salt. They will settle. HDFC Bank looking promising this morning. IndusInd Bank showing a bounce over there at the valuations they currently are right now. Punjab National Bank also doing fairly well. So as a pack, the banks are looking interesting this morning. IRCON also buzzing. This was on our watch list. If you remember, there's an order they've got from the Meghalaya government. So these are some of the movers earlier this morning. You know, Sunny, let's just revisit Bajaj Finance very quickly. Of course, big news, the split with Allianz, a positive there coming in from brokerages as well. Do you see at the current levels an opportunity here?
Yes, I think definitely. I think again, holding company for a Bajaj Finance, which continue to do well. So if you look at the sum of the part valuation, the majority of the value is attributed to the Bajaj Finance, and on the top of that, the deal which they have struck with the Alliance is at a very reasonable valuation. So there is no overpricing which we have seen over there. So that again augurs well for the Bajaj Finance shareholder, as both the general as well as life insurance business continue to do well. So I think yes, positive. I believe the fair value of Bajaj Finance, again, I think it is trading close to that. So maybe 2050, which is in a pre-open trade, is currently showing. So I think the consensus value is also a fair value, is close to 2050. So that's the fair value.
Okay. So let's talk about a pack that we've not spoken about with you so far today, Sunny, but a few of these automakers finding interest purely because they've been drubbed, right? Of course, M&M recovering quite substantially from the low point, but Tata Motors still languishing around that 660 odd mark. If you were to buy one of these automakers, and why don't you throw in also the two-wheeler manufacturers as well, What looks attractive to you right now?
Alex, I think I would like to bet my money on Mahindra and Mahindra purely basis the data. The kind of volume growth we are seeing in SUV as well as tractor segment, farm equipment segment continue to be one of the best in the industry. And post correction, again, the stock is trading at a reasonable valuation. Although there has been the overhang of likely competition from likes of Tesla and BYD, but I think still the competition is still 2-3 years away when it comes to the large volume market. So I think Mahindra and Mahindra is the one company which we like within the auto OEM space. Another company which is a kind of play on tractor segment where we are more constructive is Escort. So Escort is another play which I would like to ride through for a tractor as an industry. And we are more constructive on auto ancillary name, a case in point Swaraj Engine, which is again a subsidiary of Mahindra and Mahindra. So we have seen recently they have expanded their diesel engine capacity from 135,000 units to 195,000 units. And it has came at a very right time where we are seeing a revival in volume growth as far as the tractor industry is concerned. So again, Swaraj Engine, where we believe the fair value is 3,800 rupees with investment horizon of 6 to 12 months. Few more auto amps name which are on our radar are basically Gabriel, Lumax Auto. So these are the few names. Coming to two-wheeler play, I think as of now within the two-wheeler play, I would like to be betting my money on Eicher. Although Eicher we are seeing a very good volume growth, but again they have followed a strategy of taking some hit as far as profitability is concerned and pushing more of a volume. So purely basis volume, Eicher Motor is will be my one of the top pick as well as two-wheeler industry.
Comprehensive view on the automotive pack, but let's get to the big brokerage call of the day, and this is from the same group that we've been talking about quite a bit this morning, and this is Bajaj Finance. Morgan Stanley has revised upwards its target for this particular stock to 9,300. Stock currently trading at about 8,620 or thereabouts. Harsh joining in to tell you what stands out to Morgan Stanley. Harsh?
Well, roughly a 10% upside, and you know what they're saying is there is one in particular positive catalyst on this one. It's been a rank outperformer, mind you. When you're looking at it over the last maybe 3 to 4 months, the kind of move on the stock versus the correction that we've seen on the Nifty as well as in the broader indices is telling, and therefore Morgan Stanley suggesting that there is a further catalyst, which is going to be Mr. Rajiv Jain, who's the current managing director and CEO at Bajaj Finance. He is likely to retire, or term is likely to end on the 31st of March. Going to likely get replaced by Anup Saha, who's the deputy CEO at this point. Now, in terms of what they believe is the key positive here, for a while now, the market has been pricing in some negativity with regard to where and what role will Mr. Rajiv Jain play in the larger Bajaj Finance group or FinServ group. And they list down 3 possibilities. One, he continues to remain with Bajaj Finance in more of an advisory role and maybe not a leadership role. Second, he will both play a part in Bajaj Finance as well as FinServ. And third, he will only play a part in Bajaj FinServ's growth going forward. Bajaj FinServ being the holding company. Now, in terms of these 3 possibilities, the first 2, where he plays some role in Bajaj Finance, will be viewed positively by the street, is what Morgan Stanley is saying. They are looking at this positively from a perspective that there is a good likelihood, basis the Q3 conference call, that Rajiv Jain will play a role in Bajaj Finance in some form or shape, whether he plays a role in Bajaj FinServ or otherwise. The key negative here could be that he only plays a role in Bajaj FinServ and not Bajaj Finance. Now, in terms of valuations, and this is where it starts to get interesting, the trailing 12 months FY24 price to book is 5.8 times, FY25 is 5.5 times, and FY26 is 4.5 times on a Bajaj Finance.
Yep. Okay. And thanks for that, Harsh. And it's something that we spoke to our experts as well. I think Kunal Rambia actually has a buy call on Bajaj Finance as well. So that's to be watched out for. By the way, the 8 minutes have settled. I wonder what else is doing well. So I'll tell you a few names, by the way, you should keep on your mind. I wonder if Godrej Consumer is doing well or no, should pull up. Nifty is at 22662, so not quite at 700. Let's see if it's selling there. GCPL, 1% higher. Ercon is up 4%, 1,000 crore order win in a JV. Ercon only has 26% stake in that JV, so bear that in mind. There is strength in PVR Inox. There is a Nuvama note today, that's up 2%. Aditya Birla Real Estate makes a foray into Pune with a luxury housing project. That stock is up about 2%. So keep an eye out for that one as well. Some price revisions, if I'm not wrong, in certain metals. NMDC is up about 1.5%. So do keep an eye out for that stock as well. Kunal, 2 or 3 stocks in an otherwise very muted market looking like starting off well. So Ercon, PVR, Aditya Birla Real Estate. Do you like any of these?
So I was just looking at the Aditya Birla Real Estate. I think that's looking good to me. The only reason being the weekly chart is still positive and it's consolidating near the support level of 1750 to 1800 kind of levels. Right now, in spite of this gap of opening, it's at 1800 itself, right? So if it remains near these levels and if we see uptick in next 1 or 2 days, then I think with the recent bottom as the stop, one can initiate buy, that's 1725 and the targets can be 2200. But again, I will not be a keen buyer on any of these gap ups today because the trend, even on the intermediate trend on these counters is negative. So we'll wait for a day or two.
Okay. No, Castrol is the other one. Just wanted to mark, Alex, 3% lower. I don't know if there's some dividend action or something, but it's down 3% if I'm not wrong.
Yeah, NMDC also seemingly dividend action, right? Interim dividend announced yesterday. The record date is 21st. Just wondering if the stock is reacting on account of that. Sunny, early on in the week and last week as well, we've spoken about some of these metal counters. Would you be a buyer? And a relatively quick answer here.
Yes, I think within Metal Pack, I would like to bet my money on companies like Shyam Metallic, which is a kind of integrated player. We have recently seen the capacity expansion going on, so that's on the ferrous side. On non-ferrous side, we continue to remain bullish on Hindalco. Again, basis the kind of stability we have seen in the aluminium prices and likely recovery in global demand environment as far as aluminium is concerned. Coming to mining side, MOIL is the one stock which I would like to bet my money on. Manganese Ore India Limited. Basically, it's a proxy play on stainless steel consumption in India. So manganese is blended, is used as one of the key mineral while manufacturing stainless steel, and that's a predominantly a stainless steel play. So again, trading at a very reasonable valuation. We have seen a very good sales volume of late, and at the same time, they have taken price hikes also. So MOIL and on a coal side, Coal India trading at a very reasonable valuation. Offer a very good risk reward at a current juncture where dividend yield is more than 4%, 6 to 7 times price to earning multiple. So I think Coal India is a decent bet.
Quick view on Nifty Bank. Signs are that it's strength in the financials that we're looking at, close to 1% or so for the Nifty Bank at this point. Key levels to watch?
So it's a 48,900 to 49,000 as a strong resistance. Any uptick above that can trigger the positive of the sideways consolidation of 15 days. So yeah, this is a welcome move, but again, not a keen buyer at this level.
Okay, and ICICI Bank you said would be a buy for you, but would this also be a sell on rise strategy, or are you buying consistently on the upside?
So again, it's a range bound counter. The strong support is at 1235, 1240 and the resistance is at 1340. So it's a range bound trade, comfortable buying even in this gap up opening.
Okay, and Kunal, I'm wondering if you have any view on Hindustan Aeronautics. I thought it was an interesting move in the pre-open session. I was in the news yesterday because of a cyber fraud, and you know this is noteworthy. They transferred 55 lakh rupees to what they thought was a supplier, someone who just made up an email ID and scammed them. But nevertheless, there were statements, etc. Talk about 2% up in the pre-open session. On charts, are you liking Hindustan Aeronautics? Much ignored for some time.
Absolutely. The first, I remember we had discussed about this near 3,200 where the absolute trend was strong, and on the weekly charts, it has bounced right from that level. For now, the trailing stop loss is at 3,400. So if anyone is willing to initiate new trades with the stop of 3,375, one can certainly buy on this. and the upside can be 3800 to 3850, and above that again we keep trailing the stop loss and hold the position. I think the overall trend is still positive.
You know, it can happen to the best of us, but thankfully, I'm talking about the scams, right? Because I mean, I got a message just 15 minutes back, and luckily my telecom operator is saying it's a suspected scam, so it's coming with those tags.
Slightly different for
for a big company,
Aeronautics, who thought it was their supplier, who not. Okay, pre-open session has closed. Any top picks, Kunal? Anything that you're liking at this point?
So two counters, again, we discussed about it, but still, first is Kaveri Seed. I think at 11.25, this counter is looking very attractive to me. Yesterday, it was up in trade by around 7-8%. I think the trend is likely to continue. So the targets can be 1300 with the stop of 1100. And the second is Adani Green. I think this is again gap of opening. So with the stop of 1870, one can trail the stop loss and hold. I think 1025 can be the good level to watch out as the profit booking zone.
Okay, I just want to, a very quick one, Kunal. 30 seconds. If Manappuram Finance starts off slightly higher, can the stock do more?
Absolutely. It's a range-bound consolidation breakout counter. So with the stop of 206, one can initiate by the first resistance can be the target. That's 225, above that 230.
The whisper number viewers on the street, or the whisper on the street, is that maybe there could be a placement of sorts. Maybe it could be between 235 to 250. So bear that in mind if you're trading Manappuram Finance as well. But could be an interesting one. Fundraise that. We don't have any other official details from there. But like I said, multiple media houses have done multiple stories on this. So all of those possibilities exist, or at least one of those definitely exists. But here's how the markets are starting off this Tuesday morning. What's the quantum of green? About 144 odd points, 22636. We are not at the upper end of the range that was being spoken about, but still not a bad start. Banks participating too. IT, let's see what it is doing. Well, a sedate start relative to the indices, but in the green, which is not bad. Mid caps 0.5%, small caps 0.7%. Okay, so not a bad start. Let's get the heat map up on the screen. Lot of green, very little red. The top loser is HCL Tech, less than 0.5% lower. What's gaining? Hindalco up 1.5%. ICICI Bank up about 1%. Bajaj Finserv is up about 1%. So nothing dramatic, but up about 1% nevertheless. There is Mahindra and Mahindra, which closed about 2.5% up yesterday, up another 0.8% today. So that is doing well. L&T, Bajaj Finserv, HDFC Bank, iShares, Tata Motors is the other one. Reliance is in the green as well, so that might be helping as well. And it doesn't seem like it's buckling down in a hurry for now, so it's kind of staying 0.5% higher. Not too many losers is the key thing, but the hero of the morning, you have to argue, is ICICI Bank. That's the heavyweight stock, which is up about 1.65%.
Excited to see what's happening with the Bank Nifty, because it's all about financials this morning. Look at ICICI, Axis, Shriram Finance, all making it to the top row. But let's look at what the broader indices are doing. All right, there's the Bank Nifty, nearly 1% up in the early morning trade. So that's looking promising. Let's look at mid-cap stocks, even better, over 0.5% up on the mid-cap 150. And this is important. We have to see if the broader markets are participating. And small-cap 250 looks good this morning. Let's pull up the sectoral heat map for you and just give you a sense of how markets are moving overall. This is a nice screen. This is a nice screen, second day in a row. Will it sustain? Seems likely from the initial indicators that we're getting. Only the Nifty IT 0.25% down as an index in the red. Everything else in the green, including the VIX. But nothing alarming really happening there. Realty stocks looking interesting. Metal stocks looking interesting. Let's go to specific stocks that are on our radar this morning and pull those up. I'm going to pull up Bajaj Finserv and Bajaj Holdings, because that's of course what has been in focus after that split from Alliance. Now I find this interesting. Finserv dipping into the red by Bajaj Holdings, the holding company, about 0.5% up. Now the news is being seen as a positive. They're of course spending to split with Alliance. Alliance comes out with a statement this morning saying that they are very much here in India and will increase their presence. Word on the street is that there could be a new partner that they're hunting with. So a mixed bag over there, I would say, not the runaway that one would expect. Ircon is interesting. 285 crore order from the Meghalaya government government, I think it's going to be the stock of the morning, 7% up on that order win boost. PVR, I thought the view from Nuvama was quite interesting. Target price has been set at a good number over there of 1765, and robust target price nearly 3% up on Nuvama. Manappuram, we've been talking about the board meeting for a fundraise is set on Thursday. All right, a muted start, but in the green, 1.5% there. Morpen Labs is the other one that we've been tracking. So was Shilpa Medicare. If you can pull up Shilpa Medicare, that would be great as well. But Morpen has a new drug launch, about 6% up. It's a diabetes, heart failure, and chronic kidney disease drug that has been launched. Shilpa Medicare has tied up for a cancer therapy. That's also about 1% up right now. We saw rights. The current order is revised from 5.4 million to 10.8 million, a big upward revision there, about 2.5% up on the stock. And Bazaar Style, because of that JM Financial upside that has been initiated, about 3.5% up on JM on the JM Financial note is what we're seeing with Bazaar Style. But I would say Ircon is the interesting story this morning after not such a massive deal win either.
Certainly up as much as 7%. A few interesting moves in the broader end. I must point out on the Nifty 500, you have 453 advances, so the breadth looks very strong, as you can see on the screen as well. But on the losing end, a couple of names stand out. You have Castrol, which we pointed out earlier in the pre-open. It's losing about 6%. I'd be curious about what Kunal has to say about this one. And interestingly, Hitachi Energy is also losing about 5% or so. By the way, LG Equipment, which we spoke about yesterday, which was doing quite well at the start, is losing about 3% or so today. KPIT Tech also losing about 2.5% or so. But let's talk about a couple of those big movers on the downside, right? Kunal, if you can speak about both Hitachi Energy, which is now one of the biggest losers, down about 5.7%, and Castrol, which is also losing about 5.8%. What's happening here?
Yeah, Alex, on the Hitachi chart, what I can see is the counter is in sideways consolidation since almost a year now. And the broader range on this is approximately 13,500 on the upside and 11,000 on the lower side. It's right now in between. So it's difficult for the trend follower to comment on this. But yeah, I think on the downside, one can expect the levels of around 11,300 for now. And Castrol, again, I was just looking at it. Again, very short-term trend is positive. Counter has a support near 215. I think that can be the potential target for now.
Okay. So, Sunny, any opinions here? I know we've spoken consistently about stocks like Hitachi Energy, but if you see a downtick of as much as 6% on a day like today, would you see that as an opportunity?
Yeah, coming to Hitachi, yes, definitely. I think the way power transmission network expansion is going on across the India and the opportunity and the order book on which the company is sitting, definitely we continue to remain constructive on Hitachi Energy. I don't know is there any specific development which has happened today which has led to this downtick. But again, what I believe is that the fair value of Hitachi is close to 13,000, 13,500. So keeping that price target in mind, one can approach this stock. And coming to your earlier question to Kunal on Castrol, so just would like to alert that today there is an ex-date for dividend, so 9.5 rupees dividend, including a dividend of 4.5 rupees. So I think because of that adjustment, the stock might be trading ex-dividend today.
Okay.
Kunal, I'm wondering what you're making of the Ircon move. At this point, would you, book some profit here if you had the opportunity, if you were a trader stuck in the stock?
Honestly, it's not even a proper sideways consolidation on this chart, right? So 18 Feb, the counter was near to 150 itself and it's back to 145. So it's still sideways consolidating counter. I really doubt if anyone would even get the costing out of this counter for now. But the levels which I'm watching out on the chart can be 155. Above that, probably we can see a good relief rally starting. But for now, I think there's nothing on the chart to book out or even to create new position.
Ircon. Is that the view?
Yeah.
Okay. What about a PVR Inox? Now about nearly 4% up on that Nuvama note on PVR Inox, which says Feb was a bumper month. Now that's interesting because this is a business that has been down and out for a while and is about 4% up right now. I'll come to Sunny on it as well, but first let me get your view, Kunal.
So again, this counter has not done much in last 10 years. Just look at the historical data, 900 to 1700. That was a range. Again, this time it has bounced right from the levels of 900 itself. It's still sideways consolidating. The earliest possible breakout on the chart can be 955 to 960. Above that, it can certainly be a good short-term trade with the target of 1075. But for now, again, it's an avoid.
What about you, Sunny? Tough business, frankly, but then on the other side, there's a complete monopoly. Whoever is left to go to the cinema hall, then they have to go to one of their theaters.
Yeah, definitely. I think a monopolistic kind of business. But again, the problem with this kind of business is that the consistency at which the good content used to be enjoyed by the public in the theater, that has reduced significantly. So you usually see a one or two movie garnering a good box office collection, and that leads to the footfall for players like PVR. But again, the consistency is something which is missing in this business, and post their acquisition of the one of the large player in the South Indian market, South-based market, we have seen that even balance sheet has become slightly stretched post that acquisition, and that is also leading to losses at PAT level. So I think at the current juncture, I would like to stay away from the company, as there are many other businesses which are available within the consumption space where the certainty in terms of earning growth is pretty high as compared to the PBR.
Let's pull up the Nifty Bank, and we've been speaking about it all morning, and in fact let's pull up the constituents of the Nifty Bank while we're at it. Close to 1% and holding, very close to that 48,800 mark, and it's a pretty screen there, because ICICI Bank, and Neeraj pointed this out at the start, was the heavyweight counter that was doing particularly well. It is now built on those gains, and it is now trading with gains of about 2.2%. Let's see if that holds through the rest of the session. But Axis Bank, the stepbrother treatment, I guess, has happened over the course of the last couple of quarters at the very least. Sunny, we don't speak about this bank very often. We speak about Kotak, we speak about HDFC Bank, ICICI Bank. Axis, would you buy?
Yes, at least from a valuation perspective, it looks that the risk reward is favorable in the Axis Bank. And again, our fair value for Axis Bank, if somebody has got an investment horizon of 18 months to 24 months, is 1,300 rupees. So if I compare this with the other banks, obviously the performance on a relative basis has been relatively on a weaker footing, at least for the last 9 months or recently concluded December quarter. But again, looking at a very reasonable valuation, I feel the downside is very limited in Axis Bank. And we believe that as the quarter progresses for the upcoming year, the bank is well placed to deliver a kind of 12 to 13% kind of credit growth. So yes, continue to remain one of the pick where the downside risk is limited. But if I have to pick my choose a stock from a banking sector within the private sector, I think at the current juncture, ICICI Bank and Kotak will be leading that rate.
Okay. Fair call, but some good moves today for some of those select banks. So I'm presuming you finished your point, but I have a question on Varun Beverages, and I wonder what that stock is doing today, because yesterday it was top idea for a lot of people. As a summer play, DAM Capital today has a note. They've maintained a buy. The target price is 670. Is there a trade here, Kunal? First, let's talk about that on Varun Beverages.
So Neeraj, by this counter was in downtrend from 2nd January. It made a high of 660, and post that we saw the levels of 420. It has bounced from the extreme support level, but right now it is right down from the resistance level of 525. Upside, if at all, can be till 600, but it's only above 525. So this is the time I think one should remain cautious. And if someone has already initiated a buy near the support levels earlier, this is the time to book out the profits.
Sunny Agarwal, quick 60 seconds. Would you go out and invest in a Varun Beverages or any other summer play?
Yes, Neeraj, again, Varun continue to be again a proxy play on Pepsi portfolio and continue to remain our top pick. So of late, there has been a concern that one large player, Reliance Group, has entered into this segment through the Campa as a brand, and there is a price war which is going on in this segment. But I believe this business is all about distribution and the kind of distribution network which Varun has built over the last few years. It's definitely unmatched, and it will take some time for a new player to create a dent in the market. So I think we continue to remain bullish on Varun, and our fair value for Varun is 650 rupees with investment horizon of 2 years.
So what's the target, Sunny? What is it that you said?
650, 650.
650 over 2 years.
Yeah.
So you are comfortable buying a stock which will make you 30% over 2 years. Yes. Clearly, the market returns are now being moderated. Yeah, interesting. Okay, fair call. Okay, great. This is good. Okay, Sunny, Kunal, thank you so much for joining us and giving us your insights today. Really appreciate your time. And guys, this could be, I mean, this prompts into thinking, right? 2023 and 24. If people were told this stock will double in 3 years' time, people are like, what the hell? I'm out of my zone. Now people are talking about 30% in 2 years. There's a difference.
I think right now people will take 30% in 2 years and say, okay, as long as I don't have capital erosion, I'm fine. Right now it's about, keeping your portfolio from getting hammered too much. And I suppose that's part of the conversation that you had with Vikas Khemani, Neeraj. Why don't you set it up?
Yeah, I mean, so it's interesting. It's a part of, I mean, it's a conversation that we are having with almost every guest these days, that is the market reaching a bottom? But on Talking Point Unfiltered, we try to have a more light and a candid conversation around what is it that the current market throws up in terms of opportunities? Are there lessons from the past that could work for the future in the current times? And to people like Vikas Khemani, who are self-proclaimed patriots as well, we ask them whether पैसा पैसे का काम कर रहा है या patriotism cover कर रहा है उसको. So that's something that we've asked him as well. But here's he talking in a fairly unfiltered manner about a lot of things, including the current market environment.
If you sort of take your time horizon longer, 20 years you've seen it multiple times. But I think this kind of correction we've not seen for at least last 2-3 years. The only period again which reminds we forget very often is that 22 was also similar period. 21 was a great year, and Nifty had touched almost 18,500, and then Ukraine war had started. And if that time every day, geopolitical, inflation, oil price, and I'm sure, with the initial reaction that 2 weeks war will be over, and then it kept getting extended, and most people ended up giving up. And that, by the way, the first half of 22 was very rough. So time and again, these kind of situations come. I feel that these are not, reasons will come, but these are, in my opinion, natural cleansing process, correction process, whatever you want to call it, or bringing down to the levels or normalization process. Every 2-3 years, you see some sort of correction. Now, whether it will degenerate into a big one or not, that only time can tell you, because given the fact that there are uncertainties around Mr. Trump and all what he does, who knows? But my own view is that I think this is not a big one. I think it'll probably, settle somewhere here. Like Ukraine war looked very big. In fact, I remember some point in time people started talking about it can lead to world war kind of thing. I mean, there were all kind of conversation was happening, right? So in the negative times, people tend to pronounce or, extrapolate more negativity. In positive time, positivity is more pronounced. And that is the normal human psychology of moving between fear and euphoria, and that's what it is.
Yeah, I mean, the sentiment was very low, right? Somebody from Nuvama was pointing out that some 86% of the stocks below some 200-day moving average, etc., not seen such times. But is this because of growth issues in India as well, or is this got to do with tariff tantrum? Because I was talking to we had a conclave and I was talking to Rhythm Desai and I was asking him, FIs वापस कब आएंगे? 5 straight months of incessant outflows, right? And he was saying that his view was that this is a growth issue of India, which will resolve itself once growth come back. And then, sorry to extend this question, but my mind took me back to a clip of yours, जो बहुत viral हुआ था, जहाँ पे you spent 5 minutes explaining how India is almost like a Teflon coating. कि CAD हो गया ठीक, growth ठीक है, politics ठीक है, कहाँ पे और ये सब combination है, and therefore we will probably not see too many tumultuous periods. Do you still stick by that?
No, absolutely. The point I made that point in time was there are no structural issues in India.
Right, agree.
There are no, I didn't say that growth will not temporarily slow down, right?
Yeah.
There are no structural issue. Our big structural issue comes from current account deficit, fiscal deficit, weak banking system, inability to manage inflation, excessive leverage. None of them are there right now today in economy, and we think they are addressed also in a reasonable good way. But there will be along the way journey, like why to growth slow down. If you see last year, RBI had tightened liquidity in the system beyond measure in order to defend rupee. RBI sucked out liquidity, and we were, for a large part of the year, we were running 3.5 lakhs rupees kind of negative systemic deficit. And then we had that clampdown on the unsecured loan, and it got coupled with governments because of elections, slowdown in the government spending, release of payment by the government. So you have suddenly, in a very short period of 2 quarters, you had squeeze on the liquidity. And liquidity is like blood in the body. If you squeeze blood out, obviously you will feel weak. So that played in the corporate earnings with 2 quarters of lag. Now, if you fast forward today, if you see both policies are pivoted, right? RBI is now pumping liquidity back into the system. They have, stopped defending rupee beyond requirements. Unsecured loan weightage has gone down. NBFC weightage is down. RBI has put more accommodative stance. Government has started spending. Government's, the release of the increase of tax limit of 12 lakhs rupees is a very big measure. So I think if you see, all those things will start impacting with a 2 quarters lag.
Okay.
So both ways it does same way, right? So I believe that growth story will get addressed more or less in a quarter or two. I think 15-16% earning growth of India is not in question according to me. It's not.
You don't think that's FY26? You think 15% growth might happen?
I think so. I don't see much risk to that.
Okay, just one quick follow up there, right? A lot of people said that chalo December se.
And remember this conversation and play that video in 26.
Agree completely. No. But hence the idea of talking to you, right? Because somehow in a lot of your tweets or our conversations that we have, right? You have this deep passion for the country itself. It comes out in your tweets per se. And therefore I try to corroborate that कि भाई आपका passion for India, is it coming in the way of your judgment about earnings?
इतना है कि खाली patriotism है. एक पूछ रहे हो ना भाई. See, पैसा patriotism से नहीं बनता है. Right? Of course, I am a patriotic. I am a hugely nationalist at the core. But also, I run family, I run business. I have clients to address. So, never confuse two things beyond a point. Right? I might be patriotic. I am patriotic. I am nationalist. But money will not be made by that. My business will not survive on that. So I have to do justice to what I do, right? So let's never confuse on that.
No, in a good way, I'm saying that I believe that I'm a shark, you are a bigger shark. In a good way, I'm saying that. It's a compliment.
Absolutely fine.
From a market's perspective, it's a compliment. So, theek hai. Okay. So, just a quick word. I know you look at long term now in a big way. In the last 5-6 years, you look at very long structural stories. But just to focus on the short term, there's a lot of question marks around growth. Quarter 2 ke end mein. Even quarter 3, 6.2, okay, nothing too great. But capex rebound a little bit in December, government capex, etc. Jan conversation was okay. In your conversations with your private investee companies or your fund investee companies, do you sense that the optimism is back, whether on capex or on growth or on both?
No, see, it is not a switch, it's a dial, right? Like it changed other way around last year, like I said, everything moves with a 2 quarter gap. Okay. See, liquidity ka answer is nothing, but liquidity. It's like,
That's true.
Right? So, like we took out last year, why the interest rate went up? RBI did not increase interest because there was no liquidity in the system. Deposit growth was not happening for the banks, right? Today, with 12 lakhs rupees minimum, no tax, your post-tax returns become 8.5%, which is a great money for very wide middle class. So you will start seeing deposit flow back. So I think these pivots we are ignoring. These pivots both on the liquidity, a dovish commentary by regulator clearly tells you that we have shifted from risks to growth. Government is clearly moving to growth. So I think all those things like I said, it's not a switch, it's dial. So as you will start seeing people, and people feel more with numbers. As numbers come out, as markets do well, we will feel more and more confident. It is a human psychology.
Yeah, that's true. Actually, 2 days ago, Vikas, I put out a tweet as well, wherein I said that when this tide eventually turns and people look back, people will realize what a crucial role the Reserve Bank of India has played in the last month and a half, right? The measures that they've taken, not too many people anticipated it. People were talking about it, but not many people anticipated one after the other kind of moves that they've done. Pretty strong, right?
In a good bull market, and if the sentiments were good, this would be cheered beyond measure. In a bad sentiment, markets have ignored it. That's a beauty that is giving you opportunity to buy in a great developments and giving the right price to buy. But markets are saying, okay, big deal. But if you understand the meaning of these macro changes, these pivots tend to, people will say, okay, pivots kiya, but what happened? Nothing has improved. It does not happen automatically, immediately. It takes 2 quarters lag. So it will happen.
It will happen. Okay.
Unless something goes wrong globally and, which is, some major chaos happen. Big risk comes from obviously right now from US that we do not know.
Yeah. Are you worried about the tariffs and the impact it could have on selective growth or sectoral specific growth?
See, sectoral can happen. We don't know. You don't know. But see, a big thing about here is that if Trump is going to put tariffs on everybody, then everybody is at par. But I think the real battle US has is with China, not with India. India is either a collateral damage or it probably politically he has to keep making noise so that he does not seem to be favoring India. In my opinion, I think India will come out a better way because see, there will be some deal made. You import LNG, we will do this, and India anyway has to import energy. So I'm sure there will be some deal made. In next 2-3 months, it will all settle down. I don't think given India-US relationship strategic importance and given the US and China, how China has reacted to this, there's no easy answer to that. So I don't think net India will be major negatively impacted. But, some sectoral here and there can happen, who knows?
The whole conversation will play out a bit later on in the week. But he's spoken about a lot of stocks. He believes, or spoken about a lot of themes. Also believes that this is the opportunity to buy, and if the couple of quarters of a lag, things will start showing up. The standout line for me: this is not a switch; it's a dial, and we'll dial back to growth. Okay, let's move on. A company in focus is Glenmark Pharma. After launching a drug to treat type 2 diabetes, we spoke to company's president and head of India formulations business, Alok Malik. What's the market size of this new drug and how will it contribute to their India business? Listen in.
So empagliflozin is a kind of a drug of SGLT2 category, and the overall SGLT2 category is roughly around 25% of the overall diabetes market. And it's a fast growing category because the mechanism of the drug or the category provides good benefit to the diabetes patient along with other drugs. Currently, it is to be seen how big the market share it will be able to take. But going by the past experiences or so, it is quite likely that it will rapidly grow and will take a substantial market share of the overall 20,000 crore market of diabetes segment in India.
Got it. Also, Mr. Malik, now because this innovator product, this is going off patent, and many companies are actually coming out, or launching the generic version of this product, including you. Just wanted to know what will be the cost per tablet when it comes to Glenmark Pharmaceuticals, because I believe companies are actually giving 70 to 80% of, they are coming with at a reduction in prices which is in the range of 70 to 80%. What will be the cost of per tablet when it comes to your company?
So right, you're right that the prices are getting reduced almost by 70-80%, or maybe to simplify a little bit more, almost 1/10 of the innovator price or so. By and large, we'll be in a very affordable category range of around 10 to 12% or so per tablet. Because there are various different strengths and the combinations are there. It will be a very affordable pricing point for the Indian consumer as far as our brand is concerned.
Got it. Okay. Also, just wanted to have a, not the exact number, but the ballpark range, if you can give us. What is the revenue expectations when it comes to this product? What percentage of overall revenue will this product will contribute?
So I think it would be difficult to estimate at this point of time, because as you also mentioned that there will be several competitors getting into this because of the LOE. But we being a strong player in entire cardiometabolic space, like in cardiology itself, we are a fifth rank organization, we are likely to grab a substantial share of this market, which we are already present into it as far as the diabetes is concerned. And as far as the SGLT2 and DPP4 category is concerned, in which this molecule will operate in, we already have a good presence into this category. So we are quite hopeful that we'll be doing very well. We'll be amongst top 3 or 4 players in this category.
And when can you see the revenue from this product? In which quarter? I mean, can we see from Q4 itself?
So the LOE has happened yesterday. So from today, the launch is taking place, but the major impact will come in the Q1 of the following financial year.
Okay, so Q1 of FY26, where you can see the major contribution from this product.
Absolutely.
Got it. Now coming to your, India business. In Q3, you did see a slowdown in India business because of the respiratory segment, which all pharmaceutical companies were going through. Now, how are the things going out there? Because you have already we are already in March. So have you seen some improvement when it comes to your respiratory segment?
So I think respiratory or acute segment overall in general for the industry has slowed down this year. For whatever the reasons, whether it is environmental reasons, seasonal reasons or so. We being a strong player in the respiratory segment, number 2 ranked into this. So accordingly, there was a proportionate impact. But let me tell you that on a YTD basis, February basis, we are growing almost 1.5x of the market. And not only on a YTD basis, but even in Q3 also, compared to the market, Glenmark has grown almost 1.5x of that. So we continue to remain a fast-growing organization. On a YTD basis, we are the second fastest growing, and we continue to outperform the market this year as well as in the following year. That's what the outlook I clearly see it.
Got it. Also, so your India business contributes almost 31%, 32% to the overall revenue. Now, what are your targets there when it comes to growth? Where you want to take this contribution to, number 1, and number 2, what kind of growth targets have you set for your India business? Because I think you have given a target that you want to have a run rate of almost 1100 crore per quarter when it comes to India business. So when we can see that number coming into picture?
So as I mentioned that we are currently growing at almost 1.5x of the market, and our long range plan is that we continue to grow in the range of 1.5x to 2x of the market. So obviously something will depend also upon how the market pans out, but this is currently the long range plan that will continue to grow and outpace the market in FY26 as well as in the next 3 to 4 years period of time, and for which we are quite focused on into key therapy areas, whether it is cardiometabolic, where in cardiology itself we are in between 3rd to 5th rank most of the time. In respiratory we are number 2 rank. In dermatology we are number 2 rank. Diabetes we are entering into with newer molecule categories, including the GLP-1. Last year also we launched the GLP-1 liraglutide as Lirafit, which has done extremely well. We are also working on quite a few more GLP-1 in the coming years. In addition to that, oncology is another big space where we are working on certain innovative products to be launched in the Q1 and Q2 of next year. So our growth aspirations and the growth prospects are quite robust in relation to the market, and you will see that we continue to outperform the market in the next few quarters to come in.
On that GLP-1 category, Mr. Malik, so what's the update there? So last year you did launch liraglutide, but you have semaglutide also into the picture. And so what are the products that are in pipeline when it comes to GLP-1 opportunity?
So I think the overall landscape of GLP-1 is quite bigger, You can easily say that there are 20 to 25 molecules globally, which are appear to getting launched in the next few years. They are in different phases of their regulatory requirement. Semaglutide, obviously, because the LOE is expected to happen next year in the month of March or so in 2026, will be the first, the second biggest one after liraglutide, I would say. But also that will have its own play in multiple indications. But subsequently, in the next 4 or 5 years, there will be a lot of other GLP-1 also getting into this space, is the regulatory approvals at the global level as well as at the India level or so. So the outlook for GLP-1 in the diabetes space is going to be very active and quite positive, because these class of drugs will be quite helpful in the treatment of diabetes and the associated other conditions like obesity and cardiovascular conditions, etc.
Understood. Mr. Malik, now, so every company has a next leg of growth wherein that one thing takes company into the growth track, I would say. So for Glenmark, when it comes to your India business, what is that next leg of growth that your company can see going forward in the next 2 to 3 years?
So, see, we as an organization, we are constantly focused on few therapy areas. As I mentioned, dermatology, cardiology, respiratory, as well as the diabetes for that matter, and now getting into oncology. So we continue to focus on our chosen therapy areas. We intend to go more deeper into this. We also intend to work onto the innovative space in some of the chosen therapy area, whether it is oncology for that matter, or diabetes, or even in case of dermatology. We have done some interesting tie-ups last year, for example, in dermatology with Pfizer in a very interesting molecule in atopic dermatitis like abrocitinib. Such innovative alliances we intend to do in the next few years. We also have good focus on our consumer business, which is growing quite well. And in addition to that, respiratory, particularly the chronic respiratory, will be an important focus areas for us to grow in the next few years.
Okay, so that's the conversation and the word coming in from Glenmark Pharma. But let's quickly switch focus. PB Fintech is in focus, and we're going to be joined by Yashish Dahiya, who's the CEO and co-founder at PB Fintech. Largely reasoning, they're going to be investing nearly 700 crore through the company for a 33.6% stake in PB Healthcare, which is their healthcare arm, which is going to be doing hospitals in the simplest of terms. Yashish Dahiya, who's going to be investing 87 crore for a 4.2% stake. Co-founder Alok Bansal, 43.5 crore for a 2.1% stake, totaling 829 crore for a 40% stake. Balance 60 is going to be held by investors. But let me quickly go across to Yashish. Yashish, let me start off by understanding how the model is going to work from you. Talk to us about how it's going to be. What are you going to invest in? Greenfield, brownfield? How are you going to execute this healthcare startup?
It's a combination. While a network is being created, what is called a narrow network. See, the wider your network, the less is your ability to control the experience. So what happens is when you buy insurance, you get a coverage of 7,000, 14,000 hospitals, which is actually doesn't make a lot of sense because that's not as relevant to you. But what now happens is a narrow network is created, a narrow network of maybe 400 hospitals. So only those 400 hospitals belong to that network. And in those 400 hospitals, you are able to give a better experience. Now, and you have the general practitioner who's advising the customer on which of these hospitals they should go to. Customer does have choice. They may have a choice of 2-3 hospitals, but it's not unlimited choice, right? And next, what happens is in some of the hospitals, you set up essentially what you call demo units or demo performance units, where you integrate technology a lot more and you control the customer experience a lot more. And you see if because of that, you can get better customer outcomes, better customer experiences, and even more control over costs than through just simple partnering with a narrow network. So I would say out of the 200 or the 400 hospitals, maybe 1 or 2% will be owned hospitals on day one, and they will most likely be greenfield. A combination of greenfield to brownfield will be there.
Give us more perspective on this, Yashish. Will this be specific to only PB Fintech customers? Will it be wider? Will the participation be wider? Give us that perspective.
So operationally, this venture has nothing to do with PB Fintech. They are available for the insurance. See, the policies belong to the insurance company, and for the insurance company to make it available on its entire network of distributors and its own website. So I don't think PB Fintech is in any way, shape or form an exclusive distributor of this.
Okay, that's interesting. You know, the management team of PB Fintech, along with PB Fintech, will be largely owning 40%. Who's investing the balance 60? And how much? And what's your role going to be versus their role?
The remaining 60% will be held by other investors, other financial investors. We are not at liberty to mention them right now, simply because we are under confidentiality agreements. And I think once they are done, once the ballot happens, once the postal ballot happens, about 90 days post that, the entire transaction, including the phase 1 and phase 2 of investors, would become public, and or at least would be known. And all I can say is they are very high quality investors, people who understand the healthcare industry a lot better than we, as in PB Fintech, does. In fact, immensely more. People who have international operations of doing exactly the same thing, of building HMOs for the insurance industry, etc. So yeah, I think people should be quite glad to see who the partners are once they come on board. And also they have a longer term view on this than even PB Fintech does. So PB Fintech is a catalyst, an enabler, but is not the eventual owner of this facility. The eventual owner of the facilities are probably those people, not PB Fintech. PB Fintech incubated the idea and essentially catalyzed it into happening, and is getting some equity through cash for that, and for kind of enabling it. But beyond that, I don't think PB Fintech is the one that's the owner of this entity long term.
Very interesting. And what are the timelines like for this, Yashish? How quickly do you set the ball rolling?
I would hope that the network and the facilities should be live by about December. So our operations, our offering of PB Health should be live by December is my plan and hope.
And you know, you've set this up with a 40% odd stake, all of y'all combined, 800 odd crore invested likely. What more will this venture require in terms of investment from PB Fintech in particular?
Absolutely, the current investment is more than capable of handling that. In fact, we have some buffer in that, and we have to understand why these facilities are there. They are their demo units. They are to prove how good the experience can be, so that the remaining 200 or 400 can be brought onto the same experience level, whether it is through a technology a franchise model, O&M model, or whether it is through outright ownership at some point. But the whole, or through equity partnership at some point, JV, equity partnership, outright ownership, all kinds of options. But the idea is first to know that the model actually works, that it is able to give better customer experience, it is able to reduce cost, and it's able to create a profit for the entity. If all of those are true, I don't see why other hospitals would not want to adopt it. And I guess within the narrow network, we would then make sure that the same technology experience, data analytics flows through. The whole idea is this is going to be big in time to come in terms of analytics and in terms of tech. But today, people are not able to see that. People are seeing only the infrastructure part. Please appreciate, we have no interest in owning real estate and owning infrastructure. I think our whole game is the soft tech behind hospital experience. And, you know, I could be standing outside. You could say, why not partner? I can keep standing outside a large hospital and never get access to build their tech or their experience for the next 10 years. I might as well do it rather than wait outside the gate of the hospital.
Okay. And give us perspective. Is there a target return ratio in mind? What's the payback period for the investment going to be like? How does PB Fintech think of this?
See, if you think about it, the investors are a combination of strategic, financial, and so the financial investors have certainly done their math around that. And I would leave it to them. I don't think PB Fintech by itself is going in as a financial investor. It is going in as a strategic investor. PB Fintech counts its benefit in the benefit PB Fintech can derive from this operation happening. And actually, so do me and Alok. We see the value of this actually flowing to the PB Fintech side. So I think the financial investors are making that decision. And it's for them to, consider how they think about their returns. Like I'm sure when people invested in Policy Bazaar in the early days, a lot of people laughed at them. But some of them have made 100x of what they invested. So it's not a bad investment at the end of it. But these things take time to prove. And by the time you prove it, the people who ridiculed you are no longer there to have the discussion. That's what I've noticed in my life. That, when 10 years pass, the people who are just, what they call spit and run people, they are not there to neither spit nor talk. They are usually not there at all. Whether it happened to InfoEdge, us, Zomato, everybody, it's the same story. So I think it's best to ignore those noises. Like you hear them, you test it, you validate yourself, but you don't take them way too seriously.
Right. And you've spoken about, tying up with and setting up a cumulative of 400 hospitals. Any big hospital chains that are involved with you? Any names and any chains that you've tied up with?
I think with the 400, we are able to service our customer base as of today. So the insurance customer base, we are able to service. The people, see, you have to understand, you are only taking care of those people who have a private health insurance. Of course, others are free to use the facility, but the ones whom we are building it for is those. So you actually have to go to the places where there is private health insurance.
Okay. And what are the growth targets like for this one? How will numbers stack up? What's the average revenue per operating bed that you're targeting? Any specific therapies that you're looking for when you're setting up at least the new ones?
I wanted to clarify. We are very, very focused on the financial target and the growth targets and the profit targets for the PB Health business. It is just, they are irrelevant. It's a private company. They are irrelevant for everybody else. I think those growth targets have been proven by the fact that there's 2,000 crores of capital coming in because somebody is betting on it with their money. And those who are betting on it are, willing to take that chance, right? I think it is also proven by what me and Alok are doing. We are also putting our money and a substantial amount of money. That means we'll also have to be stupid to lose that money, right? If we don't believe in it. So I think that is the answer to the PB. Now, from a PB Fintech perspective, PB Fintech does not need to worry about that because PB Fintech is doing it for strategic reasons. PB Fintech is not doing it because it believes it's a very profitable venture and it should make profits out of it. PB Fintech is doing it because it's going to benefit PB Fintech. Because, if the claims experience becomes better and more controlled and they are more integrated into the PB Fintech, into the Policy Bazaar websites, then the Policy Bazaar customers will hopefully have a much better experience. And that is the reason PB Fintech is doing it. But yes, PB Health, of course, there are financial investors who are very smart financial investors. They have different time frames. And there's a reason why some of them invest and the whole world is not expected to invest. I must share one thing with you. The oversubscription was about 3 times.
Wow, that's impressive. So 3 times in terms of oversubscription with regard to this one. In terms of greenfield, you've guided for around 1 to 2% of your hospitals being greenfield. So around 4 to 8 roughly on the 400 that you have as a base. How quickly do they go live? How quickly do you set those up?
As I said, I think the first one will go live by December this year. Do appreciate we are a bit late in the sense this whole process will end by about June or so. So we have 6 months to take live the first hospital. You appreciate we can't really invest till the money is there. So, but yeah, by December the first one should go live, and also the network should go live.
Okay, and with regard to my last question is on management bandwidth, because of course a venture like this will take up some amount of management bandwidth. Could you give us a perspective on how that split will be, if there is visibility, and if not, just a ballpark? What's that visibility going to? What does that bandwidth split look like?
See, I think we have to all the time wear the PB Fintech lens and not wear the PB Health lens. PB Health has its own independent team, its own independent board, its own independent management. Now, what PB Fintech is doing, it has a strategic interest in PB Health succeeding. And thus, it will do whatever it takes to make PB Health succeed, including deputing some people, including whatever it requires to do, because that's exactly what any ally would do. So treat it like an ally, right, who wants that particular activity to happen. And of course, for that activity, it will get paid as well. But treat it like an ally rather than, okay, now you asked in terms of focus. See, we have independent CEOs for each part of our business, whether it is Policy Bazaar, whether it's Paisa Bazaar, whether it's UAE. And further, those people have independent CEOs for the POSP business, for each business unit, for everything. You need as much focus as the strength of the management, or inversely correlated to the strength of the management, or the maturity of the management in that particular field. So as I think about it, Policy Bazaar requires less and less focus because that management is the most mature. Maybe Paisa Bazaar requires some, and UAE requires some, and this will also require some focus to make it succeed. So yes, focus will be required and time will be required. However, that does not detract from the, see, if you have two kids, one is very good in studies and the other one is slightly weak in studies, who are you going to help in studies? Right? You will help the one who's slightly weaker. Now, that is only because the strong one is already strong, right? And it's not because you are neglecting the strong one.
Okay, very interesting. Thanks so much, Yashish, for coming in and clarifying this. What really stood out, for me in terms of the quantum of interest that this subsidiary and this private company healthcare venture has actually garnered. 3 times is what he said was the oversubscription number. 400 new hospitals that they're going to tie up with, of which they're going to create 4 to 8 new hospitals. But time for a quick break. On the other side, we'll take views from Aditya Suresh of Macquarie, who will join us, giving us all of the views coming from there. So stay tuned to that very interesting chat. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
Welcome back. It's a good morning for the markets, holding strong above the 22,700 mark on the Nifty, and that is truly heartening at this point. What's also heartening is the recovery in the Nifty IT. I just want to pull up the intraday of the Nifty IT, because though we were poised for a strong start, IT stocks were definitely not, and you can see in that chart after that dip the kind of bounce we are seeing. But the true stars today seem to be from the realty pack. So let me quickly pull up the Nifty realty and then the internals of that index to show you what's really moving. Realty stocks making a huge comeback. So are the broader markets. The advanced decline ratio also looking quite robust. All right, our next conversation with Aditya Suresh, Managing Director, Head of Equity Research, India, Macquarie Capital. Aditya, great to speak with you. Thank you so much for your time right here on NDTV Profit. Let's first get a slightly broader view. The kind of relief that we're seeing in the markets last few trading sessions, do you see that as more of a kind of a response to the drubbing that we've seen, or now an increasing feeling that Q4 in terms of corporate results will not be as bad as was initially penciled in?
No, thank you for having me on the show. Just to set some context to the backdrop in itself, the broader dynamic of kind of what we kind of outlined in our kind of expectations for this year was that the context was one where expectations were really high on earnings, and that's been a key support factor here for markets. Obviously, domestic liquidity was really strong. Now, in that backdrop, the 5 kind of speed bumps which we had kind of called out was that one is it's going to be a reset lower from an earnings perspective. There is a momentum slowdown, which you can see particularly in consumer. Obviously, valuations were still excessive. Foreigners were selling. The promoters, PE, VC, were selling. So those are kind of the 5 speed bumps. I think that's kind of playing out. Now, where we are today, are we there yet? If that's a kind of question, I guess our submission is that not quite yet. So yes, there is kind of a respite, and even the pace of foreign selling has moderated. All that is encouraging. But to call it a big inflection for the market at these levels, we're not in that camp. At least in an aggregate sense. And the real kind of key concern here for us is still on this specific point which you kind of mentioned, which is on earnings. Now, is the March quarter going to shape up better than the December quarter? We're not necessarily in that camp, at least given where expectations are at. So when I think about kind of, if I use MSCI India as a proxy, because it's much wider than the Nifty. So MSCI India, the consensus earnings growth expectation 2 year forward is about, say, 14-15%. That still is too optimistic in our mind. Just to draw some reference again, so when you think about the past 3 quarters, right, or even say the last quarter for MSCI India, revenue growth was about 5%. When you think about net profit growth, X of some of the one-offs, it is about, say, 7-8%. And that picture does not really change too much, even if I kind of expand the time period. So we still need a reset lower in earnings expectations. And I think that's still a problem for the market in an aggregate sense. Having said that, given the sharp pullback at a kind of stock level, quite a few more kind of attractive bottom-up ideas here to kind of think about.
Focus on those. The bottom-up ideas that you're seeing, where you think that the pullback is sufficient to give you comfort.
Yeah, so I'm not going to go through specific ideas just on this call here, but that's kind of available in the Macquarie research. But I would just leave it by saying that quite a few, we are finding far more attractive bottom-up ideas at this point in time compared to, say, even 2 months back or 3 months back. And a lot of that is clearly in response to the fact that a lot of these stocks are down 20, 30, 40% from what they were, say, 6 months back. Not to say that the price action on its own is the reason for the attractive kind of position, but so quite a few kind of companies here are interesting, both from fundamentals as well as valuation at these levels.
Aditya, good morning. There are, to my mind, a few conflicting signals out there, and I'm only focusing right now locally. Globally, the picture is very, very mixed. But the IP numbers that came out for Jan looked okay. High frequency indicators per se looking okay, but the advanced tax numbers that have come out overnight for Q4 are a damp squib, to say the least. Now, and even the corporate advanced tax numbers, right? You knew personal would be bad, but corporate ones as well. What is your own assessment about the economic recovery path from Q2 to Q3? It's been a good number. Does it continue, or does the advanced tax numbers create a bit of a doubt there?
So look, Neeraj, I think first is lovely to see you again. But the broader dynamic is that all of us in the market are expecting a further kind of uptick in growth, right, in Q4 and then into kind of fiscal 26, so on and so forth. So that's the backdrop. So the way I think about that question is not really about kind of so is Q and Q going to be better, or kind of the year near are we going to see a better pace of growth? That's already kind of in the baseline, right? So for us to kind of, if the question is framed in the context of what's in expectations in the market, I think at best we're kind of meeting some of these kind of growth estimates, right? From a earnings perspective. As you say, there are quite a few kind of conflicting kind of signals here in the high frequency. It's not really a clear cut in terms of which direction the economy is kind of shaping up, right? Credit growth in itself, it remains benign, if that's kind of one key indicator. The revenue growth, which we're seeing in terms of consumer staples, is moderate, right? Even the autos data, I mean, there are quite a few kind of mixed signals here in terms of like which segment is really doing well. I know corporates speak a bit more optimistically about kind of a rural recovery, but when I then think about this in the context of real rural wage growth, that's at best neutral, right? So yes, you're negative and that's gone to neutral. So bad becoming less bad, or maybe perceived as a positive, but it's not a big buy signal, right? So I'll give you a few more data points to go through, right? When you look at MSCI and revenue, right, just in the past, say, 4 quarters, it's kind of like plateaued. When you think about the high-end smartphone shipments as a proxy for the top-end consumer, that seems to have plateaued again. So, as you say, there are not. It's not a unanimous kind of. It's not like all signals kind of pointing in one direction, which is strong growth into kind of next year. I take those points.
Now, the other question is therefore, Aditya, for a market or for stocks to do well, a large market or a large economy growing at 6% may not be great, but it gives enough opportunities where specific companies could actually show some serious earnings growth. So when I try to combine that question of mine with the answer that you gave earlier to Tamanna's question about pockets having corrected enough for there to be good bottom-up ideas, are these in the large cap space alone, or do you reckon that you now find favor with pockets at the broader end of the spectrum too, even if the base hypothesis that growth is plateauing and not picking up substantially?
I think it's in our mind very, very selective and bottom up. I don't generally try to make the characterization of a small caps are bad, or mid cap equals bad, or growth moments is coming off, and that's a broad brush, right? So I think it's got to be very selective. So we do have a bunch of kind of small mid cap ideas which we like a lot. In fact, in the recent report, we've kind of put out a rising stars list where a bunch of stocks which could potentially say double here in the next, say, 2-3 year kind of perspective, right? So there is that side too. Now, having said that, just sticking with the large caps in itself, just to give you some flavor at a sector level. So, for example, with the financials, our analyst is speaking about kind of an improvement in credit growth from current pace of say 11% towards 13. We'll see kind of how kind of credit costs shape up, but at least our analyst is still a bit more optimistic on at least the private bank credit cost side as well. NIMs maybe comes off a little bit, but broadly speaking, in the teens growth, right, for some of the larger kind of banks. Surely, I mean, so underneath this, with the NBFCs, selectively, some of these could be growing much faster than this. IT as a sector, at least our analyst is speaking about, say, 6 to 8% kind of revenue growth in dollar terms, plus margin expansion, right? So this is then in the mid-teens plus as a kind of earnings growth. So to your point, Neeraj, I think, yeah, we are going to be finding a lot of kind of areas in the bottom up where you are still going to get a lot of growth. So it's never been like, for example, in a top-down sense, one of the points we're making in our recent note is that despite the, say, 20% kind of pullback, my sense was that as a market, we've gone from, say, egregious as a valuation to above par, and therefore it's still a rich bazaar for us to think about. But on the bottom up, there's still so many ideas for us to think about and construct an India portfolio, if I may, right? So it's not to say that be structurally underweight India because expectations too high. That's never the conclusion of the message. It's more about bottom up and kind of where we're positioned. I'll give you some more examples of this, right? So like consumer discretionary is a space where consumer discretionary industrials, we're seeing a lot of revenue growth. But that revenue, and so this is a space where we're actually a bit counter consensus to some extent. We're a bit more cautious than where the street is at. But once you've seen the revenue growth, to your point, Neeraj, we are seeing margin erosion, right? So even in this quarter, both the consumer discretionary and with industrials, you saw leading kind of sector level kind of revenue growth, but margins were an offset. And so the earnings growth in itself was a disappointment. So you have all these kind of nuances kind of work through. Within the sectors, we end up on a bottom up, kind of aggregated. We end up being kind of constructive on the financials, IT, telecom, those type of areas is kind of where we end up being positive.
Aditya, just to expand that on the consumption story, are you seeing some tailwinds there for auto, if at all, or is it quite the reverse? And as more of capex front loading takes place post what has been announced in the budget, do you see some of the infra plays coming back into action?
So, Manu, thank you for the question. Now, the way I tend to answer this question is again in the context of what's already in earnings expectations and how those expectations are going to be revised upward, downward is the way I think about it, right? So in that context, when I think about it, let's start with industrials. When you look at what is built into revenue growth for industrials as a category over the next 2 years, it's still a very, very large growth number. And into that, there is a big margin expansion which is already kind of built in. So whilst to the extent that there is a resumption of capex, etc., that'll add a bit more of confidence and visibility to those earnings estimates. If I zoom out and think about kind of what's baked in, I still think that at best we're meeting some of these kind of sector level growth expectations on earnings for industrials, rather than kind of further expanding those estimates is the way I think about it. Not to say that we don't like industrial as a sector. We do have a few ideas here which are really interesting, where there's going to be an uptick in the orders as well next few quarters, which we see. With autos and then even with consumer discretionary, like with autos, again, as Neeraj was kind of highlighting, it's depends on which category. Quite a few kind of mixed signals in terms of the vehicle sales data. But similar to industrials, what you'll find with autos and in general, when I think about what's even in our estimates on the bottom up, our analyst has the broader dynamic is fairly good volume growth. And into that volume growth, there's operating leverage driven kind of margin expansion of say 200, 300 basis points. And that's kind of where I'd be more cautious, right? I think to the extent that the volume growth is not going to be as strong as what we're going to see, plus then I guess there's an element of you have slow volume growth and then also margin compression. And so that becomes a bit of a problem statement. That that's the aggregate comment. Within that aggregate comment, stocks like say M&M is part of our kind of best ideas list. We still like it. It's going to pull backward a bit. It still features there. So I think the aggregate comment is a bit different from the bottom up, and we still have a few bottom up ideas in each of these different pockets where the top down may not be as clear cut.
Fair call. Aditya, lovely talking to you as always. Thanks for taking the time out. Thanks for that cautious optimism as well. Or let's say optimistically cautious, whichever way I can put it. But thanks for giving us those thoughts. Really appreciate.
Thank you.
That's the view from Head of Equity Research at Macquarie, Managing Director and Head of Equity Research at Macquarie, Aditya Suresh. Now, last couple of minutes left on the show. Just want to mark what the broader end of the spectrum is doing and the BSE 500 winners and losers list, because the market is actually packing a serious punch this morning. The BSE 500 too up about 400 points, and select IT names like Mastech have gone up, but beyond that, Ercon, Triveni Turbine, Blue Star, you don't see the usuals, you don't see the regulars. This very diverse set of stocks which are up in the winners list today, and the ones like Hitachi Energy which are down because of specific factors like ex-dividend or otherwise. So please keep that at the back of your mind. Want to also put up Varun Beverages and just see what that stock is doing in the session today, because remember we spoke about how DAM Capital has upgraded the stock, or rather given the stock price of 670, and while the Nifty is up 1%, Varun Beverages should come up on your screen. It's up about 2.62% as we speak. A classic summer play, I would suspect, and I think that's what Mahima will be joining us in just moments from now, will tell us about the report. I'm presuming the report would have a fair degree of mention of that. Citi, I believe, has maintained the buy rating. DAM Capital too has upped the target price. Mahima, tell us why this 50% upside potential.
Right, so they've maintained buy with a target price of 750, and this poses a 50% upside for the stock. The stock has fallen enough, which is why we're seeing this 50% upside on the stock. Now, in terms of why Citi is still bullish on Varun Beverages, they're saying that the stock is down 25% year to date, and primarily this is led by investor concerns from the heightened competition that is coming in from Campa Cola. Campa Cola now in some cities has over 10% market share overall. In terms of Campa Cola's aggression in pricing, distribution and marketing initiatives, market share gains are likely to be more in local and regional bands is what they're saying. And they're saying that this kind of competition that has been playing out and the investor concerns are now a little overdone. What they're also saying is that Varun Beverage's aggressive consumer promotions should limit the impact of volume growth going ahead, and they believe that the stock reaction is overdone at the 47 times 1 year forward PE that they're seeing, where the risk to reward seems favorable given the growth drivers, which is why they've reiterated buy. And what they said is that they're opening a 90-day positive catalyst watch on this particular counter, and they expect strong near-term growth led by intensive summer season as well. So this is the overall view of what Citi has on Varun Beverages.
Okay, the stock up about 2.5%. Well, Varun Beverages in focus. I think most of the market now having a really good day. 22,700 is being defended quite valiantly by the Nifty. 22,740 is where we're leaving you. But with that, it's a wrap on India Market Open. From Neeraj, me and the team that put the show together. Stay tuned. Ask Profit up next.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter.
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Hi, thanks so much for joining in. It's a great morning for the Indian equity market. Certainly the screen is looking particularly good. From Mahima and myself, thanks so much for tuning in. By the way, this is Ask Profit, and this is where you can ask questions about all of the stocks that you have in your portfolio and the ones that you've been eyeing for the last few weeks and that are probably looking better right now. So let's take a look at how the markets are doing at this juncture in the morning. And you built on early gains. You have the Nifty 50 that's trading with gains of about 1.2% at the high point of the day, and above that 22,700 mark, which a lot of people have pegged as a key resistance level. So the question that you should be asking is, will we close above the 22,700 at this point? And that really is going to be a critical level to watch through the day. What is lending to the strength today is the Nifty Bank. So pull that up as well. The Nifty Bank trading with gains of 1.4% or thereabouts, and also very close to the high point of the day. Pull up the constituents of the Nifty Bank and you will notice that the heavyweights are making a move in trade today. The likes of ICICI Bank gaining about 2.5%, HDFC Bank also making a sharp up move today, as much as 1.2%. The only underperformer in that pack, IndusInd Bank, for obvious reasons, and the bad news has not stopped for this particular company or bank. The mid-cap index currently gaining about 1.2% or thereabouts, and the small-cap index looking even stronger, gaining about 1.75%. And finally, you're seeing a break in the selling. Of course, individual names also in focus.
And it's good to see that the broader end of spectrum is doing better than the benchmark indices, because that's where the real pain was. Some counters which are enjoying the upswing in today's trade include your Ircon International on the back of the JV, which has received around over 1,000 crore order win. The stock is up by 6%. Varun Beverages is another counter where Citi has maintained buy with a target price of 750. The stock is up by 3% as we speak. PVR is one of the stocks where Nuvama has maintained its bullish stance as a target price of 1765. The stock is up 4%. PC Jewellers, the company has allotted 51 crore shares to the overall debt settlement. The stock is up 4%. Unicommerce E-Solutions is the counter which is buzzing on the back of QIP, and the stock is up almost 6% as we speak. Aditya Birla Estate is also up. It's launched its premium luxury apartment in Pune. The stock is up 3%. Mopin Labs is another counter which is buzzing on the back of its launching of high quality treatment in diabetes. The stock is up 9% as we speak. Some stocks that are underperforming, there's no specific reason as to why they're underperforming, but they are under pressure. Hitachi Energy, Castrol India, Jaiprakash Associates, Kesoram Industries, Bharti Hexacom, and Shada Cropchem. All of these counters under pressure and in red. So these are the counters, Alex, that are specifically.
Your voice sounds incredible.
Yes.
We should get you to sing a song today. But Castrol, by the way, is trading ex-dividend, and so therefore it is losing a little bit of ground today. I believe we've got Swati Hodkar, who's AVP Technical Research at Nirmal Bang, joining in. Swati, hi, good morning. A pleasant up move that we're seeing in trade today. What are the key levels to watch at the index level?
Good morning, Alex and Mahima. Definitely today we have got a very good start, and as of now it's holding its strength. On the higher side, 22,640 will be the very strong support levels. If it's maintain a positive closing above that level, this pullback rally is likely to be extended. And now the immediate resistance is placed at around 22,800 to 840. That is a strong resistance level we have witnessed in the month of the February also. So if it surpasses that level, then such kind of a positive momentum is likely to be carried forward towards to at least 23,000, 20,400 levels. So as of now, my view is a little bit positive on the Nifty, because the bank Nifty is really doing very well. But we have some news might be coming in from the US. We have meetings with the Trump and Putin. Then again, the Fed banks meetings will be there. So the sentiments will be whatever the outcomes comes from the US markets. So as of now, the view is definitely positive as long as Nifty sustains about 22,640 levels. Buying positions are to be held for immediate target of 22,800, and beyond that 23,000, 23,400 levels can be seen.
All right, so that's the view with respect to the markets. With that, let's kickstart with the questions. We have our first caller for the day. Kamath from Bengaluru is calling in. Kamath, a very good morning to you. How can we help you?
Madam, good morning. I have 1,000 Sequent Scientific at the rate of 150 rupees, madam.
Okay.
So I wanted to know the short term and long term view, madam.
All right, I'll take your view with Swati. Swati, comparatively a small company, what are the charts looking like for the counter?
Yeah, as of now, this particular counter Mahima is under the selling pressure and it will try to find out a support nearby 125 to 130 levels. So more 10 points downfall is remaining in this particular stock. I will suggest to average it out the long positions if possible if the counter comes down to at 125. So your buying rate will come down. On higher side, it has a very strong potential to reach up to 160 to 165 levels back. So those are my immediate target level. You can definitely hold on this long position for a very short period of time. The view is cautious, but it will find out a support at a near, then it will bend to the consolidation. Then after we will see some trend reversal. For the longer term horizon, the stock is definitely positive. You can hold on for a target of 160.
Okay. All right. I'm coming back to you on this next one, and it's a really tiny company, Rico Auto. It's an auto component manufacturer. Only 850 crore market capitalization. It is currently trading at 62.65. We've got Vivek from Bengaluru who's bought at a price of 39.63, 4,500 quantity, and so he's making quite a pretty penny here. Should he book profits in your opinion?
Alex, frankly speaking, I will not suggest to book the profits, even though the client is earning a very handsome money. But this counter has touched the 2022 levels. Almost it has reached to the 59.60 levels, and it's trading in the oversold zone. So the downside is limited at the current level. Very strong formation at around 59 has been seen. We are likely to witness a very upmove rally, which might take a counters towards to 75 to 80 levels. So I will suggest to hold on this particular counter for immediate target of 80, and beyond that 100 levels can be seen. But you can place a strict stop loss of a 59 on downside so that your profit will be capped and you can carry on your long positions for an immediate target of 80, then 100 levels can be seen.
Okay, so that's the view with respect to Rico Auto. The next counter that we're talking about is Titan. Rohit from Hyderabad is writing in, and he's planning to buy some shares of Titan at this price, and he wants to know whether this is the right time to enter the counter. We also have Astha from Hem Securities who's joining us now. Astha, very good morning to you. What's your view with respect to Titan?
Hi, good morning to everyone out there, and first of all, apologies due to some technical issues who are not able to join.
No worries, not at all.
On time. So now talking about Titan, yes, I think one can make an entry into this counter, but on the lower side, that is at around 3,020 or 3,000 odd levels. I think that is the good level to make entry into this counter, because I'm positive on this counter because the guidance which the management has maintained regarding the EBIT is intact. In fact, they have shown the steady performance, and we are also seeing the rise in the gold prices. So everything is working in favor of Titan at this moment of time. Quite optimistic on this counter. The only thing is that just buy on dip strategy can be adopted, then it is a better choice for the price target of 3,300 to 3,350 at the initial levels.
Okay, let's very quickly also get Swati to give us a technical view on Titan, because from what I can see, it's very close to that 52-week low, right? So what are the key levels to watch at this juncture? Would you also suggest on the technicals it's a good opportunity to buy?
Alex, you have rightly pointed out that this counter is trading nearby the 52-week low, and 52-week low is at around 29.85 levels. But if you look towards the another parameters on the technical front, such as the averages or the momentum indicators, such as the RSI, it's still on a downward side. So I believe we might retest that particular 52-week low once again, and beyond that, more levels can be seen on the downside. So as Astha has also suggested, to buy on deep strategy can be applied. So I will suggest wait for some point of time, let the stock settle down at 29.80 or 29.50 levels. That will be the very attractive level to take a long positions. But if you don't want to miss rally on the higher side, at least 20-30% can be recommended at the current market price. So you can buy 20-30%, but not the full-fledged buying. We are looking for a target of at least 3,200 from here onwards.
Okay, and conservative target at that for Titan company. Let's get our caller in. We've got Mohan calling us from Telangana. Hi Mohan, good morning. How can we help you today?
Good morning, sir. Very good morning, sir. Sir, I have a question that Anant Raj Limited.
Okay.
So I'm having 100 shares and I bought for 600 rupees.
Okay.
So now it is quoting on 500 rupees.
Yes.
So I'm in 10,000 net loss.
Okay.
So what can I do now? Can I purchase some more or for the average?
Okay.
Or what I have to do?
Understood. Can you help me with what the thinking was, Mohan? Did you plan to buy this for the short term, for short-term gains, or for the long term?
No, it is for long term only.
Okay. Asa, I'm coming to you on Anant Raj. What's the view fundamentally on this particular counter? 600 was the buy price, currently trading just shy of 500.
Yes. So talking about this counter, the results which they have shown for the Q3 of FY25 were on the decent side. So, and in fact, they have completed various projects and the project pipeline is also seems to be strong. I think this counter can move upwards, in the coming days. So it's better to hold this counter, and we are quite optimistic for the Q4 of FY25 results. Why? Because they have completed certain projects related to Birla, Navia, etc. So I think definitely the financial performance will reflect those completion of the projects also. And in that way, we are positive on this counter. Here, the cost price is high, so it will take some time, I suppose. But better to hold this counter rather than exiting. Hold is the strategy from our side. Initial price target, which we would like to give, is at around 550 to 580 odd levels.
That's the view with respect to Anant Raj. The next counter that we're talking about is IDBI Bank. Sheila from Karnataka is holding 4,500 shares at a price of 80. And she's sitting on a loss of 32,000 odd rupees. And she wants to know whether she should hold or exit at the current level. Swati, what's the view like?
Ma'am, I will suggest to hold on this particular counter because as of now we are witnessing some sort of a reversal into this particular counter. The stock is just under the consolidation phase within the range of 65 to 75. Any move above 75 level will clear its downtrend and will continue its uptrend, which might take a counter towards to 80 to 85 levels. So I will suggest to hold on at the current market price and wait for the target of 80 to 85 levels on the high side.
Okay, all right. So that's the view on IDBI Bank on the charts. Stock is up about 0.8%. If I'm not mistaken, it's given up some of those gains. Pull up the intraday chart and I just want to see if it has come off. And it is okay. So it's holding on more or less. Dixon Tech is what we're talking about next. Shweta is calling us from Hyderabad. Hi Shweta. Good morning. How can we help you today?
Hi Alex and Mahima. Good morning.
Good morning.
Firstly, I would like to say you both are my favorite duo in NDTV.
Thank you so much.
The positive energy you bring to the show is really appreciable, and we missed you in last week for a couple of sessions in our project.
Thank you so much. It's very kind of you. Thank you, Shweta. Please go ahead.
Yeah, my question is regarding Dixon Technologies.
Okay.
And I have 11 shares bought at 15,210. I would like to know whether I should average it or should I shift to some amber, PG or gains in the same.
Okay. What is the time frame that you have in mind, Shweta? Is this a long-term fundamental?
I can hold it for 1 year.
Okay. So let me go to Swati on this one then. You are incurring a loss. You bought at 15,200, slightly elevated levels. But at the same time, we have been in the recent past been speaking about these EMS players positively, right? Some of them making a bit of a comeback. So therefore, Swati, on the charts, what should the strategy be?
Yeah, on the Dixon technology from the last 2 years, we have seen a very strong rally on the technical front from almost 7,500 to 17,000 levels. So as of now, we are witnessing some sort of profit bookings and the stock is likely to continue such kind of a fall in the near term as well. So, whatever the rally we witnessed on the higher side, it might be a short-lived because the longer term horizon charts doesn't look that much attractive to take a long positions at the current market price. I will suggest to wait for a time being. If the stocks find out a support nearby 12,500, 12,000 level, up to that level, I believe that a correction might be seen in the near term futures. So if you're finding any support nearby 12,500 to 12,000 levels, at that point of time, you can take average it out on the lower levels. Upside, we can see that if the stock manages to give the breakout of 14,400, then only we can see some uptick rally in this particular stock, which might take a counter towards to 15,500 to 16,000 levels. So at the current levels, my view is a little bit cautious. Don't take a long position at the current market price. Hold on for some period of time and buy on dip strategy should be applied.
All right. So take a position from a short-term perspective and buy on dips should be your strategy for Dixon Tech, is the view coming in from Swati. Arjun from Bangalore is asking that he has Praj Industries bought at the levels of 650, 40 shares he's holding and he's planning to hold this for the next 3 years. What's the view like, Astha? From a 3-year perspective, do you think Praj Industries is placed well?
Yes, sure. Because first of all, I mean, our long-term prospects are definitely high for this counter, and in the long term, we are expecting this counter to move till the level of 600. So, what was the problem behind, not very good performance in past few days or a month by this counter is that their order execution is very slow, and that is the major reason that we have seen that the growth has been deferred due to the slowdown in the order execution. But what I believe that going ahead, as their order book has improved, their order inflow has improved, although slowness is there in the execution, but now order inflow has improved. So definitely that will help the company in posting good set of financial numbers going ahead. So idea here is to stay invested in this counter. As I have said previously, 600 are those targets which we are setting for this counter at the initial.
Ruchika from Gurgaon has written in, and she wants to hear Mahima sing a song. Actually, no, she's not saying that. She's saying that she is a big fan of the show. Thank you so much for those kind words. She's also got a question of TVS on TVS Holdings, and she says that she's got a buy price of 13,300, in which she's incurring a significant loss, therefore, of about 38% or thereabouts at this juncture. The stock is up and about today, 2.5% or so, but she's wondering what the perspective should be at this point. And since she's not mentioned a time frame, I'm going to go back to Swati on this one. Swati, holding company, TVS Holding, I'm not sure about the volumes, but what's the perspective on the charts?
Yeah, Alex, as of now, we can see that a short-term view is definitely cautious, but a long-term view can be a positive, because whatever the rally we have seen from the 2023 from almost 6,000 levels to 14,000, if we draw the retracement purpose, the stock manages to take a very strong ratio, support of the 61.8%, which we consider as a golden ratio. Now the support falls at around 8,050 and so levels, and we have seen that this month counter has touched the feet of 8,070, and from there onwards we have seen a very good bounce back rally, which indicates that the stock is taking a very strong supports of the retracements, and we are witnessing some sort of a reversal. So at the current level, you can definitely average it out because the risk reward ratio is really favorable. Upside, I'm looking for a target back towards to 9,200 to 10,000 levels on the higher side. So that you can go for a long position. Means I am saying average it out can be done at the current market price. Slowly and steadily, it will move up towards to at least 10,000 levels. So my view for a longer term horizon is positive.
All right, view from longer term horizon is positive for TVS Holding where charts are concerned. Moving on to the next caller, Vijay Kishore is calling in. A very good morning to you, Vijay. I believe you have a question on Jupiter Wagons.
Yeah. Presently, I'm holding 1112 shares, ma'am.
Okay.
An average of 366.56.
Okay.
Current loss is 7,852.85.
Right.
Should I average or should I sell?
Okay, so you bought Jupiter Wagons seeing the charts, Vijay, or did you see the fundamentals of the company?
Yeah, fundamentals.
Fundamentals. So you want a long-term view?
Yes.
Okay, I'll take your question with Astha. Astha, what's the view like for Jupiter Wagons from a long-term perspective?
So long term seems to be good for this counter, and I recommend holding this counter for the longer term point of view. Talking about the kind of numbers company have presented, it was all an average numbers. But in fact, I think going ahead, definitely the financial performance will going to improve on the basis of the orders, etc. And in fact, I think the industry tailwind will also be there, and it will help the company in posting good numbers in the future ahead. So yes, a hold is a strategy from our side for this.
Rahul is calling us from Mumbai. Hi Rahul, thanks so much for calling us. How can we help you today?
Hey, hi team. So my question is regarding the Birlasoft.
Okay.
I have 135 shares of Birlasoft, and the average price is 624. I'm a long-term investor, so just wanted to know what is the next I can do on it.
Okay, what was the thinking when you bought the stock? You bought it at elevated levels, relatively speaking, 624. And so you say that you bought it based on the fundamental story. What did you like about this company?
So basically, it has a growth around 14-15%, and that time size was like 20-30% down from the top. So that's why I brought it. Yes.
Okay, all right. So it seems like you've looked at the performance of the share price or the movement of the share price and decided to buy. Is that right?
Right.
Okay, so let me then go to Swati. on the price movement, just to give you a sense of what the longer term charts are suggesting. 624 is the buy price, 396 is the current market price. What should the strategy be, Swati?
Yeah, Alex, the client has already specified it. If you're looking towards the past correction, at the current levels, the price is really good to take a long positions for a longer term horizon, not for a 3 to 6 month asset. For more than 1 year, if you hold this particular counter, definitely it will give a very good result. On the technical front, we might witness more downfall towards to 380 and so levels, because I believe that the counter is trading nearby the oversold zone. We will witness some sort of a price consolidation, then we will get a breakout in the near term futures. At the current level, I will not suggest to average it out. If the stocks finds a very good support nearby the 380 to 370 levels, at that levels you can definitely average it out. I'm looking for a short term target will be a 440. Beyond that level, 520 can be seen. So for the longer term horizon, you can definitely take a buy call on mentioned dips level.
All right, so that's the view with respect to Birla Soft. Vijay Kirti from Tamil Nadu is holding 400 shares of Container Corporation, bought at 1060 per share, and she wants to know whether she should sell, hold, or he wants to know whether he should sell, hold, or average out. Asta, what's the view like?
So regarding Container Corporation, I believe it's better to hold this counter. Don't sell it as at this point of the time. So now, what are the major reasons behind the weak earnings? I think that is the weak EXIM, which we can say that has hurt the earnings. And in fact, the depreciation was lower. So in that way, the profitability was looking to be okay. So here the depreciation helps the profitability, not the operating performance. So I think that was a major reason that this counter has not performed so strongly because of the weak set of numbers. But going ahead, I think this counter can improve financial performance wise, and hence we are recommending hold on this counter with the initial price target of 700 to 720.
Okay. All right, so that's the view on Concor, 700 to 720. And I notice both of you are giving more conservative targets on your recommendations. I think that is the symptom of the times. You don't want to stick your neck out too far, and I completely understand that, appreciate that. All right, viewers, do bear in mind that even the experts are saying be cautious in this kind of a market. Jose is calling us from Bengaluru. Hi, Jose. How can we help you today?
Hi, Alex. Good morning. I have InterGlobe shares, which is I bought about a few months back at a price of around 4,000.55.
Yeah.
So I just wanted to know if I should hold on to it or should I book profit?
Okay, so help me understand the thesis when you bought the stock, Jose. I'm assuming that you bet on this stock because it's a leader in the domestic aviation market, and it is gaining market share, it is holding market share, and it has very good metrics, right? So is this the fundamental basis that you bought the stock, or is it the price performance?
Yeah, so when I bought the share based on fundamentals, I bought it, but it was for a short-term listing price. So when I when I saw that it was, during one of the shows, multiple times it was showed that it will hit about around 20%. So,
got it. Okay, so I will still, you know what, because you bought it based on the fundamentals, I will still go to Astha just to give you a sense of how things are looking. And Astha, it's an interesting question because some part of the positivity on InterGlobe has been baked into the price. You know, this whole conversation about the Kumbh and the impact on airfares and how, the air traffic going up. We recently saw updates from these airports were saying that 12-13% growth in air traffic in the last month or so. It's looking strong, and crude oil prices are muted as well, around that $70 per barrel mark for Brent crude. That's also positive. So things working in InterGlobe's favor. Would you say take money off the table right now or wait?
I would suggest to wait for the price target of 5,000 first of all. Now talking about this counter, 62% market share as it is a market leader, and they have a cost efficient fleet with a very strong balance sheet. That is, they are highly positive on the cash side. In fact, now what is the positive and what looks to be good for this counter is that they are increasing their penetration in the international markets as well. So I think looking after all these factors, I still believe that this counter has potential to move more from here, and hence I'm giving a price target of 5,000 at the current level. So remain invested in this counter.
Okay, we have to slip in a very quick break. Jose, I hope that answered your question. 5,000 is the price target that Asta has on InterGlobe Aviation. Asta, Swati, do stay with us. Viewers as well, do stay with us and keep your questions ready. We'll be back on the other side to take all of them.
He sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the
Welcome back. You're watching Ask Profit, and it continues to be a great morning for the Indian equity markets. We're holding on to gains of over 1% for the Nifty 50, and we're trading above that 22,700 mark. Keep a close eye on that mark. And the broader market's looking sanguine as well. The mid-cap index gaining about 1.3%. The small-cap index up about 1.75%. We've got our next caller for the day. We've got Abhi calling us from Kolkata. Hi, Abhi. How can we help you today?
Hi, good morning to all of you.
Good morning.
I've got 10,000 quantity of Northern Art Capital at 173.37.
Okay.
I'm willing to hold it for like the next 1 year or maybe even 2 years, as well.
Okay. So your voice is not coming through very well. Kolkata is pretty far away on the other side. It should have been better though, considering that mobile technology has improved considerably. Your question is on Northern Arc. 10,000 shares is what you have. 173 is the buy price. You can hold for 1 year. Unfortunately, it's not been listed long enough for me to go to Swati on the charts. So let me go across to Asta on the fundamentals. NBFC, would you hold on to this, and what is the rationale?
So I would like to say that yes, partially hold this counter because yes, now the issue price is 263 and it the IPO came in September, I suppose. So it is a NBFC with a diversified platform, and in fact at the time when the issue came, price to book multiple was at around 1.4x. But the problem with this counter is their weak financial performance in the Q3 of FY25 because they have shown 10% of degrowth in their bottom line. So the main issue revolves around the degrowth factor in the bottom line, and that is what the markets are not liking. And we are seeing this counter falling below the issue price. Idea here is to exit partially because I am still not very much optimistic on this counter, but remain invested in the partial quantity. And one can go for other NBFCs for the sake like Bajaj Finance or Bajaj Finance, that too on the dips. So I think it's better to partial book losses and exit from this counter and invest in other NBFCs.
Invest in other NBFCs. I must point out that Mahima is making fun of my bad jokes, and she said that.
I said that I'm going to ask Asta and Swati to rate your jokes from now.
Okay, so here's the thing. You guys can tell me. I know that I'm making some terrible jokes right now, and it's not like it's scripted or anything. It comes out that way. But sometimes the jokes are good. You got to admit, sometimes the jokes are good, and both of you are smiling, so I'll take that as a good sign. But having said that, Mahima says that, well, whatever helps me sleep at night. So it's okay. It's fine. I can take it. The criticism is warranted. I will appreciate that.
All right. But my rating sure is going to be disappointing you, so I'm not going to do that on air. But okay, moving on to the next query. Raja Gopalan from Chennai is wanting to know whether it's a good time to buy MSTC because it has posted excellent set of numbers and he's looking for a longer term, say 2 to 3 years. Asta, I'll stick with you. What's the view like for MSTC?
Yes, if I talk about the numbers which the viewer has also pointed out, yes, it was an exceptional rise of around 500% in the bottom line. But here I would like to draw the attention, the numbers are not exceptional. Why? Because there was an exceptional item of 275 crore. So if I delete that item of 275 crore, then the profit seems not to be very strong as it is looking right now on the papers as of now. So on that basis, if anyone want to make entry, then I would say please don't make entry on that basis because numbers are good, but not that good as due to the high exceptional income. So right now, my idea is whether if anyone has already made the entry, then remain invested. But for making a fresh entry, it's better to wait for some time. Let the Q4 FY25 numbers come and then make an entry.
Okay. Asta, I noticed that you avoided giving me a rating on my jokes, but that's fine. It's okay. I understand. The no rating is also an answer. Rajan is calling.
Maintained a neutral stance.
I want to tell you one thing. If you bring smile on anyone's face, so no matter how the joke is, I think it always keep environment lively and positive vibes always float around. So no matter what the kind of joke is, but please, I have no issues with your joke.
So she's still not saying that your jokes are nice, Alex. Just FYI.
Okay. Let's go back to the markets now. Let's go back to the markets. Rajan, and I can admit this is a loss. All right. Rajan is calling us from Mumbai. Hi, Rajan. How can we help you today?
Alex sir, once again lucky enough to talk to you.
My pleasure.
I am having I hold ITC shares since last 15 years, so I got 10 ITC hotels with the demerger. Then I purchased some around 490 shares, making it a total of 500, say around 160. Okay. Now I am having a liquid cash of around 1,50,000. So can I invest more because of the promoter's credibility? And I'm a long-term investor, specifically for 3 to 5 years. Please advise from both the panelists.
Rajan, I just want to clarify. This is a question on ITC or is it a question on ITC hotels?
ITC hotels.
Okay. So you were a long-term investor in ITC. You got allocation in ITC hotels, and you intend to invest more in ITC hotels.
Exactly. I have a liquid cash of 1,50,000. So can I would like to put the entire thing for another 3 to 5 years. So is it advisable or I just want this thing?
Okay, got it. Asta, on the fundamentals, obviously, ITC hotels, from the hotels pack, and there are quite a few now to choose from, would you select a couple of stocks in this space or would you put all your money in one hotel?
No, I would not like to put all my money in one hotel because first of all, it has got recently, it is recently debuted and at the price of around 180 or 188, if I remember it correctly. So from there, we have not seen much of movement in the stock prices, right? Now, they have got a very good balance sheet. It's a debt-free balance sheet. In fact, their expansion plans are also very good because they are planning to add around 5,000 plus rooms in coming 4 to 5 years. So strong expansion plan with a very good brand name, but the only thing is that it is at the very initial stages to decide upon that whether to put entire money into this counter. So idea here is we have other hotels like Indian Hotel. In fact, I'm very much positive on the Indian Hotel as of now. So put 30% of your allocation in the ITC hotel, but don't put the entire 100% in one hotel. So if you want to look after other counters in the same space, then Indian Hotel is also looking very good to us. So idea here is just put 20 to 30% at the initial level, let the results come, and we can make an entry into this counter. At that time, we must be very much sure because it has recently debuted. So better to wait for some more time. Don't put your entire money into this counter.
All right, wait and watch till the results come out for ITC hotels, and Indian hotels also looking nice as per Astha. The next question that we have is from Dinesh, who's from Gurgaon. He wants to know so he's already invested in Vedanta. He's holding around 310 shares at 405, and he wants to know the right price to add more and average out. And his time horizon is for 3 months. So Swati, I'll come to you. What are the charts saying about Vedanta?
Now we are witnessing a very good momentum into the metal pack, Mahima, and I believe that the Vedanta has given the formation of the flat pattern and it has given the breakout today with the decent volumes. I believe if its stock manages to maintain such kind of a positive closing above 460 and so levels, the upside rally gets open towards to 480 then 500 levels. So up to that levels, I'm looking a positive momentum on these particular stocks. So you may hold the long positions by maintaining a strict stop loss of a 440 for immediate target of 480 to 500 levels on high side.
480 to 500 levels for Vedanta. And by the way, certain statements being made by Anil Agarwal in his letter to shareholders as well. The prospects, according to him, and he's obviously best placed to talk about it, are looking good for this company and the entities that will split from this company. Shrikant is calling us from Chennai, and he's got a question for us. Hi Shrikant, how can we help you today?
Hi madam, my name is Shrikant. Madam, in the IT sector, mid-cap stocks, pocket of such stocks, madam, recommendations.
Okay, recommendations. So you don't specifically want to know...
IT mid-cap stocks.
Yeah, but you don't specifically want to know about Orient Tech, is it? You want to know about mid-cap stocks? Yes, okay. All right. Asta, the question is for you then. Where do you see opportunities in the mid-cap IT space?
So first of all, I would like to say that better to wait for the results to get released and then make entry into this counter. But even if anyone want to select, then persistent system as of now seems to be quite okay in that space. So I would like to go with the persistent system. Even today also, it is up by 1%. So I think this is a safer place to invest the money in. Rest, I think it's better to get the results come and then make an entry into this space, because we are expecting some sort of, not very strong performance on the financial results wise in Q4 of FY25. So idea here is to wait. And if anyone want to choose, then persistent system is looking good for us.
All right, so that's the view with respect to persistent systems. The next counter that we're talking about is ABB. Mahalakshmi from Hyderabad is holding 78 shares at an average price of 5530, and she's been accumulating this since November 2022. She's sitting on a loss right now of around 14,000 odd rupees, and she wants to add further, and she wants to add 100 more shares, and she wants to know whether this is the correct approach. Asta, I'll stick with you because she's been accumulating it since long. What's the view like for ABB India?
So, I mean, ABB is looking good to us. They have got a very strong pipeline, especially from the railway power segment. So that seems to be very strong to us, and in fact, the performance is also very good. And what we are believing that now the government will also, there will be a push from the government in this sector. So definitely, it will help the company. So all in all, looking good to us. I think it's better to stay invested in this counter with a price target of 5,700 to 5,800 at the initial level, and buy on dip strategy can also be applied to this counter.
All right, so that's the view on ABB. The stock is up 3% at this juncture. Let's go to the next caller. We've got Mugdal calling us from New Delhi. Hi Mugdal, how can we help you today?
Good morning and thanks for my call. Sir, I have 20 share of rights company.
Right.
That's a railway. So my rate is 258.
Okay.
So what to do? Can I sell it or hold it?
Okay. What is the time frame that you have in mind, Mugdal?
Approximate 6 months to 1 year.
6 months to 1 year. Okay. So positive development coming in for the company today. Of course, you must have watched it. If you were watching NDTV Profit, you would have seen it in the morning. We talked about it. The fact that the company has revised upwards its order value to about $10+ million, and the stock is up and about as much as 3% today. But since your question is for the shorter term, that is 6 months, Swati, I'm going to come to you on the charts. What is the upside potential at this juncture?
Yeah, Alex, the overall view is little bit cautious to negative only because the stock is continuously falling down and it's trading in the formations of the low top, slow bottom formations. As of now, it is stuck within the range of 215 to 205 levels on the downside. A breakout on either side will decide the clear trend of the particular counter. But looking towards the price momentum, I believe whatever the rally we are witnessing on the higher side, it's short-lived because the counter is facing a very strong resistance of 230 levels, 225 levels on the higher side. Unless and until it doesn't give a breakout of that level, the trend will not get reversal. I will suggest to wait on for some period of time. I believe that the downside is more there into this particular counter, which might take a stocks towards to 190 to 185 level. So those level will a very strong foundation level for this particular stock, and the risk reward ratio will be also favorable. So I will suggest to buy on deep strategy shall be applied if the stock takes a support at around 185 to 190 level. But at the current level, you can hold your long positions, but not to accumulate further at the current market price.
Okay. There's an important story that has come to our reporters' attention. It has to do with the Unified Payment Interface, or UPI. You are probably using this on an ongoing basis, and you may not be aware of all of the functionality, but essentially when it comes to these transactions, there is both a push factor as well as a pull factor. So push factor is when, of course, you either scan a QR code or you have somebody's contact or their UPI ID and you send money across. A pull transaction is where they can request money from you. Now the NPCI, which is the body that is taking care of UPI, that is regulating UPI, is going to come in with an elimination of the pull factor. And Subhana is here to tell you why they are doing this. Subhana, hi. What are the details here?
Hi, good morning, Alex. So yes, the NPCI is actually said to have been in early discussions with bankers to eliminate the pull transactions via UPI. Now, why they're doing is, why they're coming up with this move is because they want to curb the rise in digital fraud transactions that are happening at a rapid pace. So what they're trying to do is that they're trying to bring down the pull transactions, and they're trying to push up the push transactions. What bankers are also telling us that this could bring in some ease of bring down the ease of UPI payments, like how you and I could easily make payments online through these links when a merchant sends us a link. But it could also in an overall in the long run could bring down the propensity of such digital frauds. Now for a long time we have seen that as India is becoming digitized, there are a lot of digital frauds that are happening. So in order to curb this, they're planning to eliminate the pull transaction, and while the implementation of this move is yet to be known, but the talks have begun.
Okay. All right. Thank you so much for breaking that down for us, Subhan. In fact, a lot of recent updates coming in from NPCI, especially with regards to UPI. There was a recent update where NPCI is also in talks to kind of bring PF withdrawal via UPI and via ATM as well. So significant updates coming in from there. Moving on to the next counter that we're talking about is Ujjivan Small Finance Bank. Nidhi from Ambala is asking, she's holding 1,000 shares bought at 54 a piece, and she wants to exit and buy some other banking stock. Can you guide us to which share to buy? And this, she has a 6 months horizon. So Swati, I'll come to you. What banking counter is looking attractive on the charts right now?
Yeah, on the banking side, I will go for the larger banks such as the ICICI Bank and the Axis Bank. Those banks really looks very attractive on the technical spin. But I will not suggest to book your losses into the Ujjivan, because already you have bought at a very elevated levels, and currently the counter is sitting at a very lower side as of now. We are likely to witness a positive momentum in the near term, which might take a stocks towards to 40 to 42 levels. Up to that level, you can hold on. So sell on rise strategy should be applied. But if you want to take any fresh long positions into the banking counter, HDFC, Axis Bank and ICICI Bank, those are the counter really looks very strong on the technical setups.
So very quickly, because you've already spoken about this, Swati, I just want to reiterate, we've got a separate question on Vedanta. Dinesh from Gurgaon is already holding at levels of 405 and he wants a fresh entry point for 3 months time horizon. What would it be?
See, Vedanta is really doing very well on the technical front. Stock is well placed above all the important moving averages, say the 50, 100 and 200 DMA as well. As I earlier also pointed out, that the stock has given the breakout of the flag pattern, and I believe that this rally is likely to be extended towards to 480 target. So at the current market price also, you can take a long positions at least 30 to 40%. If you're getting any deeps towards to 440, you can add on. I'm looking for a target of 480, and beyond that 500 levels can be tested. So it's a positive view from my end.
Positive on Vedanta. Shravan Kumar is calling us from Andhra Pradesh. Hi Shravan, how can we help you today?
Hi Alex.
Please go ahead.
So I'm planning to invest almost 3 lakh rupees into the Care and Heat Exchange or Joggle Prepared. Either of the two stocks I am planning to. Is it a right time to invest?
Okay, and what is the time
horizon? Do I need to
horizon?
wait for the correction? Almost 1 year horizon I am looking for.
Okay, all right. So the two very different companies. KRN Heat Exchange, by the way, was spoke to us not too long back. Asta, between Zaggle and KRN Heat Exchange, which would you pick?
For sure, KRN. First of all, the IPO came back in September, and it was at around the issue price of 220. So see what a jump we have seen despite such a volatile market conditions from 220 to 800 odd levels. This issue has made really wonders. And in fact, the results which came in after issue also, there was a 70% rise in the bottom line. That makes it an attractive counter as of now also. And the industry in which this company is working, because they are working into the heat exchangers, etc., and that is heat ventilation products. So I think this industry in itself is a great demand, and I think definitely this counter is good to go for a long run. So invest in this counter with a price target of 1050.
Electra Green is the next counter that we're talking about, and we've got Dasarathi who's writing in and asking whether they can hold. 1,350 is the buy price. Swati, on the charts?
Yes, Alex, you can definitely hold these long positions because the counter is trading nearby the oversold zone and it's showing a positive divergence on the RS as well. I believe that this momentum rally can be seen up to 1160 and then beyond that level 1240 can be seen. So even the interesting fact that it has formed a double bottom nearby 1010 levels. So by keeping that as a support levels, I believe yes, we can see some positive momentums and you can hold on your long position for immediate target of 1240.
Okay, hold with a price target of 1240. It is time now to hit the rapid fire segment, and ladies, you know what this means. We'll toss as many questions as we can over a span of 2 minutes at you. Do keep your answers as concise as you possibly can. Kanan from Chennai is asking the first question, asking about fintech companies specifically. He's not mentioned any, but Asta, any stand out? Would you buy, for example, a Paytm right now?
So Fintech, PV Fintech, are looking good to us in the shorter term.
Okay.
So that counter can be looked upon.
Okay.
Yes.
Jitendra from Udaipur is asking about Tata Motors. He's bought an average price of 443, quite an attractive price even at the current market, right? So Swati, on the charts, would you buy more, hold?
Yes, buy can be accommodated at the current price. I am looking for a target of 730 to 740. So it's a hold from my end.
Okay, Vishal Megamart, 113 is the buy price. Short term target is being sought. I do not know the viewer's name. Surendra wants to know. Swati?
I will suggest to hold on your long position since the counter is very trading nearby support level of 95. I'm looking for a target of 115 to 120. So it's hold from my end.
Okay, Bharat from Trishur wants to know, Bharat Dynamics, would you hold for a period of 5 years, long term? Asta?
Definitely a hold from our side, although initial price target can be set at around 1250 to 1300.
Shyam from Andhra Pradesh has bought PFC recently, 600 quantity at a price of 390 rupees. Is this a good stock to hold for the short term, Swati?
Yes, it's a good stock to hold on. I'm looking for a target of 420 to 430. Downside, it has a crucial support at 385. So by maintaining that stop loss, you can hold the long position.
Okay. Shortlisted Mankind Pharma is Satyan, and he's wondering whether to book losses in Poonawalla FinCorp and shift to Mankind Pharma. Asta, any view?
I think it's better to wait for some more time in the Poonawalla FinCorp because we are expecting this counter to show some positive upside from here. So the losses can be trimmed if he continues his holding in this Poonawalla FinCorp as of now.
Okay, Utkarsh Small Finance Bank, considerable quantity bought. Would you hold on? I think the price is 30. Asta?
Yes, Utkarsh Small Finance Bank is a hold from our side. Price target can be set at 23 to 24.
Okay, and that brings us to the end of the rapid fire segment and indeed on Ask Profit today. Asta, Swati, it's been an absolute pleasure as always having you on the program. Thanks so much for joining in. All right, and from Mahima and myself and the team that put this show together, no more bad jokes, I promise, at least from my end. I don't know about Mahima, but thanks so much. She doesn't do bad jokes. All right, that brings us to the end of Ask Profit. Thanks so much for watching. Do stay tuned. Lots more on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
Hello and welcome to KYC. This is a show designed to give the regular investor powerful, actionable insights into single NSE listed companies. And today we're going to deal over the next half hour with Mass Financial. It's around a 4,500 crore market cap company. It's an NBFC and an interesting one, to say the least. I'll start off with what the company does. It's a non-deposit taking NBFC registered with the RBI. This means that a lot of the funds that the NBFC garners is from borrowing. It can be bank borrowing, it can be borrowing through debentures and other securities. But that's largely how it funds its capital, equity and borrowing. And through that, it lends. So it's engaged in offering retail financing products. And retail financing products, I'm going to try to break that down further. So some of the products that it offers, one is the micro enterprise loan. It's a loan of up to 10 lakh rupees to small, extremely small, as the name suggests, micro enterprises. Largely includes retailers and traders. So 10 lakh odd is the kind of ticket size that it looks like. Then is the SME loan, which is to slightly larger companies, and these two baskets comprise the largest chunk in terms of the loan mix, which we will come to. But 5 crore rupees odd is the ticket size for that one, SME loans, and that is given to manufacturers, dealers, service providers and the like. So those are all your SMEs which garner all of those loans. Then there is CV loans up to 15 lakh rupees for new and used CV, which is commercial vehicles. Then there's two-wheelers, which is given to farmers as well as salaried individuals, and these are smaller ticket. And then there is salaried personal loans. Now this is the interesting one, because 10 lakh rupees is the personal, up to 10 lakh rupees is the quantum up to which salaried personal loans are given out by this NBFC. Last off is home loans, and this is of course purchase of both new as well as old houses, where they enable it through home loans. So that's broadly the mix. Now let's talk about the loan mix, and there you go. You'll see 40% to micro enterprises, 36.5% to SME. So 76.5% of the loans, which is 3/4 of the loans, go for business purposes, but to the small trader as well as to the small manufacturer. So that's what the target cohort is. Two-wheelers, salaried personnel, commercial vehicles, those are some of the other loans that they do, largely comprising the rest. That's how the loan mix is essentially shaping up for this one. Let's look at the growth though, because that's where it starts to get interesting. Salaried personal loans on a low base has grown at 69% YOY. CV has grown at 46%, SME at 24%, and then you have two-wheelers at 21%, and micro enterprises just about 9% growth, 8 point odd. So therefore, that's how the loan growth is really shaping up. So the largest chunk, which is 3/4 of the loan base, is growing at just about a 10% kind of a growth clip. That's net the point I'm trying to make here. How are they spread out? 13 states is what they are covering, 14,000 locations. They have NBFC partnerships, around 191 partnerships, which is what they've established, and they have 202 branches. This is broadly the way in which they are spread out. They haven't given numbers with regard to how many customers they have, etc., and how quickly the customer growth seems to be clocking. And some of those questions we'll obviously ask and quiz management and try and get a perspective as to how quickly that growth is and what are their plans going forward. So that's how it is. Now let's talk about metrics, because for each company we try and assess the company on the basis of certain financial metrics that the company has clocked, and this is what we're going to look at when it comes to this particular company. Income statement, balance sheet, operational metrics. Operational metrics are largely return ratios and the like. Asset quality is the other piece that we look for, and that's of course including your NPA ratios and how those have shaped up over cycles. Shareholding pattern, whether the promoter does have skin in the game, and if so, how much. Street cred, how the stock has performed over the last 3 to 5 years, and we also look at street coverage. Is it well covered by the analyst community, and valuations. Therefore, trying to give you a full summary on whether you should invest, should not invest, and everything with regard to this company. Let's start off with the income statement. It's an interesting one, but mind you, it's a small base that they are operating on. 336 crore was the FY22 net interest income number. That's gone up to around 610 crore in FY24. So it's a healthy kind of a growth, no doubt about it. In the 2 to 2.5 years, it's grown at 30 to 35% on the NII front. Of course, this year you're seeing some bit of tailwind with regard, or headwind with regard to margins, because your cost of borrowing has gone up given that the repo is higher, and therefore they need to therefore have higher service costs with regard to their borrowings. But you look at the profit after tax trends, right? The PAT has largely gone up by 25% YOY. Now, the only reason why I give this a neutral, if at all, is two reasons. One, your provisioning has gone up in comparison to FY22 at 34 crore. Provisioning currently is roughly 90 crore, and in fact, even for the 9-month period, the provisioning is more than 80 crore for the 9 months FY25. So your provisions number has seen a bit of a spike. The other piece is with regard to profit after tax. So while your ROA number is fairly healthy, the profit after tax has grown at 25% YOY. Now, for a company of this size, ideally growth should be stronger, and therefore the neutral rating here. Nothing bad about the growth numbers whatsoever, but if you have a smaller base, should you grow faster is really the question here. Now, in terms of the balance sheet as well, the AUM growth, which largely talks about the way in which your lending happens, the rate at which lending has happened. Look at the trend and look at the way in which it's gone about. It was at 6,000 crore in FY20. It dipped to 5,372 crore in FY21 because of the COVID year, understandably. Thereafter, it's just about doubled. So from FY20, it's doubled over a 6-year period to FY25. And therefore, would you say that it's a very, very healthy growth? Not really, given the kind of base that it has. And therefore, a neutral rating on this one. Let's look at some of the other metrics as well. The borrowing number. The borrowing number has gone from 3,100 crore to 7,000 odd crore. So it's gone up nearly 2.5x. Equity also has gone up in healthy proportion, nearly doubled. And this is cumulative equity shareholders funds. It includes both the profit element as well as your securities premium. And what we are seeing in 9 months FY25 is a fresh fundraise as well getting factored in to that profit number, which gets added to your equity shareholders fund. So that's what you're seeing, and that's why you're seeing that spike. But other than that, it's a fairly steady kind of journey. If there's a positive to be taken out of this, the equity journey has been extremely steady. Book value has been continuously growing year after year, no matter what. Even in the COVID first wave, even in the COVID second wave, we've seen regular increases and regular profitability being clocked by this company, and that's what's really standing out. Capital adequacy standing at 25.34% after the equity raise which happened earlier this year, June 2024. Earlier this financial year is when the equity raise had happened. It was through a QIP, a 500 crore equity raise had taken place. Now, so that's the first two metrics, the income statement and the balance sheet. That's how it stacks up. In terms of how is the operational metrics stacking up, and this is where it starts to get tricky, because very, very healthy numbers overall. Let's look at the ROA number, the return on assets largely indicating your profitability versus your overall assets. And therefore, that number is being quite range bound in that sense, between 2.7 to 2.9%. Again, very healthy overall in terms of your ROA. And a steady ROA, I would say. More importantly, it's a very steady kind of ROA number. They're not fluctuating too much when it comes to ROA. Over the last few years, that's the trend that's playing out. This company got listed in 2017, by the way, and it's not given phenomenal returns, but the ROA numbers have been extremely steady since that point. So credit there. The borrowing cost has largely been controlled. It's a sub 10% kind of borrowing cost that they even currently continue to operate with. So that's the way in which borrowing cost is evolving. Mind you, some of the best NBFCs, talk about a Bajaj Finance, they have a sub 8% borrowing cost. So sub 10%. for something like an NBFC which has just about a 10,000 crore AUM, not bad at all. Last off is your cost to income. Your cost to income has gone up and in a very steady fashion. From 27.3% in FY22, it rose to 31.5% to now 32.7%. Now, I am beginning to wonder whether there is still scope for a further increase in the cost to income. And if that were to happen, you may well see profit compounding happen at a slower rate than the AUM compounding. So that's one thing that you may want to look out for. Okay, now let's move on quickly to the asset quality, and this is again where this one stands out. You look at the numbers for the last, not just these numbers, last 4 years. I'm talking about pull the numbers for the last 20 years, and I'll tell you very, very quickly a couple of metrics. During the COVID first wave, the industry had a 6.4% GNPA. This company had a 1.56% GNPA. During the COVID second wave, this one had a gross stage 3, which is gross NPA of 2.3%. The industry had a gross NPA of 7.2%. In the last 6 years, the GNPA ratio hasn't gone above the 2.4% mark. It's the first time it's gone above 2.4%, and it's never gone above the 2% mark, the NNPA number, currently sitting at 1.62%. So that's the net NPA ratio. Again, very, very controlled overall in terms of asset quality dynamic, which is something that stood out for me. A clear thumbs up on this one. Let's talk about shareholding. We'll talk about the promoter holding first. There's been a bit of a dilution in June, and therefore promoter holding has fallen from 73% to around 67 odd percent. Largely otherwise, you're seeing shareholding remaining quite steady in that sense. So there's good promoter ownership within the company. A clear thumbs up here on this count. Next is the street cred. Now, even when I'm zooming out over the last 5 odd years, the stock hasn't given phenomenal returns. I'll just pull out the stock chart, and while we're at it, just look at some of the numbers over the last year or so. And you won't see that as something which is very impressive. But given the fact that you've seen small and mid caps also underperform, you're largely seeing these kind of numbers play out. But I'll just quickly highlight a couple of numbers. In November of 2020, the stock was at 350, which it hasn't scaled again till now. So really not an outstanding set in terms of returns to shareholders, but of course fresh issue also came in the middle of all of this. A QIP was done, so maybe something to be kept in mind. But in terms of returns, hasn't been the best. A neutral rating on that count. Overall, you're seeing year to date negative 10% return, and the last 6 months as well negative 17 odd percent return. So that's how it's playing out with regard to street cred. Let's talk about street coverage, and this is where again there's a bit of a standout. There are 5 analysts tracking the company, so not too many. All of them have given it a buy rating. Target price being I believe 350 rupees per share, and you're also seeing a return potential of 44% on this one. So very, very strong when it comes to return potential. Analysts overall very positive with regard to the counter, and therefore a thumbs up with regard to this one. Last off, I'll talk valuations. 2.2 times is the current price to book. 1 year forward price to book is just about 1.5 times. Your 5-year average price to book is 2.9 times. So it's double of the current 1 year forward price to book, something to be kept in mind. The other piece is, let's talk about peers. The 1 year forward for peers, Ugrow Capital is at 1.3 times, Capri Global is at 2.1 times, and 5-star business, and this is something we've calculated because there isn't an estimate available, is at 3.3 times. So versus peers as well, this one somewhere seems to be standing out when it comes to valuation. So something to be kept in mind overall. Some of these are faster growing as well. Ugrow, Capri Global are faster growing as well and stronger in terms of growth dynamic. So maybe something else that you should also keep in mind while you're looking at relative valuations. But broadly, this is how it stacks up. Let's quickly look at all of the metrics and how it stacks up with regard to our rating. So neutral on income statement, a neutral on balance sheet, a thumbs up on operational metrics, asset quality, thumbs up, shareholding, thumbs up, very well held by promoters, neutral on street cred. Street coverage thumbs up, valuation thumbs up. What stands out for me here is that there's no thumbs down on any of those metrics, and a 6.5 on 8. That's a very, very healthy rating overall for a small NBFC. But let's quickly go across. We have with us Kamlesh Gandhi, Chairman and Managing Director at Mass Financial Services, joining us this morning. Kamlesh, firstly, good chatting with you. I want to first try and understand from you what helps you maintain the kind of GNPA and NPA ratios across cycles. What is it fundamentally within the system in terms of processes that you have, which the industry does not seem to have?
Good morning, and I had an opportunity to go through your complete analysis of the company. It was very nicely done.
Thank you.
So thank you for the same, and congratulations for a very detailed analysis.
Thank you.
So first I'll come to your question and what we do differently. That is, we don't do anything differently, but we follow the things fundamentally in such a manner that we extend credit where it is due. It is a very simple statement, but we have lived and toiled hard for 30 years to really put this statement into practice. And when I talk about extending credit where it is due, it covers many facets of credit dispensation. And that is what we have been very, very keen to do over all these years. Secondly, where you see that the steady growth and the consistent growth, which in some of the analysis and which also you alluded to, that for this size of the company, you should grow faster. That is where I would like to add a point that it is always prudent for the lending companies to discover growth rather than determining growth, and put profitability, return on assets, and the asset quality at the top priority, rather than just growing faster at a smaller pace, at a smaller base, even at a smaller pace. So if you say that fundamentally we have taken a lot of time, fundamentally we have seen to that we prioritize asset quality, profitability over just the AUM growth. Because let me tell you that we are going through we have selected a difficult path for us. Now, for a lending institute to grow at faster pace is the easiest thing what a lender can do, if you don't have to balance between growth, profitability, and the asset quality. So a consistent growth, discovering growth at the marketplace, extending credit where it is due, even during the cycles which are very benign. If you say that before 1.5 to 2 years, SME was at the most benign cycle, but even during that time, we did not exceed our growth. And that is where we are reaping the benefits of having a controlled asset quality, as I talked to you.
Right, Mr. Gandhi. And what about salary personal loans? Because that's where you're growing the fastest at this point, off a low base for sure. But any concerns with regard to asset quality there? And your GNPA is at maybe a 6-year high. Is that at all a concern for you or stakeholders, or is that par for the course?
If you say salaried personal loan, as you very rightly remarked, it is on a very smaller base. We continue to maintain that product, we don't want to exceed more than 10% of our AUM. So we are somewhere around 6 to 7% of our AUM as I talk to you right now. So that we will continue with that strategy, that we will keep it below 10%. And whichever product we do and wherever we do the capital and the debt allocation, we are circumspect of the fact that it stands the litmus test of risk-adjusted returns. So salaried personal loan is no different. There also it has to stand the litmus test of a risk-adjusted return, and so far we are doing well in that. But as I shared, it will be within the 10% of our total AUM.
Right. So right. So please go ahead.
You had what was the second question?
So with regard to your GNPA coming to 2.41%.
Yeah. So if you see the industry scenario currently, I think we have been navigating through one of the toughest scenario currently in a different way comparable to the COVID scenario also. So given the fact that the borrowers whom we serve are facing a lot of headwinds in terms of their cash flows, and many of them, because of the market dynamics, are over leveraged also. I would like to state that these numbers are among the best what one can deliver. So at 2.41 might look statistically at the top by few basis point, but nothing to worry, because once again, if you see that while maintaining this GNPA and adequate provisioning and write-off, our ROAs has not been affected. So we have stood the test of the risk-adjusted return even during this tough time.
Right, sir. So, sir, right. Sorry, please go ahead.
No, that's all.
Right.
Yeah.
So, sir, growth as a number is not something you'll look at. You'll look at asset quality as a number, as a benchmark. But then how best do we benchmark a Mass Financial? Do you look at asset quality and ROA, and would you therefore say that ROA will be above a particular target number? Is there something internally that you'll have in mind that y'all won't go below in terms of an ROA number?
See, I've always shared earlier with in our earlier discussion also that over the years and in the coming years, we are strategically targeting growth at anywhere between 20 to 25%. We are not a quarter-to-quarter company, but if you take a 3 to 5 years view, we will be always there between 20 to 25% in terms of our growth. In terms of ROAs, we will be maintaining anywhere between 2.75 to 3%. Given the positive headwinds on interest rate reduction and all, we can even exceed 2.75%. So I'm talking range bound between 2.75 to 3%. So our main target is to grow anywhere between 20 to 25%. And let me add here that when we talk about a growth of 20 to 25%, it means doubling your AUM every 3 to 4 years. So currently at around 10,000 crores, and if we double it every 3 to 4 years, within next decade, this company will look a very formidable in size while maintaining the asset quality and profitability.
Yeah, absolutely. So where will that growth come from, Mr. Gandhi? The two pockets where you lend to the most, micro enterprises loans as well as SME loans, the growth has slowed. And therefore, what will the next phase of growth pocket look like? Will it be a different geography? Will it be a different cohort of lending? Where will you go?
So if you see on that, I have given that very clearly for the clarity of the investors and all the stakeholders, that still more than 60% of our growth comes from our MSME funding. If you see on Y growth, 60% is contributed. And if you dissect the numbers, 60% of the growth is coming from MSME. So that will continue to grow through expansion of distribution channels across the states where we work, and also covering the new states of operations as we go along, accompanied by the wheels portfolio, that is commercial vehicle, used car and two-wheelers, and also a contribution from the salaried personal loan. But majority of the growth driver will be SME within the MSME segment, because there the ticket size is more and the tenures are also long.
Okay, and therefore, I want to quickly touch upon the fact that your cost to income has come in slightly higher than what has been the long-term average. You've come in around 32.5%. Is that a one-off there? Will it come back off? Is this the normalized number now, or do you expect it to go up? Because if it goes up, that starts impacting your ROA, and therefore trying to understand.
So this also have been shared a number of times, that while cost to income may increase depending upon the product distribution and the product configuration from time to time, but at the end of the day, we would be working strategically that we maintain our ROAs anywhere between 2.7, 7.5 to 3%. So if the cost to income ratio is increasing, the yields will also increase correspondingly. So we would like to maintain the ROAs at a steady pace. What is shown here, that from 22 we were 2.71 to currently 2.88. So it will be range bound between 2.775 to 3%, irrespective of the cost to income ratios increasing marginally over a period of time, as we increase our distribution, as we increase our retail distribution, and depending upon the product configuration as we go ahead.
Okay, thank you so much, Mr. Gandhi. Unfortunately, all the time we have on this show, but very, very interesting talking to you, because you're one of those few players which are really standing out in this very difficult cycle. But hence we've kind of tried to break this down. So interesting company, and thank you so much for giving us that perspective. But with that, completely out of time on this edition of KYC, know your company. Stay tuned to NDTV Profit. For now, from all of us, thank you. Stay tuned. More on the other side. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various firms.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they
and welcome. Good afternoon. This is Markets at 12 and I am your host Malika Mishra. Let's take a look at how the markets are doing at the moment. The Nifty 50 and the 30-pack Sensex are both up over 1%. The Nifty has surpassed its key resistance level of 22,600 and is currently trading around 22,700 levels. Let's also check the 30-pack Sensex, and that has reclaimed its 75,000 mark and it currently hovers around 75,060 and is up about 1.2% as well. Now, there's more action and enthusiasm in the broader markets if you see, because key indices such as the mid-cap 150 and the mid-cap 150 is also above 1.5% up, and the Nifty small-cap 250 is around 2% up. Let's take a look at the main contributors to this green wave, and you would see that ICICI, HDFC Bank, L&T, Infosys are up and above. ICICI Bank is actually, pulling up the markets by over 45 points. When you see on the losing side, you see three names, largely Bajaj Finance, Bharti and BPCL, sort of dragging and pinching the index. And Bajaj Finance has announced buying 26% stake of Alliance in the insurance joint venture Bajaj-Allianz General Insurance Company and Bajaj-Allianz Life Insurance Company for over 24,000 crore rupees, and that's why we could see that kind of impact happen. And we will bring you more details, of course, on this particular company and what's happening around later on in the show. Speaking of the top Nifty 50 gainers today, you would see Asian Paints, M&M, Hindalco, Tata Motors, Shriram Finance, ICICI Bank are all up and leading the pack. Again, you have three names. The basket today hardly has any losers, but you have Bajaj Finance, Bajaj Finance and BPCL drooping down. Let's catch a glimpse of the sectoral heat map as well. And yes, you see everything in the green. It's a green picture with India VIX clearly down 1.12%. So India VIX, the volatility index, is indicating a good performance by the Nifty 50, and these sectors are leading the pack at the moment. Let's also take a look at the market breadth to get a sense of how the market is breathing at the moment, and you would see that less than a quarter of the total stocks are declining, with over 1,000, in fact over 2,000 stocks advancing. So the advance decline ratio stands skewed in favor of the gainers, clearly posing a healthy breadth at this point in time. Let's also check a couple of interesting stocks that have been buzzing in trade. Let's see how Tata Consultancy Services TCS is doing at the moment, and the stock is up about 1.5%, and this comes after Citi reduced its target price to 3,200 for the stock from 3,900 earlier. It has maintained its sell rating on the stock, so of course it's not reacting negatively, but it's just about 1.5% up. Let's also take a look at Vedanta. Now, this share price has also been booming, 2.22% up, after Chairman Anil Agarwal said that each of the company's 4 demerged entities has the potential to grow into $100 billion worth of business. And lastly, Ircon International. This was one stock that gained massively early morning today, and now it is hovering around 5.7%. So it's up around 5.7%. It's priced around 146, and this comes after a joint venture of the company received order worth 1,096 crore from the Meghalaya government. Moving on to today's big brokerage call, Morgan Stanley has revised the target of Bajaj Finance to 9,300 rupees, and Harsh is joining us with all the details.
Well, roughly a 10% upside, and what they're saying is there is one in particular positive catalyst on this one. It's been a rank outperformer, mind you. When you're looking at it over the last maybe 3 to 4 months, the kind of move on the stock versus the correction that we've seen on the Nifty as well as in the broader indices is telling. And therefore, Morgan Stanley is suggesting that there is a further catalyst, which is going to be Mr. Rajiv Jain, who's the current Managing Director and CEO at Bajaj Finance. He is likely to retire, or term is likely to end on the 31st of March. Going to likely get replaced by Anup Saha, who's the deputy CEO at this point. Now, in terms of what they believe is the key positive here, for a while now, the market has been pricing in some negativity with regard to where and what role will Mr. Rajiv Jain play in the larger Bajaj Finance group or FinServ group. and they list down 3 possibilities. One, he continues to remain with Bajaj Finance in more of an advisory role and maybe not a leadership role. Second, he will both play a part in Bajaj Finance as well as FinServ. And third, he will only play a part in Bajaj FinServ's growth going forward. Bajaj FinServ being the holding company. Now, in terms of these 3 possibilities, the first 2, where he plays some role in Bajaj Finance, will be viewed positively by the street, is what Morgan Stanley is saying. They are looking at this positively from a perspective that there is a good likelihood, basis the Q3 conference call, that Rajiv Jain will play a role in Bajaj Finance in some form or shape, whether he plays a role in Bajaj FinServ or otherwise. The key negative here could be that he only plays a role in Bajaj FinServ and not Bajaj Finance. Now, in terms of valuations, and this is where it starts to get interesting, the trailing 12 months FY24 price to book is 5.8 times, FY25 is 5.5 times, and FY26 is 4.5 times on a Bajaj Finance.
Thanks for that, Harsh. Now, another stock that is in focus is Vedanta. Now, this comes after chairman comments on the demerger, and he said that the demerger will create 4 new natural resource focused entities, and my colleague Mika is joining us to give us more details on the same.
Yeah. So in terms of the chairman letter to shareholders, Chairman Anil Agrawal said that the ongoing proposed demerger will help create 4 new natural resource focused entities, and he expects the newly demerged companies to grow into $100 billion company. He does expect the current listed Vedanta Limited entity to continue being a powerhouse in its own right, and the new demerged companies will have independent management as well as distinctive capital structures and the right asset base. And he notes how the demand for the products of each of the demerged companies is the need of the hour. In terms of Vedanta's investment return, well, he stated how the 5-year-old long-term investor has seen a return of 4.7 times till date, and the dividend yield of 81% in the last 5 years is the highest amongst its peers. A little bit about the Vedanta demerger, well, the resultant entities would be the following. One is Vedanta Limited, which will include Hindustan Zinc, Zinc International, and the copper business. Second one is Vedanta Aluminium, which will include the Balco smelters, the Lanjirgarh Alumina Refinery, and the Sijimali Bauxite Mine. The third one is Vedanta Oil and Gas, which is currently the Khan Oil and Gas business. The fourth one is Vedanta Iron and Steel, which includes the iron ore mines in Goa, Karnataka, Liberia, as well as the ESL steel plant. And lastly, you have a Vedanta Power, which includes the merchant power plants owned by the company itself. Lastly, in terms of how big the Vedanta demerged companies could be, well, as per values in terms of market cap noted at the start of the year by MK Research, Vedanta Limited could have a market cap of around 1.02 lakh crores, Vedanta Aluminium at 1.1 lakh crores, Vedanta Oil and Gas at 31,600 odd crores, Vedanta Iron and Steel at 19,280 crores, and Vedanta Power could be the smallest company in terms of market cap at 8,700 odd crores.
Thanks for that, Mihika. And now, viewers, another stock that has been on our radar is Signature Global. Nuvama has now initiated coverage on the counter with a buy rating, and my colleague Anushi is joining us to tell us more on this particular coverage.
Right, so if you look, Nuvama is pretty bullish on Signature Global. Now they've come out with a report initiating a buy call on this counter, and this is at the target price of 1,436 that we are looking, which implies about a 35% of an upside from yesterday's closing price, which is there. Now, a couple of factors and reasons that they've highlighted. Firstly, the past trajectory, if you see the sales bookings, they've seen a growth of around 8 times over the period of FY21 to 9 months FY25 period. So strong growth trajectory in terms of pre-sales which have been there, and the note expects this to continue with a pre-sales CAGR of 21% continuing between the years FY25 to 27. Other than that, Gurugram market is one of the attracting land banks that they have. It's a low-cost land bank and expect further expansions over here. Potential entry into Noida and Delhi shall be a re-rating trigger for the company also going forward. Other than that, even if you look at the debt to equity levels, they remain on the healthier side. Balance sheet check also suggests that, and the company is on its way to achieve the net cash status by FY27 end as well. But also to talk more about what has been happening in Signature Global in terms of their guidance given. If you look at the pre-sales, they have reached the level of 8,670. This is crore versus 10,000 crores. So they've already achieved about 87% guidance in the 9-month period itself. Even launches, they are on track track to achieve the launch guidance that they've given, which is 16,000 crore, of which they've achieved 13,500 crore by 9-month FY25. Collections and revenue recognition, they've seen a 55% and a 67% growth respectively. So this is the overall perspective that is there on Signature Global, and how the entry into the Noida and Delhi market could be a re-rating trigger for the company going forward as well.
Okay, thanks for that, Anushri. And viewers, as I mentioned before, the Bajaj Group will be in focus today on the back of Alliance's intent to exit insurance partnership. Now, what could this mean for Bajaj's insurance business, and how will this shareholding exactly translate? Let's bring in Soumi to tell us more.
The 24-year-old partnership between the Alliance Group and the Bajaj Group has come to an end, and Alliance will be exiting from the existing insurance companies, that is the Bajaj General Insurance business and the Bajaj Alliance Life Insurance business. Apart from that, they have also said that once this JV is terminated, both the parties are independent to pursue their insurance strategies in India going forward. So if you look at the consideration, firstly, Alliance Group is asking for around 2.6 billion euros for its 26% stake in the general insurance business and in the life insurance business. Now this comes to around 13,780 crore rupees for the general insurance business and close to 10,400 crore rupees for the life insurance business. How this 26% stake will be divided? Now 1.01% will be taken up by Bajaj Finserv, 19.95% will be taken up by Bajaj Holding, which is a listed company, and around 5.04% stake will be taken up by a private entity of Bajaj Group, that is Jamnalal and Sons. And post this transaction, Bajaj Finserv will own close to 75.01% stake in both the insurance entities, that is the general insurance entity and the life insurance entity. How will the funding happen for this? Now Bajaj Finserv will need close to a cash of around 940 crore rupees, which is much less compared to their current cash balance of around 3,500 crore rupees, while for Bajaj Holding they will be required cash of around 18,600 crore rupees for this transaction, while their current cash balance stands at close to 19,000 odd crore rupees. Now when it comes to the timelines and approvals, the intended timeline or the stated timeline by Alliance is around July 16, 2026. This is by when they expect this deal to complete, and when it comes to approval, they will be needing approvals from CCI, IRDI and other regulatory boards as well. Now comes the most important part, that is the valuation. Now this deal values the life insurance business at close to 40,000 crore rupees, while the general insurance business is valued at close to 53,000 crore rupees. Now this is a discount compared to what the street has been giving the value or assigning the value to both these entities, that is the life and the general business. Now for the life business, an average of 7 broking firms value the entity at close to 49,000 crore rupees, while the general insurance business is valued at close to 63,000 crore rupees, and this deal is happening at a discount of nearly 14 to 19% based on the value asked by Alliance from the Bajaj Group. Now lastly, what could now happen going forward? Now this transition from Alliance to Bajaj will give Bajaj Group a better control operation wise. It also removes the long pending overhang that the street has been expecting an exit of Alliance Group since October, so that overhang also goes away from Bajaj Finserv share prices. But on the flip side, this could potentially also mean that Alliance could now pursue their own insurance strategy in the country. Given the post the 100% FDI approval, they could start their own insurance both in the life and the general business, and they could also go ahead and tie up with any other financial service entity, and this could lead to higher competition when it comes to the life and general insurance business going forward.
Okay, and now we have Shubhana, who's going to be explaining us an update that's just come in, that the National Payments Corporation of India, which is also called NPCI, is going to eliminate request payment feature. Now to tell us more and what this exactly means, we have Shubhana.
Hi. So yes, in order to actually curb the rise in digital frauds, the NPCI, which actually looks after retail payments in India, is said to have been in talks with bankers to eliminate the pull transaction feature through UPI payments. Now, what exactly is happening is that a pull transaction is a functionality that when a merchant sends a payment request to a customer, that is called a pull pull transaction because you're attracting a customer, and a push transaction is when a customer makes the payment to a merchant by way of scanning a QR code or any other means. So through this pull method, there was a lot of rise in digital transactions that has been taking place. So the NCPI is said to have been in talks with bankers to eliminate the pull transaction functionality so that the fraud instances could actually come down. Now we've reached out to NCPI and they've declined to comment on the matter. What bankers are saying that with this move, the genuine transactions that were taking place could get impacted. The ease of making such payments could get impacted, but the propensity to such frauds would come down drastically. It's also important to understand that the Reserve Bank of India has been trying to come in with measures, and as digital payments have been on the rise, the digital frauds have been on the rise as well. Bankers are also telling us that these discussions are in early stages, but nothing has been finalized yet on the implementation.
Got it, Shobhana. Thank you so much for bringing us those details. PB Healthcare is all set to enter healthcare segment with their arm PB Healthcare. We caught up with Yash Dahiya, Chairman and Group CEO at PB Fintech, where he spoke about this new business venture and the way forward for the company. Listen into his comments.
In those 400 hospitals, you are able to give a better experience. Now, and you have the general practitioner who's advising the customer on which of these hospitals they should go to. Customer does have choice. They may have a choice of 2-3 hospitals, but it's not unlimited choice, right? And next, what happens is in some of the hospitals, you set up essentially what you call demo units or demo performance units, where you integrate technology a lot more and you control the customer experience a lot more. And you see if because of that, you can get better customer outcomes, better customer experiences, and even more control over costs than through just simple partnering with a narrow network. So I would say out of the 200 or the 400 hospitals, maybe 1 or 2% will be owned hospitals on day one, and they will most likely be greenfield. But the remaining 60% will be held by other investors, other financial investors. We are not at liberty to mention them right now, simply because we are under confidentiality agreements. And I think once they are done, once the ballot happens, once the postal ballot happens, about 90 days post that, the entire transaction, including the phase 1 and phase 2 of investors, would become public, and or at least would be known. And all I can say is they are very high quality investors, people who understand the healthcare industry a lot better than we, as in PB Fintech, does. In fact, immensely more. People who have international operations of doing exactly the same thing, of building HMOs for the insurance industry, etc. So yeah, I think people should be quite glad to see who the partners are once they come on board. The claims experience becomes better and more controlled, and they are more integrated into the PB Fintech, into the Policy Bazaar websites. Then the Policy Bazaar customers will hopefully have a much better experience. And that is the reason PB Fintech is doing it. But yes, PB Health, of course, there are financial investors who are very smart financial investors. They have different time frames. And there's a reason why some of them invest and the whole world is not expected to invest. I must share one thing with you. The oversubscription was about 3 times.
And another stock that you might want to keep your eye on is Varun Beverages, as Citi maintains buy rating on Varun Beverages with a target of 750 rupees with an upside potential of 50%. I have my colleague Mahima standing by to explain what makes Citi so bullish on Varun Beverages.
Right. So what Citi has actually done is they've opened a 90-day catalyst watch on Varun Beverages and given a target price, maintained in fact a target price of 750 rupees, which poses an upside of 50% from its yesterday's closing, but the stock is already up and above in trade today. Now what they're saying is that the stock has been beaten down 25% year to date, and this is because investors are concerned about the heightened competitive intensity which is coming in from Campa Cola. But what they're saying is that while there are no noting that Campa Cola's aggression pricing and distribution marketing initiatives are impacting the market shares of Varun Beverages, but this will be restricted to local and regional brands too, and over a medium to long term, in their opinion, the overall portfolio might be less impacted. In terms of Varun Beverages' aggressive consumer promotions, they should limit the impact to the volume growth, and they believe that the stock reaction is overdone at the 47 times P. The risk reward seems favorable according to them, and this is given the growth drivers that Varun Beverages already possesses. They've reiterated buy and they've opened a 90-day catalyst watch, which is a positive catalyst watch, and they expect strong near-term growth led by intense summer season as well. But they're also saying that there are levers to manage the margin pressure, which includes improved product mix, the overall benefits from lower crude prices, support from PepsiCo at HCCB, and this should overall drive the improving profitability and reduce risk that includes the prolonged pricing as well. So these are the reasons what makes Citi bullish on Varun Beverages.
Got it. So that means Varun Beverages could definitely take advantage of a hot summer and improve margins and especially growth. Now, all of you may have heard of the proverb that all that glitters is not gold. Well, this might be true for a company called Senco Gold. The stock has hit 18 months low. It's down nearly 70% from its October highs. And Mahima is standing by again to explain what's going on with this company.
Right, so Senco Gold is definitely losing its shine as of now, but will it be able to retain that shine or not? We'll have to wait and watch for that. But right now, the stock is trading at its 18 months low, and it's almost 70% down from its October high of 772. In terms of stock, it's trading lowest since September 2023, and it hit a record low at 179 on July 21st of 2023. And it made its stock debut in July 14th, on July 14th. That is 2023. Now, what's not working for the company? Let us understand it one by one. Well, margins are under pressure, and this is on the back of declining profitability on lower demand and high gold prices. There is slower store addition which is taking place. The same store sales growth overall is lower as compared to its peers. In terms of impact of volatility in hedging is also being seen. The EPS is lowest since past 4 years, and overall inventory days have increased to 150 days, and lowest ROC in the past 3 years is seen at 3.7%. Now let us understand each pointer one by one as to what the trends are looking like. In terms of EBITDA margins, they're declining due to there is a reduction in overall stud ratio. The sales of studded jewelry has dropped versus sales of plain gold jewelry, which is why the overall margins are being impacted. There is higher export sales which is happening, and overall increase in operating expenses is also leading to pressure on margins. Now, in terms of the overall trend of margins, if we see, the guided range was between 7 to 8%, which has been maintained in FY23 as well as FY24, but that has come down to 6% when it comes to 9 months FY25. So the margins overall are below the guided range of 7 to 8%. Moving on to the profitability metrics, which is under pressure overall. Q3 FY25, we saw an overall decline of 69%. The profit came down to 45 crore. This also included a one-off with regards to the custom duty changed, but over and above that also the net profit has been on a declining trend. Q2 FY25, we saw hardly a growth of 1.5%, which has in fact seen a growth of around 82% in Q1 FY25 and around 7% in Q4 FY24. Moving on to the other metric as to what is impacting this overall profitability. Well, a couple of reasons. There are losses in the gold metal loan hedging, which has been the major driver as to why profits have been impacted. Hedging was around 95% in Q1 FY24, which has come down to 85% in Q2 FY25. In terms of losses, this is also in terms of hedging due to high gold prices, and this is also on the back of one-time custom duty, as I mentioned earlier. Lab-grown is another aspect which is overall impacting the profitability. Lab-grown diamonds are kind of affected due to the kind of affecting the overall studded ratio, which is why the margins as well as the profitability is going down. And in terms of jewelry margins also, diamond jewelry margins are also being impacted on the back of that. Now, in terms of store additions, there has been lower store additions in this 9 months FY25 as compared to FY24. There were 23 overall stores added in FY24, but as of 9 months FY25, only 12 stores were added by Senco Gold. Moving on to the same-store sales growth. Now, in terms of same-store sales growth, of course, it's a double-digit number, 14% for Senco Gold in Q3 FY25, but as compared to peers, the same-store sales growth is much less, because Titan recorded a same-store sales growth of 22%, and Kalyan Jewellers overall in Q3 FY24 recorded a same-store sales growth of 24%. So same-store sales growth as compared to peers is lower for Senco Gold. In terms of the overall promoter and FII's holding also, that has been on a declining trend. As of September 2023, promoters were holding around 68.5%, which has come down to 64% in December 2024, and FIIs were holding around 14.5% in September 2023, which has come down to almost 8.9% in December 24. So promoters and FII holding is also coming down, which is concerning for a company like Senco Gold. In terms of EPS, the trend has been on a declining trend. In terms of FY22, it stood at around 12 rupees, which has come down to around 8.9 rupees in the past 12 months trailing EPS, if we can call it. Moving on to the inventory days, that has gone up for the company, which is also kind of impacting the overall operating expenses, which was 126 in FY22 and has gone up to 150 days in 9 months FY25. So inventory overhang is also a concern when Senco Gold is concerned. And lastly, in terms of the ROCE, that has been the lowest in the past 3 years. FY22, it stood at around 19.4, which is still below the threshold mark of around 20 to 25% range. But that has come down to 3.7%, which is significantly lower as compared to where it was in FY22. So ROCE is also a concerning metrics to watch out for when Senco Gold is concerned. Lastly, in terms of what to watch out for, well, is there value? Companies saying that they will open another 8 to 10 stores in Q4 after a weak demand is what the company has guided. It will be something to wait and watch out for, whether they'll be able to open another 8 to 10 stores in just Q4. They are expecting 18 to 20% growth despite the weaker demand that they've seen. And in terms of the overall question as to how will they aim to normalize EBITDA margins from 7 to 7.5% in Q4 is the real question to ask. And overall, will the management be able to achieve the overall FY25 guidance that they've guided for is the question that remains to be answered yet. But this is the overall view as to why things are not looking nice for Senco.
Right, Mahima. Thank you so much for bringing us those details. And definitely there are a flux of factors that could be, posing the company in a weaker spot at the moment, especially as compared to how it has performed in the past couple of quarters. Well, with that, viewers, that's all the time we have on this edition of Markets at 12. But do stay tuned to NDTV Profit for more news and updates.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown. For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Benchmarks trade higher, Sensex reclaims 75,000 mark, Nifty is up almost 1%, all sectors stayed in the green with ICICI Bank and HDFC Bank leading the way.
Alliance to exit joint venture with Bajaj Group in a deal worth 24,180 crore rupees. Company says it will consider options for deployment of sale proceeds that support the company's strategic ambitions. The stock is down more than 1% in trade today.
Gold prices hit all-time high of $3,012 per ounce, hit life high for the second time within a week. Global uncertainties and economic concerns fuel the safe havens demand.
PVR Signature Global buzzing in trade after Nuvama's positive note. Signature Global gets a buy rating with a target price of rupees 1,436. Brokerage firm maintains a buy on PVR with a target price of rupees 1,765.
Many elements of the Ukraine-Russia deal have been finalized, but much remains, says President Donald Trump ahead of the Trump-Putin talk.
Israel launches new strikes on Gaza after hostage release talks stall. The strike comes after nearly 2 months of a ceasefire and kills more than 300 people.
Astronauts Butch Wilmore and Sunita Williams successfully undock from the International Space Station, begin their descent towards Earth. Hello and welcome. Welcome to Profit Buzzers. This is NDTV Profit. My name is Puneet Zaveri and with me for the first time is Varsha. It's been a very interesting trading session today. We've seen most of the sectors being in green and that's been one of the major positives of the markets today. Let's quickly pull up the Nifty 50 as well as see what the indices are doing today. We have seen a positive session. We are almost at just a tad below the day high of about 22,781 levels. Currently trading 60 points below that, but it's been a good day starting off the week yesterday with a negative note, but today has been a good session. Let's quickly look at the contributors as well for the Nifty 50 and we will see some key banking names continuing their positive trend. ICICI Bank has been one of the biggest gainers over the last month. HDFC Bank also has been participating well in this particular rally.
While there's some positive news on the auto space as well, because we've seen M&M also being positively reacting. On the negative side, just some pressure on stocks such as Bharti Airtel, now Bajaj Finserv, as well as Bajaj Finance are in focus today, and we'll address that during the show as well. But apart from that, we've seen, stocks such as Tech Mahindra just mildly gain. Let's also look at, the sectoral heat map as well, because we are seeing stocks in the auto space definitely do very well. Together, we are seeing a lot of positivity on the Nifty media space as a whole, while, on the other hand, the Nifty consumer durable space is also doing very well. We spoke about the Nifty metals as a whole because it's been a counter that's been impacted because of, imports from China, and over the last year, it hasn't been very pretty on that side. But overall, we're seeing a lot of good positive trends as well. Let's also look at the Nifty auto as well as the contributors also of the Nifty auto, because you've seen names such as M&M, and there you go. All the names are in green today after, a tough last month, so to say at least. Samvardhan Motherson being the biggest gainer. We had a note by Citi on Sona BLW as well. Let's also pull up that stock. While they've reduced the target multiple to 42 times price to earnings for FY26, we are seeing some positive momentum on the stock. Let's also look at Ola Electric as well. We saw the stock was down 7% yesterday in trade, and today it's doubling its losses of yesterday to almost gains of about 14% odd. And that's been, a stock that's corrected roughly 38% from its issue price of 76 rupees per share. So definitely a big recovery there. Still much below the issue price of 76 rupees per share, and much below the life high of about 157 the stock has hit. But overall, Varsha, we've seen some positive momentum on some counters that have been negatively impacted over the last couple of weeks.
Absolutely. But what interests me over here, Puneet, is the broader markets. So if you see Nifty Midcap 150, it's up almost 1.3%. Let's see who are the gainers there. You have, Paytm buzzing, a subsidiary gets research analyst certificate from SEBI. Then you have Lloyds Metal, NLC, Emphasis also buzzing in when it comes to Nifty Midcap 150. Even Indian Hotel, Indian Hotel is, let's see the chart there, Indian Hotel is up almost 4%. Now this is on the back of brokerage note by UBS. While if I talk about Nifty Small Cap 250, there let's see what that counter is doing. It's almost up 2%. Mastech, Ratnamani, Wellspun Living, Triveni Turbine, Sirma are some of the gainers when it comes to Nifty Small Cap 250. While on the losers list, you have Castrol, Hitachi Energy, Avas, Kims and Chambal Fertilizers, which are on the losers list. But few stocks, before we move on, few stocks that I want to highlight, Puneet, is one is Paytm 197 that we already spoke about. Varun Beverage is actually buzzing on the back of Citi's note, while Morpen Labs, we'll speak in a bit about that also. This is buzzing on the back of type 2 diabetes drug, and Shilpa Medicare is also is up almost 10 to 12% on as ARM gets partners with M3 Biologics for new cancer drug. But let's get in some market opinion on that note. We spoke to Aditya Suresh of Macquarie Capital and asked him about what he thinks of the IT sector. Listen in.
Sticking with the large caps in itself, just to give you some flavor at a sector level. So for example, with the financials, our analyst is speaking about kind of an improvement in credit growth from current pace of say 11% towards 13. We'll see kind of how kind of credit costs shape up, but at least our analyst is a little bit more optimistic on at least the private bank credit cost side as well. NIMs maybe comes off a little bit, but broadly speaking, in the teens growth, right, for some of the larger kind of banks. Surely, I mean, so underneath this, with the NBFCs, selectively, some of these could be growing much faster than this. IT as a sector, at least our analyst is speaking about, say, 6 to 8% kind of revenue growth in dollar terms, plus margin expansion, right? So this is then in the mid-teens plus as a kind of earnings growth. So to your point, I think, we are going to be finding a lot of kind of areas in the bottom up where you are still going to get a lot of growth. So it's never been like, for example, in a top-down sense, one of the points we're making in our recent note is that despite the, say, 20% kind of pullback, my sense was that as a market, we've gone from, say, egregious as a valuation to above par, and therefore it's still a rich bazaar for us to think about. But on the bottom up, there's still so many ideas for us to think about and construct an India portfolio, if I may.
Well, that was Aditya Suresh, and there's a reason we played that bite to start the show, because we've seen the Nifty IT being in a correction phase over the last couple of months. So at a time where, you know, the Nifty IT hasn't been doing very well, if you can pull up the 1 month and the couple of last 3 month chart of Nifty IT as well, at such a time, it's down by about 12% in the past month. We've got someone like Aditya Suresh, a very respected voice in the fund management space, coming out and saying that he's expecting a 6 to 8% dollar revenue growth in stocks, especially in the IT space. It's a very interesting time to look at these particular stocks, a 20% correction. But on that note, let me invite in Vineet Bulinchkar, the head of research at Ventura Securities. Vineet, good afternoon, and thank you so much for joining us today. Let me start off first with, you know, the IT space as a whole, because, you know, a 20% correction over the last 3 months. Do you feel that it is a time to look at these stocks, or do you see that, you know, with the discretionary spending being reduced in the US, there might be some more pain for these stocks?
So yeah, we are anticipating a little bit of stress in the system, and we have been staying away from IT stocks more or less. We still think that there's a 10% downside before they, you know, get below fair value. So I'm foreseeing a 10% kind of cut in IT stocks going out over the next few months.
Right. We have also had Signature Global on our radar. Nuvama has now initiated coverage on the counter with a buy rating. Anushi is with us. Anushi, what can you tell us about this one?
Right, so if you look, Nuvama is pretty bullish on Signature Global. Now they've come out with a report initiating a buy call on this counter, and this is at the target price of 1,436 that we are looking, which implies about a 35% of an upside from yesterday's closing price, which is there. Now a couple of factors and reasons that they've highlighted. Firstly, the past trajectory. If you see the sales bookings, they've seen a growth of around 8 times over the period of FY21 to 9 months FY25 period. So strong growth trajectory in terms of pre-sales which have been there, and the note expects this to continue with a pre-sales CAGR of 21% continuing between the years FY25 to 27. Other than that, Gurugram market is one of the attracting land banks that they have. It's a low-cost land bank and expect further expansions over here. Potential entry into Noida and Delhi shall be a re-rating trigger for the company also going forward. Other than that, even if you look at the debt to equity levels, they remain on the healthier side. Balance sheet check also suggests that the company is on its way to achieve the net cash status by FY27 end as well. But also to talk more about what has been happening in Signature Global in terms of their guidance given. If you look at the pre-sales, they have reached the level of 8,670. This is crore versus 10,000 crores. So they've already achieved about 87% guidance in the 9-month period itself. Even launches, they are on track to achieve the launch guidance that they've given, which is 16,000 crore, of which they've achieved 13,500 crore by 9-month FY25. Collections and revenue recognition, they've seen a 55% and a 67% growth respectively. So this is the overall perspective that is there on Signature Global, and how the entry into the Noida and Delhi market could be a re-rating trigger for the company going forward as well.
Right. Thank you, Anushi, for that. Vineet, Signature Global, they've maintained the guidance of, you know, the pre-sales to surpass 100 billion and also revenue recognition of 60 billion for current fiscal year, and they are also the EBITDA margin expected around 35%. Now, everything seems to be good when it comes to Nuvama also came out with a report. What is your view when it comes to, you know, Signature Global? Would you give a buy rating, or, you know, you want investors to exit?
So, you know, I will not comment on Signature Global, but I will comment on the market in which they operate. I think they are predominantly north-based players. And, you know, in North, Gurugram has been a very strongly buzzing property market. You know, given the earlier connection which we spoke about, IT not doing really well, I believe that, you know, if there is stress in the IT system, Indian IT won't be, you know, far behind. And obviously, we are seeing significant layoffs in Bangalore. This could soon happen in Gurgaon and other, you know, back office cities of Mumbai, of India. So given that, you know, I don't expect the strong trend to sustain in pricing as well as pick up going ahead. So given these kind of situations, I think that the market could be top heavy around here for real estate. especially in the cities that I spoke to you about.
Got that view, Vineet. But India's, while we've seen the equity market in doldrums over the last couple of months, India's favorite yellow metal gold continues to shine on the global stage, hovering close to $3,000 mark for the second consecutive day. Now the safe haven asset has delivered stellar returns over about 20% in the past 1 year, outperforming equities as investors have flocked to it amidst global growing economic uncertainties. These concerns have been amplified by the US President Donald Trump's tariff policies and their ripple effects on the global market as well. We spoke to Devang Shah, head of fixed income at Axis AMC, about this, and he says that gold might see muted returns going forward. Listening to a chunk of this conversation.
There is nowhere a clear time where we can probably put across, because as we always have mentioned, gold, if you look across at various time frames, pick up from 1970, 1960, 1950, 1970 band, gold did a very, very phenomenal, gave a phenomenal return. Then 1970 to 1990, 20 years gold didn't do anything well. If you look across from 2000 to 2001, I think somewhere down the line gold has given again phenomenal return. So there have been patches where gold gives good returns, and there has been time frames where gold doesn't give any significant return. Our perspective incrementally is that if you look across at gold returns, they have been significantly on the upstring for the last 1-2 years. There has been significant liquidity. There has been inflation concerns. There has been this entire space on de-dollarization and central bank buying. All of these led to a significant uptick in gold prices. We believe that near term, if you ask me, I think there are other asset classes which might give you similar returns. We have seen some, I would say, sell-off in equities. We have seen, we believe that fixed income markets at this point of time are very, very attractive because you have the entire liquidity measures being introduced by RBI. You'll have rate cuts. So our perspective is that probably near term gold might see some muted return. On a medium term, you can still have an asset allocation to gold.
Vineet, let me come across to you first. I'm not sure if you have any kind of view on gold, but the benchmark indices have not been doing very well. So any kind of outlook do you have with measures to gold, and do you feel that we should have some exposure to the yellow metal in our portfolio as well?
Yeah, I think gold will perform very well this year, and especially going out into the crisis which is impending in the US markets. Gold will continue to be a safe haven. It is under-owned. Just to if you go back 50 years, that time the ownership was gold was about 24% in portfolios. Today it is less than 1%. So even a 1% gain can mean immense upside to this formation. So gold, in my opinion, will do very well this year. However, I expect that from next year there could be some currency risk associated with the rupee appreciating against the dollar, especially given the fact that US is in a kind of a contraction phase in its GDP.
Vineet, but don't you think in the first first 3 months itself, we've seen a rally of more than 10 to 12%? Do you see that in the next 8 to 9 months, we might see that continuing momentum impending on the global uncertainty, or do you see that it might slow down a bit going forward?
So, I think by year end, gold could be around 85 to 86,000 rupees. That's what I'm looking at going ahead.
Speaking on the same, not so glittery news for Senco Gold as the stock hits 18-month low, which is down nearly 70% from October high. Mahima joins us with more details.
Senco Gold is definitely losing its shine as of now, but will it be able to retain that shine or not? We'll have to wait and watch for that. But right now, the stock is trading at its 18-month low, and it's almost 70% down from its October high of 772. In terms of stock, it's trading lowest since September 2023, and it hit a record low at 179 on July 21st of 2023. And it made its stock debut in July 14th, that is 2023. 2023. Now, what's not working for the company? Let us understand it one by one. Well, margins are under pressure, and this is on the back of declining profitability on lower demand and high gold prices. There is slower store addition which is taking place. The same store sales growth overall is lower as compared to its peers. In terms of impact of volatility in hedging is also being seen. The EPS is lowest since past 4 years, and overall inventory days have increased to 150 days, and lowest ROC in the past 3 years is seen at 3.7%. Now let us understand each pointer one by one as to what the trends are looking like. In terms of EBITDA margins, they're declining due to there is a reduction in overall stud ratio. The sales of studded jewelry has dropped versus sales of plain gold jewelry, which is why the overall margins are being impacted. There is higher export sales which is happening, and overall increase in operating expenses is also leading to pressure on margins. Now, in terms of the overall trend of margins, if we see, the guided range was between 7 to 8%, which has been maintained in FY23 as well as FY24, but that has come down to 6% when it comes to 9 months FY25. So the margins overall are below the guided range of 7 to 8%. Moving on to the profitability metrics, which is under pressure overall. Q3 FY25, we saw an overall decline of 69%. The profit came down to 45 crore. This also included a one-off with regards to the custom duty changed, but over and above that also the net profit has been on a declining trend. Q2 FY25, we saw hardly a growth of 1.5%, which has in fact seen a growth of around 82% in Q1 FY25 and around 7% in Q4 FY24. Moving on to the other metric as to what is impacting this overall profitability. Well, a couple of reasons. There are losses in the gold metal loan hedging, which has been the major driver as to why profits have been impacted. Hedging was around 95% in Q1 FY24, which has come down to 85% in Q2 FY25. In terms of losses, this is also in terms of hedging due to high gold prices, and this is also on the back of one-time custom duty, as I mentioned earlier. Lab-grown is another aspect which is overall impacting the profitability. Lab-grown diamonds are kind of affected due to the kind of affecting the overall studded ratio, which is why the margins as well as the profitability is going down. And in terms of jewelry margins also, diamond jewelry margins are also being impacted on the back of that. Now, in terms of store additions, there has been lower store additions in this 9 months FY25 as compared to FY24. There were 23 overall stores added in FY24, but as of 9 months FY25, only 12 stores were added by Senco Gold. Moving on to the same store sales growth. Now, in terms of same store sales growth, of course, it's a double-digit number, 14% for Senco Gold in Q3 FY25, but as compared to peers, the same store sales growth is much less, because Titan recorded a same store sales growth of 22%, and Kalyan Jewellers overall in Q3 FY24 recorded a same store sales growth of 24%. So same store sales growth as compared to peers is lower for Senco Gold. In terms of the overall promoter and FII's holding also, that has been on a declining trend. As of September 2023, promoters were holding around 68.5%, which has come down to 64% in December 2024, and FIIs were holding around 14.5% in September 2023, which has come down to almost 8.9% in December 24. So promoters and FII holding is also coming down, which is concerning for a company like Senco Gold. In terms of EPS, the trend has been on a declining trend. In terms of FY22, it stood at around 12 rupees, which has come down to around 8.9 rupees in the past 12 months trailing EPS, if we can call it. Moving on to the inventory days, that has gone up for the company, which is also kind of impacting the overall operating expenses, which was 126 in FY22 and has gone up to 150 days in 9 months FY25. So inventory overhang is also a concern when Senco Gold is concerned. And lastly, in terms of the ROC, that has been the lowest in the past 3 years. FY22, it stood at around 19.4, which is still below the threshold mark of around 20 to 25% range, but that has come down to 3.7%, which is significantly lower as compared to where it was in FY22. So ROC is also a concerning metrics to watch out for when Senco Gold is concerned. Lastly, in terms of what to watch out for, well, is there value. Company is saying that they will open another 8 to 10 stores in Q4 after a weak demand is what the company has guided. It will be something to wait and watch out for, whether they'll be able to open another 8 to 10 stores in just Q4. They are expecting 18 to 20% growth despite the weaker demand that they've seen. And in terms of the overall question as to how will they aim to normalize EBITDA margins from 7 to 7.5% in Q4 is the real question to ask. And overall, will the management be able to achieve the overall FY25 guidance that they've guided for is the question that remains to be answered yet. But this is the overall view as to why things are not looking nice for Senco.
Right. Thank you, Mahima, for all the details. Well, Vineet, 2 questions from my side. One is a lot of concerns when it comes to Senco Gold. What is your view considering Q4, the robust quarter for all the gold companies on the wedding demand? And my second question is, any set of peers that you have on your radar?
So, we are very disappointed with Senco Gold because, from double digits, they've seen their margins crash significantly. And, I don't think that anyone will be buying this stock given the kind of depreciation that people have seen in their portfolios. Looking ahead, I think there's one stock called Sky Gold, which manufactures jewelry and supplies to all the chains in the Indian markets. Now, the stock is quite reasonably valued, but it has got good growth prospects going ahead. So I think that can be one stock to be looked at. If you're looking at, because the gold price and the diamond prices falling, we'll see that the gold jeweler chains will have their margins a little under pressure, and to that extent, Sky Gold, which deals purely in manufacturing, I think they will be a better play than the existing gold jewelry chains that are there.
Got the view, Vineet. But brokerage from Nuvama has maintained a buy rating on PVR. Let me get back to Mahima on this. Mahima, what are some of the key aspects of this particular report?
Right. So as you rightly mentioned, they've maintained a buy with a target price of 1765 on PVR Inox, which is why we're seeing the buzz in the stock today. What they're saying is that there's a strong uptick that they've seen in the past 2 months, and calendar 2025 has started on an exciting note. They're saying that the box office collection in Jan and Feb are up by around 39% YOY to around 2,264 crores, and the Feb 2025 saw highest grossing overall. This is post-COVID that they've seen. In terms of the target price that they've given it on the basis of a couple of reasons. First one, Hindi movie industry overall has seen a revival is what they're saying. There has been a consistency in terms of their overall track record, and the audiences are eager to watch cinema if the content is compelling is what Nuvama is saying. Lastly, they're saying that there are notable triggers which could possibly lead to the uptick in stock. The first one being there's a recent promoter buying in the company, and secondly there has been an impressive Q4 numbers that overall PVR Inox has posted. So there has been an impressive Q4 that has been leading to that Q4 development numbers, because Jan and Feb overall gross collections have been better, which is why Q4 could be exciting is what Nuvama is saying. So this is the overall view of the note and why Nuvama is bullish on PVR Inox.
Well, thanks for that, Mahima. So Nuvama maintaining the positive view, saying that Q4 could be better for someone like a PVR. Vineet, I'm not sure if you have a view on PVR. It's a stock that's not done very well for its investors. What is your outlook on the same?
No, we are quite positive, and we believe that the stock will definitely turn around. I think good days are headed for Indian cinema, and especially considering the consolidation that has happened between Inox and PVR, and the strong cost-cutting measures that they've initiated, and new business model that is in play. I think this stock can do relatively better from current levels. In fact, I believe that there's not much to lose from current pricing.
Well, definitely a stock been under pressure over the last 6 months, down almost 40%. But Vineet, stay on. It's time for a very quick break on Profit Buzzers. Come back to NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter.
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Welcome back to NDTV Profit. Before we go ahead and address some of the pharmaceutical names, I just wanted to pull up the Nifty because we've seen some pullback from those levels that we started from the show. And we're seeing that kind of pressure on some slight dip there and getting bought into it again. So we've actually moved up from where we started. We started about 22,720. Saw that slight dip over the last 20 minutes, seeing some buying again. And I just want to put up a couple of stock. Ola Electric, we did mention, it's now almost 13.9-14%. But apart from that, also in the auto ancillary name, something like Talbros Automotive up almost 14%. Can we pull up also Gabriel Auto as well, another one up 10% in trade. Greaves Cotton, another name which has seen a lot of correction, up almost 6% in trade. Varroc Engineering, another one up 5%. So we're seeing a lot of buying across auto stocks, across the smaller ones as well. Shriram Preston's also up about 4.5%. So definitely something that is seeing a recovery in stocks that were hammered across the last 2 months as well. But a couple of other stocks buzzing on the back of news flow is Shilpa Medicare as well as Morippan Labs. And Varsha, specifically, what's working for these counters?
Actually, let me start with Shilpa Medicare. I mean, look at the rally when it comes to Shilpa Medicare. The stock is up almost 8%. It was up actually 10% in trade. But let's see what the news is. So their arm, that is subsidiary company, has partnered with Maptree Biologics for a new cancer therapy, and the company will handle development, trials and manufacturing. Now Shilpa will also provide Maptree access to India and through its extensive partner network, and this therapy will target novel immune checkpoint to enhance immune response. So basically what their aiming is, so their aim is to make cold tumors hot for better cancer treatment response. And Maptree is a Swiss biotech company focused on innovative cancer therapy. So this is on Shilpa. But Morippan Labs, now Morippan Labs is in focus. Now if you see, the stock is up almost 13%. Now this is on the back of the launching. So they've launched a product which treats, or rather a drug which treats type 2 diabetes, heart failure and chronic kidney diseases. And they're gonna offer this drug at more affordable prices, and also considering the India's large diabetes market as well. Now they're going to manufacture this drug in US FDA approved facilities of Morippan Lab. And so this drug has been in focus because this particular type of drug has lost its patent on somewhere in March 11th of 2025, and due to which many other companies have have gone ahead and came out with a generic version of this product which Morippan has actually launched. So you have Glenmark Pharmaceuticals, which has launched the same product 2 days back. Alchem Labs was one of the companies which has also launched. Even you have Lupin, Dr. Reddy's, which are also going ahead with the generic version of this product. Speaking of which, Glenmark has launched the same product which I was actually talking about, which is used to treat type 2 diabetes. And we spoke to company's president and head of India formulation business, Alok Malik, about this new drug and what the company is eyeing in this segment going forward. Listen in.
We are likely to grab a substantial share of this market, which we are already present into it as far as the diabetes is concerned. And as far as the SGLT2 and DPP4 category is concerned, in which this molecule will operate in, we already have a good presence. into this category. So and we are quite hopeful that we'll be doing very well. We'll be amongst top 3 or 4 players in this category.
Well, Glenmark wants to be top 3 amongst this diabetes segment. But on that, let me also invite our second guest, who is Sarvendra Srivastava, market strategist at 5 Waves official. Welcome, Sarvendra, to the show. We were just speaking about the Shilpa Medicare and Morpen Labs and Glenmark, which are in focus on the back of this generic version of the diabetes drug. Are you tracking Shilpa Medicare or Morpen Labs, and what are the technicals charts saying about these companies?
Very, very good afternoon to the panel as well as the host. I think I would rather go with the large cap names, and within these 3, I would say I would possibly want to go with, if I have to go, I would go with Glenmark, where I think you could end up for the next 1 to 3 months. You might get somewhere in the region of 540, 560 as 1550, 1560 as targets on Glenmark. And this over the next 1 month is what I would see this move coming in. And if you are wanting to take that trade, possibly you should also keep a stop below 1400. So out of the 3 names, I think just purely because of liquidity and overall trading health, I think Glenmark would be better. But these 2 names have also been correcting a lot, especially Shilpa, which has fallen almost 30-40% from the high, and even Morpen, which has fallen from around 100 to 50 marks. So I think you would definitely expect bounces from such oversold conditions. So I will kind of watch these 2 names for more strength. But Glenmark, which is still possibly the stronger of the 3 charts, I would say that yes, with a stop below 1400, you could look at 1550, 1560 as targets for the next 1 month.
Well, Vineet, any views on Morpen Labs, because the company is going aggressively when it comes to diabetes market. Are you tracking this counter?
No, we don't track this counter, so difficult for me to comment on.
So any peer company that you are tracking, maybe Glenmark, what your views?
Eris Life Sciences is one domestic stock that we like. Okay. It has done really well. They've consolidated portfolios which they've acquired, and I think they have a good 2 to 3 years ahead of them.
Got that view, Vineet. Another set of stocks that are in focus are from the Bajaj Group. Now, Bajaj Group will be in focus today on the back of the joint venture partner Alliance intent to exit the insurance partnership. Now, what could this mean for Bajaj's insurance business? Let's bring in my colleague Swamit to tell us more about this particular transaction.
Bajaj Finance will own close to 75.01% stake in both the insurance entities, that is the general insurance entity and the life insurance entity. How will the funding happen for this? Now, Bajaj Finance will need close to a cash of around 940 crore rupees, which is much less compared to their current cash balance of around 3,500 crore rupees, while for Bajaj Holding, they will be required cash of around 18,600 crore rupees for this transaction, while their current cash balance stands at close to 19,000 odd crore rupees. Now, when it comes to the timelines and approvals, the intended timeline or the stated timeline by Alliance is around July 16, 2026. This is by when they expect this deal to complete, and when it comes to approval, they will be needing approvals from CCI, IRDI and other regulatory boards as well. Now comes the most important part, that is a valuation. Now this deal values the life insurance business at close to 40,000 crore rupees, while the general insurance business is valued at close to 53,000 crore rupees. Now this is a discount compared to what the street has been giving the value or assigning the value to both these entities, that is the life and the general business. Now for the life business, an average of 7 broking firms value the entity at close to 49,000 crore rupees, while the general insurance business is valued at close to 63,000 crore rupees, and this deal is happening at a discount of nearly 14 to 19% based on the value asked by Alliance from the Bajaj Group. Now lastly, what could now happen going forward? Now this transition from Alliance to Bajaj will give Bajaj Group a better control operation wise. It also removes the long pending overhang that the street has been expecting an exit of Alliance Group since October, so that overhang also goes away from Bajaj Finserv share prices. But on the flip side, this could potentially also mean that Alliance could now pursue their own insurance strategy in the country. Given the post the 100% FDI approval, they could start their own insurance both in the life and the general business, and they could also go ahead and tie up with any other financial service entity, and this could lead to higher competition when it comes to the life and general insurance business going forward.
Well, thanks for that, Somit. Vineet, let me come across to you first, because apart from news flow on Bajaj and the alliance, stepping out of the agreement, I just wanted to get your view on Bajaj Finserv first, and then also on Bajaj Finance, because we've seen a note by Morgan Stanley today that its MD Rajeev Jain might move to a further role specifically, either within Bajaj Finance or can move completely to Bajaj Finserv as well. So, just your view on both these stocks.
But see, we like both these stocks. Bajaj Finance has become a very, very focused consumer-driven story now, with Bajaj Housing getting listed separately. And, we are quite positive. The stock has also outperformed the markets, and we expect that to play out going ahead. Bajaj Finserv, is the parent of both these companies. And we think that it will do really well going ahead, because we believe that the insurance sector is going to have a very good, strong run going ahead, and both life and general are expected to do well going ahead.
Sarvendra, either of these stocks on charts, anything for Bajaj Finance or Finserv?
I think if I have to go, I would go with the Bajaj Finance here, and I would give the data point as well. I think over the last couple of years, right from 2020 onwards, if you see 2019, 2021, on monthly charts, it was never closing above 8,000. So last month was the first month where we have closed above the psychological 8,000 mark. So that to me is a big technical re-rating or a push on the upside is what you can call. So with that happening, I think overall trajectory now, you would with such a large breakout, which is a multi-year breakout on Bajaj Finance, you would see effect of that at least lasting 6-12 months. So assuming that yes, last month was the first month we are out of that mark, I think there's still a long way to go. So as long as we stay clear of 8,000, 8,200, that would now act as a support of going down, because it was a hurdle for the last 4-5 years. I think you might have a 6-12 month good run here, and you should reach. And now this is now blue sky territory. So projection wise, I can say that 86, 50. We've already done. The next goalpost is 9,000 psychological marks. So maybe the risk rewards right now are not that great, because we are in the middle of a risk reward setup. But if at all it were to correct 100, 200 points towards 8,200, I think it would be a good risk reward to buy with a stop below 8,000 and for targets in the region of 8,800 to 9,000.
Right. Well, moving on, Vedanta remains in focus after chairman comments on demerger. He said demerger is to create 4 new natural resource focused entities. My colleague Mihika joins us to give us more details.
So in terms of the chairman letter to shareholders, Chairman Anil Agrawal said that the on-go's proposed demerger will help create 4 new natural resource-focused entities, and he expects the newly demerged companies to grow into a $100 billion company. He does expect the current listed Vedanta Limited entity to continue being a powerhouse in its own right, and the new demerged companies will have independent management as well as distinctive capital structures and the right asset base. And he notes how the demand for the products of each of the demerged companies is the need of the hour. In terms of Vedanta's investment return, well, he stated how the 5-year-old long-term investor has seen a return of 4.7 times till date, and the dividend yield of 81% in the last 5 years is the highest amongst its peers. A little bit about the Vedanta demerger, well, the resultant entities would be the following. One is Vedanta Limited, which will include Hindustan Zinc, Zinc International and the copper business. Second one is Vedanta Aluminium, which will include the Balco smelters, the Lanjegar Alumina refinery and the Sijimali bauxite mine. The third one is Vedanta Oil and Gas, which is currently the Karn Oil and Gas business. The fourth one is Vedanta Iron and Steel, which includes the iron ore mines in Goa, Karnataka, Liberia, as well as the ESL steel plant. And lastly, you have a Vedanta Power, which includes the merchant power plants owned by the company itself. Lastly, in terms of how big the Vedanta demerged companies could be, well, as per values in terms of market cap noted at the start of the year by MK Research, Vedanta Limited could have a market cap of around 1.02 lakh crores, Vedanta Aluminium at 1.1 lakh crores, Vedanta Oil and Gas at 31,600 odd crores, Vedanta Iron and Steel at 19,280 crores, and Vedanta Power could be the smallest company in terms of market cap at 8,700 odd crores.
Right. Thank you so much, Mihika, for all the details. Vineet, how are you viewing this announcement? You tracking this counter?
Yeah, we like Vedanta. We are very positive on the entire commodity space, and we believe that bifurcation into different business lines will bring more focus to the various companies. It will also help the management consolidate their holdings and de-risk the businesses from various aspects.
Sarvendra, on Vedanta, over the last 12 months, we've seen some decent performance on the stock price. What do the charts suggest going into the demerger?
See, one thing I can say, possibly the market definitely was sensing something like this. That is why the stock has, by and large, outperformed peers also, and is in a fairly good shape because we are still close to that 500 psychological mark. But the only thing is that with such big developments, what comes out of the bag is sometimes difficult to check. So I like this news to settle down a little bit, give it a couple of days, and then possibly take a fresh call.
Well, another stock that's been in focus is IndusInd Bank. Now, Bernstein has remained positive on the bank and maintaining an outperform rating, but it has cut its target price on the same. My colleague Harsh joins in with some more details on the note.
Two quick developments on IndusInd Bank. First, you have a Bernstein note which has come out and spoken about how the stock is actually reasonable in terms of valuation. 0.8 times trailing 12 months price to book. Indeed, for a Nifty 50 counter is reasonable. Why is it so? They are also highlighting top concerns of investors. First one, promoters own 15%, out of which 50% is pledged. That is one key concern. Second one is with regard to asset quality issues. The latest wave of asset quality issues not giving confidence to investors. Management commentary also seems to suggest that those may persist at least for another quarter. And you have management ownership which has also fallen. So all of those factors playing a crucial role with regard to corporate governance within the bank. Third, risk of deposit outflows, large wholesale book leaving it vulnerable to outflows if there is a risk. And the fourth one is accounting issues within the derivative segment and otherwise raises some amount of concern from an investor standpoint. So all of those coupled together creating that kind of overhang on the stock. They've also tried to differentiate between an IndusInd and an RBL and a Yes. Some of those cases were outliers is what they call it. IndusInd in relative terms is a good quality franchise, sizable share in vehicle, which is largely better placed than what a Yes or an RBL was doing. And last off, there's no major asset quality issue. This is a cycle and likely that cycle will turn. So two ways to look at it. These are just some of the factors to break down.
Well, thanks for that, Harsh. Vineet, before I let you go, just getting a view on IndusInd Bank as well. Post that huge correction of 27% on a single day, we've seen some pullback, but what's your outlook on the bank?
So currently valuations are very cheap, but the business is not inspiring confidence. And we need to see how they would perform over the next 3-4 quarters. They face these kind of issues of, pushing things under the carpet earlier also. So I think, it doesn't bode well as an institutional stock. And because of that, you're seeing a degrade in the valuation multiple that is the market is offering. And so I would rather go with other pedigree banks of these like Kotak, I think looks to be far more attractive and is one of our top picks in the sector.
Got the view, Vineet. Thanks so much for joining in. But Sarvendra, let me come across to you for IndusInd. We've seen the sharp correction over the last month, over the last 6 months also, it's down about 54%. Your view on the same?
See, markets have their way of knowing things, and this is a classic case. I always keep on saying that news always follows price. So news always is lagging and comes 1 month, 2 months, 3 months, 6 months down the line. See, this was one stock. The red flag was already there for me, and it was already out of my focus list for one simple reason. Since 2018, which was its high, ATH was 2018, it has not been able to perform with the market. So since 2018, there has been a fantastic 6-year bull market, which was in between, there was COVID as well. But net, everything went up. The good quality names all went up. And this guy struggled not to even clear the 2018 high, which was the mid-cap top. The mid-cap index also topped out at that point in time. So this is out of my focus list. The only data point I could give there was that this stock has still not made an ATH and should not be there. If someone wants to allocate to banking, there are far better names, is what I mean to say.
Got it. Well, thank you so much, Sarvendra, for joining this conversation. Moving on, in a good bull run market, the current RBI measures would be cheered beyond measures, says Vikas Khemani, who is the founder of Carlinian Asset Management and Advisors. Listen into what he has to speak on RBI measures in the last couple of months.
In a good bull market, if the sentiments were good, this would be cheered beyond measure. Yeah. In a bad sentiment, markets have ignored it. Yes. That's a beauty that is giving you opportunity to buy in a great developments and giving the right price to buy. But markets are saying, okay, big deal. But if you understand the meaning of these macro changes, these pivots tend to, people will say, okay, pivots kiya, but what happened? Nothing has improved. It does not happen automatically, immediately. It takes 2 quarters lag. So what will happen?
Well, with that, it's a wrap on this edition of Profit Buzzers. We've seen Nifty get it to its high of about 22,780 by the end. So it's good 1 hour for trade. But thank you so much for joining us into this particular edition of Profit Buzzers. Stay tuned to NDTV Profit for more.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
he sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, the market seems to be gaining for the second straight session. We have successfully crossed above the 22,700 levels.
Yeah, absolutely. If you look at what's happening in the benchmark indices, it's clearly near the day's high. In fact, nearing that 22,800 mark that we are looking at. And this is the overall breadth that we are seeing across the markets. It's not the benchmark, even the broader markets are outperforming the benchmark indices today. If you look at the couple of stocks which are in focus in benchmark indices, we have like stocks like Shriram Finance, M&M, Hindalco seeing gains of around 2 to 3%, ICICI Bank, HDFC Bank, L&T, the top contributors in the Nifty 50 pack, while we are looking at something like Bharti, Bajaj Finance, we will address later in the show as well, which are currently in red among the sea of green that we are seeing. Tech Mahindra, another stock which is in focus, is also in red. But let's also look at what is happening across the sectoral pack. If you are looking at the overall sectoral indices, we are looking at a sea of green. Overall, all the sectors are in green. In fact, if we see the top sectors, we have Nifty Media seeing gains of around 3% today. Nifty Realty up around 2.4%. Now, do note that just a few days ago, we were addressing how this is one of the top laggards in terms of the sectoral indices out of the whole pack. So it is bucking up trend today. Nifty Metal, Nifty PSU banks again seeing gains of around 1.82 to 2%. So that is as far as where the sectoral indices go. In terms of the overall breadth of the market, let's also pull out the advanced decline ratio to see how that is faring out. So we are looking at around 1,900 of advances, clearly outpacing the declines of 300. So markets largely skewed in the green, and as Somit mentioned, it's a straight second session where we are seeing the markets recovering relatively well. Let's pull out the broader let's see how the broader markets are faring. Let's look at Nifty Midcap 150 seeing gains of around 1.52% currently, and let's see the top contributors here. We have stocks like Policy Bazaar, Paytm and Focus, which are seeing gains of around 5% and 6%. In fact, if we see what is happening in Paytm, SEBI has approved registration of Paytm Money as research analyst. So, and while for PB Fintech, Kotak has upgraded the stock to add from reduce. That's why we are seeing some gains in this counter as well. But moving to some other handful of counters, we also have Lloyds Metals, Emphasis and NLC India seeing gains of around 4 to 5% as well. On the losing end, however, we have stocks like Power India and Bharti Hexacom, which are seeing cuts of around 4 to 2%. In the Nifty small cap indices, if we are looking at, we have Mastak and Raymond bucking up the trend, seeing gains of around 10 to 18%. So this is the overall breadth of the markets that we are looking at. Broader markets, benchmark indices, all in green today. Broader markets performing relatively well, Samit, right?
Well, right, Anushri, for that extensive market check. Well, let's also welcome in our Today, fundamental guest for the day, Sneha Poddar, Vice President Research with Wealth Management of Motilal Oswal. Sneha, coming to you firstly on the markets. Overall, it seems that all the negatives have been priced in, right?
Oh, very good afternoon. So not all the negatives has been priced in. We cannot say that, but at least for the time being, the data which is getting released from China, from US, they are actually providing some boost to these sentiments because China data is actually giving hopes that the China economy will rebound from here. And that will lead to revival of the demand. Moreover, the government over there is talking about boosting the overall consumption. On the US front, since the data that got released has been modest, so at least the economy is not going on a doom side, is actually giving hopes to the investors. So people are just you can say cheering the data which are getting released and keeping hopes that the US Fed interest rate decision, which is due tomorrow, so probably there'll be some dovish commentary that might come from the US Fed.
Okay, so strong global view cues supporting the benchmark and the broader markets in trade today. But let's shift focus, and let's see what's happening on the stock specific side. And what we're looking is not so glittery news for Senco Gold, as the stock hits a 18-month low, down nearly about 70% from its October highs. Now, what's putting pressure on Senco Gold? Mahima joins in with more details on the same.
Right, so Senco Gold is definitely losing its shine as of now, but will it be able to retain that shine or not? We'll have to wait and watch for that. But right now, the stock is trading at its 18-month low, and it's almost 70% down from its October high of 772. In terms of stock, it's trading lowest since September 2023, and it hit a record low at 179 on July 21st of 2023. And it made its stock debut in July 14th, on July 14th. That is 2023. Now, what's not working for the company? Let us understand it one by one. Well, margins are under pressure, and this is on the back of declining profitability on lower demand and high gold prices. There is slower store addition which is taking place. The same store sales growth overall is lower as compared to its peers. In terms of impact of volatility in hedging is also being seen. The EPS is lowest since past 4 years, and overall inventory days have increased to 150 days, and lowest ROC in the past 3 years is seen at 3.7%. Now let us understand each pointer one by one as to what the trends are looking like. In terms of EBITDA margins, they're declining due to there is a reduction in overall stud ratio. The sales of studded jewelry has dropped versus sales of plain gold jewelry, which is why the overall margins are being impacted. There is higher export sales which is happening, and overall increase in operating expenses is also leading to pressure on margins. Now, in terms of the overall trend of margins, if we see, the guided range was between 7 to 8%, which has been maintained in FY23 as well as FY24, but that has come down to 6% when it comes to 9 months FY25. So the margins overall are below the guided range of 7 to 8%. Moving on to the profitability metrics, which is under pressure overall. Q3 FY25, we saw an overall decline of 69%. The profit came down to 45 crore. This also included a one-off with regards to the custom duty changed, but over and above that also the net profit has been on a declining trend. Q2 FY25, we saw hardly a growth of 1.5%, which has in fact seen a growth of around 82% in Q1 FY25 and around 7% in Q4 FY24. Moving on to the other metric as to what is impacting this overall profitability. Well, a couple of reasons. There are losses in the gold metal loan hedging, which has been the major driver as to why profits have been impacted. Hedging was around 95% in Q1 FY24, which has come down to 85% in Q2 FY25. In terms of losses, this is also in terms of hedging due to high gold prices, and this is also on the back of one-time custom duty, as I mentioned earlier. Lab lab-grown is another aspect which is overall impacting the profitability. Lab-grown diamonds are kind of affected due to the kind of affecting the overall studded ratio, which is why the margins as well as the profitability is going down. And in terms of jewelry margins also, diamond jewelry margins are also being impacted on the back of that. Now in terms of store additions, there has been lower store additions in this 9 months FY25 as compared to FY24. There were 23 overall stores added in FY24, but as of 9 months FY25, only 12 stores were added by Senco Gold. Moving on to the same store sales growth. Now in terms of same store sales growth, of course it's a double digit number, 14% for Senco Gold in Q3 FY25, but as compared to peers, the same store sales growth is much less, because Titan recorded a same store sales growth of 22% and Kalyan Jewellers overall in Q3 FY24 recorded a same store sales growth of 24%. So same store sales growth as compared to peers is lower for Senco Gold. In terms of the overall promoter and FII's holding also, that has been on a declining trend. As of September 2023, promoters were holding around 68.5%, which has come down to 64% in December 2024, and FIIs were holding around 14.5% in September 2023, which has come down to almost 8.9% in December 24. So promoters and FII holding is also coming down, which is concerning for a company like Senco Gold. In terms of EPS, the trend has been on a declining trend. In terms of FY22, it stood at around 12 rupees, which has come down to around 8.9 rupees in the past 12 months trailing EPS, if we can call it. Moving on to the inventory days, that has gone up for the company, which is also kind of impacting the overall operating expenses, which was 126 in FY22 and has gone up to 150 days in 9 months FY25. So inventory overhang is also a concern when Senco Gold is concerned. And lastly, in terms of the ROCE, that has been the lowest in the past 3 years. FY22, it stood at around 19.4, which is still below the threshold mark of around 20 to 25% range, but that has come down to 3.7%, which is significantly lower as compared to where it was in FY22. So ROCE is also a concerning metrics to watch out for when Senco Gold is concerned. Lastly, in terms of what to watch out for, well, is there value? Company is saying that they will open another 8 to 10 stores in Q4 after a weak demand is what the company has guided. It will be something to wait and watch out for, whether they'll be able to open another 8 to 10 stores in just Q4. They are expecting 18 to 20% growth despite the weaker demand that they've seen. And in terms of the overall question as to how will they aim to normalize EBITDA margins from 7 to 7.5% in Q4 is the real question to ask. And overall, will the management be able to achieve the overall FY25 guidance that they've guided for is the question that remains to be answered yet. But this is the overall view as to why things are not looking nice for Senco.
Okay, well, that was the complete breakdown of Senco Gold that we are looking at. Thank you, Mahima, for all those details. Neha, coming to you. Now, Mahima pointed out a couple of factors. Firstly, the margins which are under pressure, then the declining ratio of promoter shareholding as well as even the FIIs, even the volatility in hedging, lowest earnings per share in 4 years. I want to understand from you about these factors that she was mentioning about why the stock is under pressure and what's your view on this counter?
Okay. So as Mahima mentioned, these are the concerns which actually emerged during Q3. Actually, if you look at till last year, the overall jewelry stocks were doing very well. The growth was very buoyant, but the problem started arising from Q3 onwards, wherein majority of the jewelry companies did not report a very robust number, and because of the higher gold prices, the hedging losses actually mounted for them. Also, because of the the shift in the overall portfolio, the margin pressure was seen. Now, the management has retained the guidance of 7 to 8%, which over next 1 or 2 quarters we'll have to monitor whether the company is actually able to deliver those margins. Though the store opening is a little moderate, but then the more important thing to look out for will be the same store sales growth and the margins. If those factors the company is able to deliver on over the next 1 to 2 quarters, then probably the stock can bounce from here. Having said that, the stock has witnessed a good correction from the top. So probably one any investor with a long-term horizon can keep it on the watch list and watch it over next 1 to 2 quarters, and then one can enter into the stock.
Right. Well, another interesting development that has come out yesterday post-market is on the Bajaj Group. Now, it's related to Bajaj Finserv and Bajaj Holdings, and the announcement that came in was after 24 years, Allianz Group has actually parted ways with Bajaj Group. They will be exiting the insurance joint ventures, that is the Bajaj-Allianz General Insurance and Bajaj-Allianz Life Insurance. They also entered into an agreement where they're saying that they will ensure continuity of reinsurance and other services during the transition. And once the agreement has been terminated, both the parties are independent to pursue their own insurance journey in India going forward. Now, what is the consideration that Allianz Group is asking from Bajaj? They are expecting around 2.6 billion euros for its 26% stake in each of the both entities. So for the general insurance, the 26% stake is valued at close to 13,780 crore rupees, while the 26% stake in life insurance business is valued at close to 10,400 crore rupees. And how this 26% stake will be divided among the Bajaj Group companies? Well, 1.01% will be taken up by Bajaj Finserv, 19.95% will be taken up by Bajaj Holdings, which is a listed entity, and the remaining 5.04% will be taken up by a private entity of the Bajaj Group, that is Jamnalal Sons. And post this transaction, Bajaj Finserv will own close to 75.01% stake in both the insurance JVs, that is the general and the life insurance joint venture. Now, how are they going to fund this? Bajaj Finserv, they will require a cash outflow of just 940 crore rupees as against their cash balance of more than 3,500 crore, while Bajaj Holding on the other hand would require a cash outflow of close to 18,600 crore rupees, but they also have a cash balance of close to around 19,000 odd crore rupees. Now, when it comes to timeline and approval, Allianz Group intends to complete this transaction by July 16, 2026, and they will be requiring approvals from CCI, IRDA and other regulatory approvals as well will be required. Now, when it comes to valuation, this acquisition price quoted by Allianz is valuing the life insurance arm at close to 40,000 crore rupees, while the general insurance arm is valued at close to 53,000 crore rupees. Now, this is at a discount when compared to what the street has been estimating the valuations of both these businesses. Now, if you look at the average valuation of 7 brokerages that we have currently, the life insurance business is valued at close to 49,000 crore rupees, while the general insurance business is valued at close to 63,000 crore rupees, which means that this transaction is being done at a discount of nearly 14 to 19%. Now, what should we expect going forward? Now, as per analysts, this transition could allow better control for the Bajaj Group. It could lead to better operations going forward, and also this long pending overhang on the Bajaj Finserv goes away, because the street was expecting since October that Allianz Group would actually part ways from with Bajaj Group, and that has now happened. So the overhang moves out for the Bajaj Group. And lastly, when it comes to Allianz, they could in fact go ahead and now start their own solo Indian insurance market post the 100% FDI approval. So that could lead to higher competition, or they could actually align themselves with another financial service company that could also lead to higher competition in the general and the life insurance business. So we need to watch out for what Allianz strategy now remains going forward after exiting with the Bajaj Group. Sneha, have you looked into this transaction? How do you see the valuations for both the general and the life insurance business, and what do you expect could happen in the sector if Allianz comes up as on a standalone basis in the sector or ties up with any other player?
Okay, so basically, what our view is that from the long-term perspective, this will be beneficial for the Bajaj Group, because obviously, they'll get a better control, and also they can actually, improve the overall operational performance. And as you mentioned, long pending overhang actually goes away for the stock. From the short-term point of view, this could create some pressure in the overall industry, because either Alliance will go solo, given that 100% FDI approval is there, or they might look out for some other partners. As we know, even Jio is looking out for their insurance arm. So probably Alliance might tie up with Jio. We really don't know, but then there could be a lot of speculations which could actually keep Bajaj Finserv under pressure from the short term point of view. And in terms of valuation, since this is almost 15 to 20% at discount. The stock will might continue to remain under pressure in the near term. From the industry point of view, obviously with the more and more competition coming in, it plays a little negative from the short-term perspective. But then, given that the industry is highly under-tapped, from the long-term perspective, it will eventually accommodate. One more player. So we just see a short-term probably pressure on the overall insurance industry, but from the long-term point of view, we really don't see this as a major concern.
So overall, you're optimistic on the long-term prospects of the insurance industry is the view. Now, another stock which is in focus is Paytm. This is after SEBI-approved registration of Paytm Money as research analyst. Harsh joins us to tell more details on this.
Well, yes. So most brokerages are able to give you a target price for certain stocks that they can recommend to their clients. But as of today, Paytm could not do that. Now, with this license, with this registration, with regard to research analyst, they can now do that. They can give recommendations of stocks on their platform, Paytm Money, which is the platform, the brokerage platform for Paytm. It's of course trying to upsell its services, get and provide better value-added services for the larger customer base that Paytm has. And maybe this could be one pathway towards greater tapping of the Paytm Money app, which needs to happen. So that could be one angle. The other one, of course, stock up 6%. We've seen a 35% fall from the highs in the stock price. The stock price made a high 1,000 plus in around December, after which it's fallen quite sharply. So a bit of a bounce back, given that markets have also bounced back. And the other piece is with regard to MDR. There's been plenty of chatter that MDR, which is the spread with regard to single transactions made on the Paytm app, even through UPI, could well be expanded, could well be improved from the current 6 to 7 basis points, and even a few basis points of improvement could well impact the P&L and balance sheet of Paytm and push profitability higher. So all of those factors likely playing out on that Paytm stock today.
Okay, well, thanks for that, Harsh. In fact, Sneha, let me come to you. The stock Paytm is up around 6% in trade today. And this is after Paytm Money gets the key SEBI nod which it wanted. I wanted to understand your view for Paytm.
Okay, for Paytm, we are turning a little positive because, especially post the Q3 numbers, which were better than, what the street was expecting, wherein we saw the EBITDA loss narrowing down. And now, we're expecting the company to break even by the fourth quarter of FY25, wherein it is likely to turn EBITDA positive. Now with the Paytm Money approval coming in, it will obviously open a new avenue for the company. So things are looking positive for the company from post the Q3 numbers, and hopefully that should reflect over the coming quarters. But we would still wait for clarity to emerge over the next 1 to 2 quarters, and then probably go aggressive on it. But yes, the signs of turnaround is visible for the company, so one can actually can start actually building up the position.
It seems like all the internet stocks have been buzzing in trade. Apart from Paytm, it's PB Fintech, which is also up in trade. It's gaining around 6% currently, and this is post Kotak actually upgraded the rating on the stock to add from reduce, but that is largely because of the sharp fall that we have seen in the share prices, because the brokerage house has gone ahead and cut its target price to 1,525 from 1,600 earlier. Now, what they are saying here is that the stock has corrected sharply around 36% in the last 3 months, and this is on the back of the concerns that is there on the growth and profitability of the company. However, the brokerage house continues to remain assertive on PB Fintech's ability to deliver 1.8 to 2 times the industry level growth, with improving leverage driving strong profitability going forward. So they're most likely quite bullish on high growth and the profitability story of the company, and that's the reason they have upgraded their rating to add from reduce, but they have cut the target price to factor in the recent weakness in the share prices and the recent slow weakness that we had seen in the insurance numbers. Sneha, coming to you on PB Fintech, how are you looking at the growth story of the company, and do you believe that the investments that the company is doing towards the healthcare business that would continue to remain as an overhang on the share prices?
See, we don't really cover PB Fintech, but yes, the foray into the healthcare segment is
Right. Okay. On PB Fintech, yes, the brokerage had cut its target price to 1,525. Now they're saying, okay, we have Sneha back again. Sneha, you can continue.
Yeah. So as I was mentioning, we don't really cover the stock, but the foray which the company has announced into the healthcare segment, so that is the concern which the overall street is raising, because this is not their core forte. So thus, actually diversifying into something which is totally unrelated is the question which one needs to really ask. And probably we can wait for more clarity to emerge over the next few quarters, because currently there's not much clarity in terms of how they plan to proceed into this, and will they really succeed into this, whether the the right capital allocation has been done or not. So the street will continue to be a little concerned with these with this venture, and thus the stock might remain under pressure for some time.
Currently, PB Fintech up around 6% in trade today. But thank you so much, Sneha, for joining and sharing your perspective on various of these counters. But with that, it's a wrap on this edition of Profit Top Trade. Stay tuned for India Market Close.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
we feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita, with me is Tamanna Inamdar. And it's a good day of trade, frankly, and long awaited. 1% plus higher on the Nifty, favorable breadth. So therefore, let's pull up the 5 factors that we're seeing. Nifty at the day's high at this point. We're closing in on 22,800. ICICI Bank is the top contributor on the Nifty, and that's a second straight day where we've seen ICICI Bank really outperform. The broader markets also outperforming. Second straight day for broader markets as well. So good in that sense. Breadth also in tandem. All major sectoral indices 1% plus higher except the Nifty IT. So Nifty IT just about 1% higher. No complaints there either today. And markets gain with a very, very strong breadth. So that's really the telling part. It's not just one pocket or even Steven like it was yesterday. Today, the breadth is looking increasingly good and we're inching towards 22,800. Let's pull up the intraday chart on the Nifty. The Nifty Bank also outperforming. There you go. We're at the day's high, nearly 300 points up. Clearly a solid day of trade. From 22,599, we're currently sitting at 22,799. Day's low to day's high, very, very solid in terms of the move itself. So good, fairly good day of trade. Let's look at even the Nifty 50 stocks and the heat map, and that'll indicate the kind of breadth you're seeing. Just look at that. That looks extremely strong overall. You're seeing nearly 35 stocks gaining 1% plus in trade today, and even 2% plus. We're seeing almost 11 counters to 12 counters gaining 2% plus. So very, very good in that sense overall. You're looking at the Fin Nifty and the Bank Nifty doing well for itself. Let's pull up the Bank Nifty and the constituents, and within that as well, some of the heavyweights really packing a punch. There you go. ICICI Kotak on top, along with an HDFC 1.25%. Now it may just be 1.25% for HDFC, but it constitutes nearly 30% of the Nifty Bank. So 800 points up on the Nifty Bank today, That is the other thing that's really standing out. Let's look at sectors one more time. And just look at the heat map with regard to where sectors are concerned. Look at that. Some of the, in the broader market, media, realty is standing out. But look at auto. It's doing phenomenally well for itself, 2.3%. Metals up 2% as well. The PSU banking index is up nearly 2% as well. So those are some pockets which are doing very, very well. The private bank as well as the Nifty bank up 1.6. We did speak about that. Some heavyweights there packing a punch. The Nifty Pharma is up 1%, slightly below 1%. Nifty IT, frankly, and the way it's going, likely will close at 1% plus higher as well by close of trade, hopefully. Let's look at the breadth, and that's where it becomes crucial. Let's look at that. There you go. That's the entire day's chart with regard to where the breadth is, and it's been such a strong day. That's what I really want to underline. Nearly 2,000 advances for just about 300 declines. So extremely good in terms of the breadth, which hasn't been visible in a while. It's been one day of the week, maybe, where if we are lucky, we'd get this kind of breadth, but we're seeing more traction. Hopefully this can last. So that's one thing where I'll have my eye on. Let's look at the Nifty mid cap and small cap indices, and intraday again. You'll see how both of them sitting at their highs. 1.6% for the Nifty mid cap, the Nifty small cap also sitting 2.3% higher. Both of those at their day's highs. But let's quickly take perspective, because on a day like this, super duper important. Kush, welcome, good afternoon. What's your take? Have we bounced back from the lows? Is the doom and gloom over?
Hey, hi, very good afternoon. I wish I could say yes to that, but there are certainly signs that are pointing towards that now. Yesterday we spoke of, how this consolidation rally is a little skeptical because, we haven't really broken out of that 22,500 kind of level. Once we do that, 22,800 is the most likely level. I mean, who knew we could get there in a day's time? This move was much needed to restore the faith, especially for the bulls, who've seen quite a beating and then just a phase of consolidation. So this is a much needed one. Are we out of the woods completely? I would say it's slightly early to call, but as I said, yes, there are signs pointing towards that. Speaking of those signs, Nifty is above the 20-day moving average after a little over a month's hiatus. And the kind of put writing that you're seeing at the 22,500, 22,600 kind of levels is again, a sign of confidence that, the bulls are, restoring in the market, that they wouldn't perhaps go down to those levels. Even if they retest, they might just bounce back. So healthy signs. Now from here on, where do we go next? 23,000 is the most immediate level. Couple of technical factors for that. One is the 50-day moving average comes bang on around the 23,000 mark. And also the call writing that we are seeing is, very heavily placed at the 23,000 level. So if you've got any positions, not a bad idea to continue to hold. If you want to play for the momentum, then sure, with about 100 point stop loss for a level of 23,000, you could still go long on the Nifty, at the current juncture as well. But yeah, I mean, this is a market where I would still prefer booking profits along the way.
Okay. Okay, still a market where you'd continue to book profits along the way. So interesting, that one. So what should you do? What are your picks, at least for the day, Kush, first off?
So going with both the calls on the long side. One, I've got EIH. The stock has actually done rather well in the last month and a half for itself. The 20-day moving average was taken out about 5 sessions ago yesterday, the 50-day moving average as well. Volumes and the delivery-based volumes have also been very, very encouraging, and this entire space has been seeing some traction, but this one stands out for us. From a near-term perspective, you're looking at targets of 375, 385, and 355 is a stop loss. The second one is Kaveri Seeds. Here too, we've seen a good up move, in the last about 2.5 months, probably a little more as well. Golden crossover of the 50 and the 20-day, 200-day moving average coming up. But this stock, with the kind of performances given in the market, which has seen this kind of battering, is commendable. We think that, once the market stabilizes and it starts to rebound, this could see much higher levels. But from a near to a medium-term perspective, your targets are 1186, 1226, and 1106 is where you place that stop loss.
I wonder, Kush, what you make of the Bank Nifty and ICICI Bank in particular. I mean, the kind of move we've seen over the last couple of days, especially from ICICI Bank, has been strong. What next for this Nifty 50 counter?
phenomenal to say the least. And especially when you put things in context, and when you talk about ICICI Bank, but just a quick overview on the bank nifty. We have been talking about this, downward sloping channel, this falling trend line resistance, and the bank nifty has been facing. Yesterday was, a brief, just a brief closing above it, but today we've closed, or rather we're trading significantly higher. And also what's happened in trading above this resistance mark is that it's taken out not only the 20 but also the 50-day moving average along with it. So I think this momentum could continue. The 47,700, 47,800 level, which was tested 4 times, will now act as a very strong medium-term support. As long as that is intact, you can continue and hold on to those strong positions. So you're looking at the target of 49,800, 50,000 as the next hurdle. Again, the same view here as Nifty for now, which is that if you've got a position, continue to hold. If not, with today's low, you could continue to build, or you could build a fresh position for targets of 49,900, about 50,000 odd levels. ICICI Bank has moved rather well, but might just face some resistance around the 1,300 mark. Couple of technical points, plus also the call congestion that might act up.
And what about Bajaj Finance and Finserv? Those twins were doing well in trade yesterday. Okay in trade today, given the kind of market that we're seeing. Relative to that, what's the sense at this point? Because plenty happening in terms of news on those counters, and therefore there's plenty of interest.
Indeed, I think Bajaj Finserv is something that I'll put on a wait and watch list for now. As you rightly pointed out, there's been a good move on both of them, but there are some signs of sluggishness and consolidation on Bajaj Finserv, where the 20-day moving average is acting as a pivot level. Sometimes 100 points below and sometimes 100 points above that. So Bajaj Finserv is something that you wait and watch. The momentum seems to have fizzled out. Profit booking has kicked in. So I will just consider this as a consolidation phase. If you've got a position in it, I don't think you need to worry. 1780 is a level where you put your stop loss and continue to hold. Bajaj Finance, on the other hand, is now once again shaping very interestingly. There is an ascending triangle formation in place where the 8700, 8720 zone is acting as a bit of a resistance. But the lows are now starting to shift higher. Once it moves past this 8700 mark and closes above that for a session or two, you could see further momentum, take it towards 8850, 9000 levels also. So Bajaj Finance are more constructive on. Bajaj Finance might just continue to consolidate for some more time.
Very interesting. Okay, so that's on some of the financial names. And what should one make of the auto index today, Kush? Because this 2% kind of move looking very solid, right? And are there any names that stand out for you within the auto pack today, or would you avoid?
Well, again, here we have to be a little, I wouldn't call it skeptical, but choosy. Like we discussed a couple of times in the past, what's happening is that within the sectors also there are a handful of names that are trying to just pick their way, pick the weight up. Even for Nifty Auto, there is this 20-day moving average which is now starting to cross. But I'm not sure if this is a strong enough sign just yet to say that the worst is over and that the auto index or perhaps the component also could continue to move higher. But if you look at if you break it down and look at some of the names, something like a Mahindra & Mahindra, very interesting moves on this one. I think the levels that it has come to, and it's shaping up for a good up move rally. This is something that you can consider from a near-term perspective also, perhaps even a medium-term perspective also. But 2900 and 3000 will start acting as the next target, and 2720, the 20-day moving average, will now start acting as support. Tata Motors, this is a long-term support of 600. It was 2015 when Tata Motors touched 600 for the first time, and then it took 8 years to come back to that level. So it's on very strong long-term averages, but as I've said in the past, it has a tendency of consolidating for a long time. If you've got a 12, 18 month plus kind of a horizon, is only when you should consider Tata Motors. Up until then, I think Mahindra & Mahindra is the stock that you play with.
Okay, Kush, stay on with us. Unmesh Sharma is our special guest in the studio on this edition of India Market Close. He's head of institutional equities at HDFC Securities, and we couldn't have thought of a better time than to have him in. Unmesh, first of all, thank you for coming into our offices. Always a pleasure to have you here.
No, it's a pleasure to be here.
Yeah, and what a day, what a good day to have this conversation, considering that the market seems to have shrugged off some of its sulk. Having said that, how cautious how cautiously optimistic are you right now of this, holding on for some time? Because people are hurting out there.
Yeah, I think what's happened is that even in a bear market, you do get the occasional rally. It does feel like it's one of those days.
Oh, okay.
I think also what's happened is that in the last few days, the expectations in the near term around the rates have changed. So there's a little bit of that. I think what happened was that once, this is the week where all the central banks are going to come and hold rates, which has been, something which has not happened for a while, right? So if you see what happened two weeks ago, the expectation was that there will be 2 rate cuts in the US. Now it is like 3. So I think the market's kind of settling, getting used to what's going on. So before the next Twitter feed hits and something goes wrong with tariffs somewhere, for the time being, I think the market's just taking a breath of relief, let's put it that way.
I think it's Truth Social now, not so much Twitter.
Oh yeah, yeah, true. I think I'm very old school. I'm even calling it Twitter. I think it's called X now.
X now. No, so just on that point, actually leads perfectly to the next point that I wanted to ask you about. On how outsized will the impact of what's happening internationally continue to be on Indian markets? Because look at what we're expecting in just the next 48 hours or 48 to 72 hours. Tonight, there's a call between Trump and Putin. You may have, and he's promising, but you may have some end to a war which has gone on for over 2 years. The reverse also may happen. And then you have this Fed meet. All right, they'll go ahead with a pause, but important to see what they're saying. Is this going to be the big factor before our own corporate results hit and maybe a bit of reality check there?
Yeah. So I think let's divide the market into 2 parts. Okay, the Nifty is what everyone looks at.
Yeah.
The impact on Nifty is very clearly now driven by macro factors. So is this a macro world? The answer is overwhelmingly yes. Okay, India to a large extent, if you see the way it was in the last few years, was driven by individual corporate earnings. And then what was happening in India, I think that it's now being primarily driven by what's happening globally. And that's not only true for India, but all emerging markets and maybe even some of the developed markets. So it's become more important sometimes to actually watch what's happening in the feed overnight, and you wake up to news and you realize that something new has happened, and that's what's driving sentiment globally as far as risk on, risk off is concerned. But if you look at the small and mid cap pack, I think continues to driven and have an equal balance between what's happening globally, but also what's happening on flows domestically, as well as what's actually happening on the individual companies at that ground. So I would put a nuanced view to it, but overwhelmingly large number of investors and viewers would be looking at the Nifty level, and that is being driven in the macro environment, clearly.
Okay. So, we've spoken a bit about macro. I want to try and understand your view with regard to small and mid cap. You spoke at the start of this conversation, you spoke about how this could be a rally in a larger bear market.
Yeah.
Is that your real view? Is that the sense that you're getting? And if so, what's keeping you skeptical?
Yeah, so on small and mid cap, very clearly, I think that whatever has happened in the last few days is a bear market rally. I feel that there is 3 things which could drive another downside. Now, they may not play out, but the odds are in favor of that happening. The first is that if you look at the valuations in the small mid cap, despite the correction of 20-25% from the peak in the mid cap index or the small cap index, are still 20 to 25% above the long-term mean. And when I say long-term, I'm looking real long-term, which is 10-15 years and not the last 5 years. Okay, so you put that into context. What that means is that a lot of these valuations are driven by liquidity, and the domestic liquidity is what was keeping it up. So technically, now what is actually happening is that every time a domestic investor sells, more likely to have an impact on small mid cap. So that's one. So we have to keep a very close eye on what happened in flows. Now, March is usually not a good month to keep an eye, because all your RMs and all your investors are saying that, for tax reasons or other reasons, let's not book any profit now. So we'll see what happens in April. The second is that small mid caps usually driven by micro events, which means earnings becomes very critical. Now you look at what's happened on earnings last quarter, and I'm looking at the trend.
Sure.
We cover 270 stocks in HDFC Securities. Only 30% have beaten earnings.
Got it.
And now we obviously end up covering like a whole lot of small and mid cap names. I believe that the downgrade cycle in that has not really come through as such, and maybe this is the quarter in which we will actually test out whether the earnings are going to come through or not. Because when valuations were that high, almost every analyst and was looking 2 years out and actually had raised earnings estimates to a point where let's see whether they play out. I believe that there could be downside on that. And the third is, which is related to the first point, is that at this point in time, while the February was a little soft in terms of mutual fund flows, we really haven't seen any redemption cycle. Now, I hope it doesn't happen, okay? Sure. But when you have a set of investors who've not seen returns even in SIPs for a year or two, and when the economy is kind of slowing down, so you need some money to pay off your real estate loans, you maybe, fixed deposit rates have gone up. If you put all that into context, there is a chance that you may see some redemption. It may not happen at the net level. What may happen is the mutual fund industry as a whole can continue to receive inflows, but the shift may happen from small mid-cap to large. Now, these schemes have become large, okay? Some of these mid-cap schemes are like 70,000 crores, 50,000 crores, 40,000 crores. You get 10,000 crores out of that and put into large cap, the aggregate number will look okay, but you could get some sell-off in the small mid-caps maybe after the next result. So I think we'll wait and watch. I think that this is a bear market rally.
And therefore, would you say that you're a buyer in large caps, or would you avoid that space as well? You've spoken about small and
so we are brokers, you are buying. Okay.
What are you telling people who are calling you up? Actually, Unmesh, that's what we want to know.
Absolutely.
When you're getting all of
what do you avoid and what do you
I'm sure you're getting a lot of calls that you're fielding right now.
Yeah, all the time. All the time. No, so look, I think risk off is the place to be. It shows up in our model portfolio as well. Honestly, to give a bit of background, we have been cautious since September. In fact, that's our published view, right? And it was quite painful because the stocks kept going up and you get cautious. People don't like losing opportunity. They are okay to lose money. They are not okay to lose opportunity. But then luckily that's played out, right?
Till they start losing money.
Yeah, till they start losing money, then they come and ask you, now what do I do? Like I told you so, but anyway. So, okay, on a serious note, I think what we are doing right now is we think that you should get cautious. You have a lot more on the large caps, lot more domestic, whatever cannot be impacted by global phenomena, not so much dependent on exports, basically. So if you look at our model portfolio, it's very heavily skewed towards domestic stories like industrials, real estate, because of the tax cut, so there's a little bit of a boost there. Consumer discretionary, large banks. Now, large banks is a trade which has not really played out, but at the same point in time, we still believe that that is the place to be even now.
Large banks, but NBFCs as well? Or the rest of the financials, you're on the...
Yeah, so look, outside of the large banks, what happens is that invariably from the smaller banks onwards, okay, you are also looking at a slight slowdown cycle, okay? So you put that all into context, what will end up happening is that analysts have started flagging off pockets of stress, okay, like microfinance is well known, right? SME is kind of getting there. There are pockets where there is a stress over there. What we believe is that large banks being granular and widespread gives you protection. If you are looking at NBFCs, then you really need to dig into what is the quality of the book, where is the lending happening, and specifically. So what you would want to avoid is maybe at the small end SME, microfinance, of course, I don't think I need to say that, and on non-granular retail books, we think that there could be some stress there, so just avoid those. You want to go retail and play that, I think the capital market and insurance inclusion story still remains interesting. Okay, so we have an overweight on MCX, for example, which is an exchange, right? Or you have life insurance companies like SBI Life. So you can play the retail story that way instead of trying to go into the lending part. Large corporate is like great shape, so large banks kind of more skewed there. We believe that that's how you would build your BFSI portfolio.
So if you want to build I won't say Teflon coated portfolio, but at least a heat resistant portfolio right now, and I think that's the need of the hour, would your discretionary consumption theme remain or get skewed out?
Because no, discretionary consumption is overweight for us. A heavy overweight, I think it's probably the most overweight sector that we have.
Yeah, so the platform company variety or more now, your high-end jewelry, I mean, just give us some color on what you're like.
So what we have is, so jewelry, because you asked the specific question, we have to keep an eye on whether the profits are coming from gold inflation or it's coming from actually making money by having margins, right? So I don't think gold is falling. That's not the point I'm making. But you want to know where the money is coming from. But if you look at our consumer discretionary, we have even real estate in there. So Soba is in there. There is some media. There is some things like Compton Consumer, Retail Avenue is there, and then we also push the first derivative of that, which is EMS. So you are basically playing how do you reach the consumption basket. And this is broadly where we are. We are also overweight on autos, but that's a little bit more skewed towards the fact that rural is going strong for the time being. So consumer discretionary and rural consumer discretionary is basically how we are playing it.
I'm assuming you're not excited about EVs right now, or are you seeing any, I'm just wondering, this whole Tesla, then BYD, what is your take on the M&M Tata Motors EV story, or that leg of it? Already priced in, discounted?
See, M&M, Maruti, as well as generally on EVs, one is that just like any other part of the world, what we are noticing is that two things, and it's a nuanced answer, so just bear with me, is that on the two-wheelers, it's a little bit more obvious, because it's easier to charge, easier to put into some garage and something, and it's a direct replacement. As far as the EV infrastructure on the four-wheelers is concerned, globally things got a lot more excited and then kind of slowed down, with the exception of China, because that is more driven by the government. But if you look globally, this is what has happened. The second is that if you look at the experience of what's happening in the US, where the first EV ownership cycle has ended, what's happened is that actually the residual value of the EV has been quite poor. Nobody is really buying those, let's put it this way. So your second-hand car market in the EV space has collapsed. As a result of which now everyone's kind of evaluating what to do with it. So is EV a real story? Answer is yes. Okay, but till the time the critical infrastructure comes about, it's always going to remain a localized story. I think that very impressively, the local manufacturers, like especially Mahindra, for example, has got it right that they are going slow, steady. They are building their own product, which is a lot more, domestic, and they are not building a very big hype story around it. So at the bottom end, I think that the Indian manufacturers, Tata and Mahindra, will end up doing very well at a pace which is not going to be as exciting as what you thought. BYD, Tesla, etc. are more at the higher end, even if the tariffs do get cut, and you can even if that happens, I think that's a longer term story, affects the top 10-15% of the basket. So from a stock market perspective, I think the story is more in Mahindra and Tata in EVs than actually in what happens to BYD and Tesla.
Unmesh, curious to know view on IT, and I want to go a little bit granular on this one. Yesterday, you had Citigroup come out and say they're going to hire locally and reduce their reliance on subcontracting. That may impact some of our IT players in a big way, because BFSI as a segment is obviously the largest. I'm curious to know how you look at it. 3 rate cuts plus all of this playing out. Is IT a good play? We've seen a decent correction as well.
Okay, so this one, you have to break up IT into two different things. One is what happens to the large IT players, which is basically the Infosys, Wipro, TCS, HCL. And then what happens to maybe what you would call the tier after that. I think what's happening is on the lower tier, it's a little bit easier, because you basically need to know who is skewed to the IT trends like AI. Because that work is always going to keep getting done.
Correct.
On the larger ones, I think there is one very interesting thing. In fact, I was in the US last October, and what I noticed was that a lot of very large campuses of Indian IT companies have come up over there. The reliance of these companies on the visa regime is basically a lot lesser than before. At the same point in time, you have to understand that there is a global wave which is happening on everything kind of becoming a little bit more isolated. That's not just in IT, that's globally. And I think a lot of American companies are more likely to give statements saying we are going to do a little bit more locally, because it just works for the local politics there.
Yeah.
Okay, so that noise is not going to end for the next 4 years. What I think Indian companies have done very impressively is that if you look at Trump 1.0, is that they started hiring a lot more in the US itself.
Yeah.
So I think we'll be fine. The only problem is that there will be a lot of noise on the way. So on all 4, we have an equal weight position, which is like stick to the index, do nothing. On the large ones. On the smaller ones, we are very granular as to who does what.
Well, time to tread carefully. Great insights, Umesh. Thank you so much. Always so much fun speaking with you.
Thank you.
On, Indian IT, the interesting thing, there's this new software where if you have a call from an Indian call center, it changes your accent so that the American on the other side doesn't feel disturbed. So, as terribly racist as it sounds, it's solutions that people are finding to, navigate this time.
Absolutely.
Great to have you here, Umesh. Thank you so much.
Thank you. Thanks.
Yeah.
Thanks.
Okay, that was the HDFC security view, and I think very sensible view on the focus on large cap and also being very, very specific when it comes to certain stocks. And Kush, since we ended that conversation with IT, let me get your take on, TCS particularly. A Citi note out on TCS today, which has cut its target price as well. And Indian IT is going to be in focus over the next couple of weeks. Anything over here that you think is showing momentum?
Surprisingly, the mid-cap names and very select ones, like Persistent, Coforge, these are the ones that are actually showing some strength where they're holding on to some key technical levels. So if I were to still, bet, I would actually go with something like a Persistent or a Coforge. But as far as TCS goes, the kind of move that we've seen over the last, 5-7 sessions is actually a rebound from oversold territories. So I wouldn't really read too much into it. I think from, a medium-term perspective, I think there is some more downside left in TCS. Perhaps even a 3350 kind of a level can be tested. So I will wait and watch. I will not be, all excited just because the stock, a big stock like TCS has fallen so much. Still prefer Persistent and Coforge over TCS at the moment.
Okay, so not too exciting on IT, and as reflecting on the street, look at TCS down about 15% in the last 3 months and having another down day. But, we've been speaking about the focus on Bajaj Group. On the back of the JV partner alliance's intent to exit the insurance partnership. What does this mean for Bajaj's insurance business? Somit is bringing in more details.
Bajaj Finance will own close to 75.01% stake in both the insurance entities, that is the general insurance entity and the life insurance entity. How will the funding happen for this? Now, Bajaj Finance will need close to a cash of around 940 crore rupees, which is much less compared to their current cash balance of around 3,500 crore rupees, while for Bajaj Holding, they will be required cash of around 18,600 crore rupees for this transaction, while their current cash balance stands at close to 19,000 odd crore rupees. Now, when it comes to the timelines and approvals, the intended timeline or the stated timeline by Alliance is around July 16, 2026. This is by when they expect this deal to complete. And when it comes to approval, they will be needing approvals from CCI, IRDI and other regulatory boards as well. Now comes the most important part, that is the valuation. Now this deal values the life insurance business at close to 40,000 crore rupees, while the general insurance business is valued at close to 53,000 crore rupees. Now this is a discount compared to what the street has been giving the value or assigning the value to both these entities, that is the life and the general business. Now for the life business, an average of 7 broking firms value the entity at close to 49,000 crore rupees, while the general insurance business is valued at close to 63,000 crore rupees. And this deal is happening at a discount of nearly 14 to 19% based on the value asked by Alliance from the Bajaj Group. Now, lastly, what could now happen going forward? Now, this transition from Alliance to Bajaj will give Bajaj Group a better control operation-wise. It could also removes the long pending overhang that the street has been expecting an exit of Alliance Group since October. So that overhang also goes away from Bajaj Finserv share prices. But on the flip side, this could potentially also mean that Alliance could now pursue their own insurance strategy in the country. Given the post the 100% FDI approval, they could start their own insurance both in the life and the general business, and they could also go ahead and tie up with any other financial service entity, and this could lead to higher competition when it comes to the life and general insurance business going forward.
Thanks so much for that, Somit. Let me bring on board Ashutosh Mishra, Head of Research Institutional Equity at Ashika Stock Broking, to talk about exactly that. Ashutosh, thanks so much for joining us on the phone line this afternoon. Just tell us your sense with regard to the Alliance exit, what it gives in terms of leverage to the Bajaj Group, and what it means overall in terms of valuations, because a large part of this stake is going to go to Bajaj Holding. Bajaj Finserv is just going to buy around 1% or thereabouts. Just tell us where the value will lie in your opinion.
So I think it's a win-win deal for both the parties, in my view. Number one, Bajaj, in the case of, if I look from the Bajaj Finance perspective, which is a listed entity, yes, it seems that they have valued these two businesses at relatively lower valuation than what market was giving that. But just think from the buyer's perspective. From buyer's perspective, they have got these business at a relatively lower valuations out there. So this is good for the Bajaj Finance perspective, in my view. If I look at the business, there will be any impact of Bajaj Finance because of Allianz exit? I don't think so. Any of these business will get impacted. Their team is quite robust. This business was run by mainly Bajaj people only. At the board level and other strategic level, yes, Allianz contribution was there. So I don't think so any major difference will become, and at what price they are able to acquire back this stake from the Alliance is good from a medium to long term perspective. We see in the short term there is a reaction part of it, but I see more of this as a positive.
Just trying to understand why that reaction, Ashutosh. What is the key concern there? Is it the valuations, or is it where strategically the business is going to go on the insurance leg? Are there concerns about how much time for the IPO? Can you just give us your thoughts on this?
So a mix of it. You have discussed all the 3-4 things which is there in the mind of investors. Investors are also thinking who Alliance is going to partner with, or are they going to come up with individually, and as they have taken this business along with the Bajaj to such a great level. So what will be their next step? So there is a genuine concern market have, and because of that we are seeing some reactions coming in at this point of time. But when we look only from the investor as of a Bajaj Finserv, we see this deal is a very well planned, very well executed.
Okay. Thank you so much for that, Ashutosh Mishra there of Ashika Stock Broking. And I think that's really the big point. Who does Alliance partner with? And are you going to now see more competition in the space, which is already heated up? I mean, there's 100% FDI in insurance, but will Alliance go it alone? Will they find another partner? Who wants to come in and make a splash in financials and have a hold all end-to-end financial services kind of an offering apart from Bajaj Finance?
There could be plenty, Tamanna, to be frank, because there are so many fintechs in the industry as well who need large partners.
And one large player looking to expand aggressively.
And having a grip of the sector, right? I mean, more importantly. So yeah, but it's going to be certainly very interesting, something that we'll have to keep our eyes glued on. But let's slip into a very, very short break. On the other side, we'll have our segment Heard on the Street, followed by we'll start discussing a few stocks and have a global view as well. So stay tuned, plenty lined up. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Markets today completely in full bloom, I would say, and look at who's come out to play. Look at some of the gainers on the Nifty 500 stocks that have been languishing for a while. A Finolex Cable about 13% up, Mastech 18% up this afternoon, Raymond also singing about 16% up, 361 WAM catches my eye, so does AB Real Estate. So all sorts of movement there. The advanced decline ratio also looking robust, actually quite pretty, 464 to 46 on the Nifty 500. So it's a good day on the market, but even a better time to tell you what is the chatter we're hearing on the street. And Samit Sarkar, as always.
There's a lot of things that we are hearing in the market. Specifically, if you listen, now if you focus on the fact that 22,700 we have crossed, dealers are indicating that there's nothing to stop markets till 23,000. So at least another 200 points is what the street is expecting when it comes to the benchmark. But stock specific action, if you look at, firstly it's at SBI, GAIL, ICICI Bank and Pharma. Now dealers are indicating that there are significant buying actions seen in large HNI desks, specifically in these three names and one sector overall, the Nifty Pharma Index. It has been gaining for the second consecutive session, and it has been large HNIs which have been quite active in these counters. Then there is Kalyan Jeweler, which remains in focus. Small buy flows is what dealers are indicating on mutual fund desk. When it comes to Kalyan Jewellers, the stock is up around 1.8% in trade on the back of mutual fund buying is what dealers are indicating. Another stock that we need to watch out for is Delivery. Now the stock is up 4% in trade, but dealers are indicating that in the next couple of days or most likely this week, there could be a potential block deal that could come in from a foreign private equity investor. But do remember, it is expected to be a clean out trade, and hence it could be one of the overhangs that could go away from Delivery, and hence the stock might be up 4% in trade. Then Reliance Industries is one stock specifically that dealers are quite talking about today. What their channel checks or their channel checks are suggesting is that potentially the Reliance Industries might have hired bankers for Geo Platforms IPO. This IPO could come in the next 4 to 6 months, and they have hired a foreign banker and a domestic banker as well, and obviously the foreign banker is the lead banker for this IPO. And given the fact that we are completing now 5 years since Reliance Industries are actually inducted investors in Jio platforms, there might be an option now to give them a likely exit going forward. And lastly, the stock that we need to watch out for is Manappuram Finance. Now, board meet is on March 20th. Now, nearly 15 days back, we had indicated that there is a potential buyout that could come in from a private equity investors, and most likely this board meet announcement will have that announcement also. That is what the street is expecting, and the stake sale could be at a premium to the current market price, and there could be an open offer as well. Now, dealers are also indicating that the offer price for the open offer and this deal could be anywhere between 225 to 235, and if you look at the current market price, it's at around 210. So yes, at a 15 to 20% or 20 rupees premium compared to the current market price. So keep an eye out for Manappuram Finance. Healthy 10% premium is what they're expecting the deal to be.
Yeah, and from here as well, a likely 10% move if that were to play out, because at anything between 225 to 235 will mean 10% left. But you know what's kind of standing out here, Somit, is that you've got Manappuram doesn't need to do an equity raise.
Right.
And therefore, this board meeting for a fundraise at a time when there is a PE investor exit, how likely is it that it's to do with the exit of the promoters and the incoming PE investor? In your view, is that very, very likely? Because we've been talking about this since a couple of weeks.
Well, yes, most likely this is going to happen, but what I'm understanding is that promoter might not exit fully. Some stake he might continue to hold, but it will be important to know whether who's going to run the functions and the operations of Manappuram Finance going forward. Because even if they do some fundraise, what will they actually do with this amount of? Because I guess their capital adequacy ratio is at around 30%, which is still higher than what Muthoot Finance has.
Yes.
So they are capitalized sufficiently, and moreover there would be more funds coming in. Could be a warrant issue as well, 25% right now, 75% later. So yeah,
they've kept themselves open.
The structure of the deal is something that we need to still watch out for.
And of course, we invite Manappuram Finance to come and speak with us and explain what's going on. But thank you, as always, Somit. Heard on the Street is a segment that you should not miss every day at this time on NDTV Profit. But let's get more views in. Aditya Agarwala, Head of Research and Investment at Invest4Edu, joining us, as is Aditya Shah, founder at Hercules Advisors. Kush Bora, founder at kushbora.com, of course, continues. Welcome to all of you, and thank you so much for speaking with us. You know, we were speaking quite extensively about Manappuram. So, Aditya, let me take that question to you first. What are you making of all the buzz in the stock? And add on a point that, you know, we had in a conversation earlier with Umesh of HDFC Securities, who said that when you're looking at gold players, you need to look at how much of their valuations are coming in from the price of gold as well. Considering gold is hitting all-time highs, how are you looking at a Manappuram? Is this good fundamentally for businesses that take gold on loans?
Last month, RBI had eased off the risk weights on NBFCs that would have benefited companies like Manappuram and Muthoot per se. Now, the problem with Manappuram and Muthoot is the companies are trying to move away from gold and diversify into microfinance lending, into home lending. Specifically with Manappuram, the Ashirwad micro lending company that is there, that is especially diversifying into the micro lending side of it. So from my perspective, Muthoot is doing pretty well, and Muthoot Finance is something that you should really concentrate on. Now on Manappuram Finance, if the promoter wants to really exit, it is not very clear as to who will run the company and what is the future course of the company per se. So in my perspective, the stock is not really cheap. It is now trading at just about 2 times price to book. This at a time when the entire microfinance sector is available nearly about at 1 time price to book. I will tend to avoid and get some clarity on Manappuram and then go on from there. So avoid and monitor the developments that are going on Manappuram.
Manappuram on the radar. The stock of the day, though, on the radar is Paytm. Paytm has seen a spike today. I mean, everything is up and about, but the spike in Paytm is interesting, nearly 7% up. And the news flow is not on the face of it perhaps that significant. Paytm Money essentially has got a SEBI research analyst nod. Now I'm going across to Harsh, who's tracking about why this has led to so much excitement on Paytm, and of course that is our stock of the day.
Well, yes, absolutely. So buoyancy, of course, news-based possibly, But let's just zoom out a little bit, because from the highs of December, the stock has come off substantially. And when you're looking at the graph as well, from 1,000 plus, the stock was languishing near the 660 mark. And thereafter, we've seen a bit of a bounce back. So it's one of the factors likely that's playing out is the fact that we've seen a sharp gash on the stock. Now the stock is starting to possibly recover after that 30+% fall since December. So that's probably the first factor. Second one is, of course, today's announcement. As Tamanna rightly pointed out, Paytm Money is now a registered research analyst. Thereby, Paytm Money is able to give its customers research and insights, which could help increase trades as well as increase activity on the platform, which could possibly benefit it and could also onboard more customers as a result of this, could push customers to come to the Paytm platform. Now, the other big buzz around Paytm as well as all of Fintech is a case to increase merchant discount rates. There's been this chatter since a while, but it's again come back to the forefront with the fact that there's enough penetration of UPI and therefore a case to increase merchant discount rates is well coming to the fore. In terms of the way in which it will go and it will impact Paytm, currently at around 6 to 7 bips is what the MDR is, which Paytm makes. Even a few basis points of increase could well make a huge difference to Paytm's numbers. So you might want to keep your eye out on that. And then, of course, the overall regulatory landscape has started to turn favorable. And some of those reasons, along with the buzz in markets already today, is probably what's aiding the stock. Okay, let me go straight across to Aditya actually. Aditya Shah, give me your view with regard to Paytm at this point. It's come off the highs. I know you're not a big fan, but do you believe that there is valuation support which Paytm currently enjoys?
Harsh, so I didn't like Paytm at its IPO. I didn't like when Paytm was at 350 or 400. And I don't like Paytm now as well. I don't really understand what kind of a business model does Paytm really want to approach. Now with all the regulatory hurdles behind them, they are now sort of an insurance distributor. Now they've got this RA license. I don't know what will they do with this RA license. RAs have severe restrictions on what kind of advice that they can give out. In fact, many RAs are surrendering their licenses. And at that time, Paytm being Paytm, is trying to go and take a license per se. So I don't really understand the business model per se. It seems that Paytm wants to be jack of all trades, but master of none. In my opinion, I would tend to avoid such companies where there's no clear strategy on what the business model really is. If you want to go into new age companies, I would stick to companies like like Zomato or a Swiggy or to some extent Nykaa as well, but not Paytm.
Okay. So Paytm is seeing a bounce today. Is it something that can last on the charts? I'm going to ask Aditya Agarwala as well. But Aditya, good afternoon to you. First, let's get your picks for this afternoon.
Hi, Tamanna. Good afternoon. So I've got a couple of buy recommendations. I believe the up move is likely to continue in the coming trading sessions. So I've got a Kotak Mahindra Bank buy for a target of 2200 with the stop loss at 1950, one of the strongest looking private sector banks currently. The second is a buy on Coforge. We all know that IT stocks have corrected significantly, especially the mid cap end and the large cap ends of the IT. I think at current levels, one should definitely go ahead and look at a short covering rally. So Coforge is a buy for a target of 8,000 with a stop loss on the downside at 7250. Now, coming to Paytm, I think there's a bit of a pop in the stock and that is likely to continue. It has taken support at the 200 DMA. From there, it's bounced back. I see good volume action in the stock trading about 20 DMA. So everything point towards a higher level from current levels. So 850 to about 800 is what I'm eyeing on the stock. On the downside, 700 is a good support area. So risk to reward is also in favor of going long at Paytm. So I'll stick my neck out and go long on Paytm with the stop loss just on 700 odd levels and look for a target of 850 on the upside in the near term.
Meanwhile, Nifty has hit the 22,800 mark and then receded a bit. Aditya Agarwala, very quick view on the charts and the technicals, and I'm going to come to Kush as well. Somit Sarkar a few minutes ago said that what he's hearing from dealer rooms is that nothing really standing in the way of 23,000 right now. Would you agree?
I think 23,000 is coming, but before that, there could be a dip, or maybe 100, 200 point dip in the Nifty before it's 23,000. I'll closely watch out for the Bank Nifty, Tamanna, because this is one index which has underperformed big time, and Nifty has to hit 23,000. The Bank Nifty has to outperform from here on. So Bank Nifty is something which is on my radar. Maybe I'll go long on Bank Nifty as compared to the Nifty, because there I think 50,000 is on the cards rather than Nifty hitting 23,000, which is just about 200 point away. I think Bank Nifty is something that one should clearly play out, and I think 51,000 is something that can be seen on the Bank Nifty.
Now, 33 minutes to go for close. Aditya Agarwala, make a call. Make a call that our viewers are watching on the Nifty and the Bank Nifty. What are you doing
So
right now?
I'll avoid going long on the Nifty. I'll take a long trade on Bank Nifty, Tamanna, at current levels. Play for a target of 49,500. Place a stop loss somewhere around 49,100 on the downside.
Okay, Kush is smiling, but the same questions coming for you as well, Kush. Specific calls and specific targets.
So I'm smiling because probably so many dealers are listening to me.
Okay. Okay then. Yeah, I think I can't hear you.
Yeah, we've lost his audio.
Yeah. Kush, can you? Yeah, there you go. Yes, please go ahead.
Sure. So I saw on record at 2 p.m. I said that 23,000 is the next level to watch for. The call condition falls there. Not a significant resistance from here up until 23,000. So if you have a long position, continue to hold. If you don't, you could add some more for levels of 23,000 with a stop loss at 20,700. Similar view for Bank Nifty, very similar view for Bank Nifty. 48,800, 48,700 will now start acting as support zone. So that's your stop loss. For 49,900, 50,000, you could continue, or you could consider a fresh long position for Bank Nifty as well.
You could well see a 1,000-point move on the Bank Nifty today, Tamanna. That looks like a very solid move that we've seen.
Yeah. And one big push is what's happening globally. We have David Roche, a strategist at Quantum Strategy, standing by. David, thank you for your patience and thank you so much for your time. We'll just quickly set this up for our viewers, and we're just switching gears for a second to what's happening globally. It's going to be a big day in the important 24 hours as well from the Ukraine-Russia perspective. But first, European stocks are up. Germany really leading the charge, up about 1% ahead of a debt reform vote that we will be seeing today. The FTSE also up about 0.5%. The CAC, DAX all doing pretty well. The DAX up over 1% today. So it's a good day overall. David, what has caused the shift in mood? Is there a sense that we might hear something concrete on a cease of war between Ukraine and Russia? Is that what we're seeing playing out in markets across the board and European markets as well?
I think not. Okay. Frankly, on the Ukraine-US front, or rather the Russian-US front, what you're seeing is probably that Putin has been successful in diverting Trump from his agenda of giving a take it or leave it ceasefire deal to Putin, to Trump actually conceding more things to Putin that Putin asks for. And that will produce not peace in Europe, it'll produce further fragmentation, and quite likely that European states will have great difficulty in signing the Ukrainian peace deal agreed by Trump, which will just be, frankly, a sellout to Russia for reasons which nobody except a psychiatrist can understand. The other thing that's happening in Europe, which is you mentioned and is important, is that the move towards assuring European defense by Europeans, which will take 5 or 6 years, that is gaining a lot of momentum. The coalition of the willing to actually put troops in Ukraine and defend Ukraine, Trump may try and undo it, but I think the Europeans, that's a red line. They're going to have to do that to defend Ukraine. The US will withdraw gradually from Europe, and what we're seeing, most concrete steps as regards European defense, is what's happening in Germany, and we will probably get the approval of the bill to spend 500 billion euros over 10 years on the infrastructure and vastly expand defense expenditure. That bill, which of course is over and above the so-called debt brake, I think that will be granted authorization today. by the exiting the old Bundestag before it leaves office and the new Bundestag comes in. That's what's driving the German market.
And David, Harsh also joining in. I want to understand from you. Good morning. Want to understand from you what this debt reform vote will actually mean. So it'll obviously mean higher defense spend. But does it also act as a base to try and kickstart the European economy in a larger fashion? Will Europe be more relevant in the next 2 to 3 years?
Excellent question. It works in numerous different ways. First of all, there's 500 billion over 10 years, 50 billion a year, call it a little over 1% of GDP, to be spent on infrastructure, including green projects. Second of all, any increase in defense expenditure over 1% of GDP is exempted from the debt brake. So essentially what you're doing is you are relaxing two major prongs or two major efforts to ensure European defense, with Germany leading the way and the UK and France also doing their bit. And on the other hand, you're looking to renovate the creaking infrastructure of what used to be the best infrastructure in Europe and possibly in the world outside of Japan. So those two things are important. And what it means is that the German government will lead the way and the European Union will follow. It's already following on allowing defense expenditure to be exempted from the Growth and Stability Pact limits on debts for countries. So it's claimed that'll be 650 billion. I doubt it very much. I think it might be half that figure. And the EU is going to launch bonds or find other forms of finance to finance 150 billion on European defense expenditure. So actually, you're looking at both Germany breaking the debt brake. It's only got 62% of GDP as sovereign debt, so plenty of room. And the Europeans doing the same thing. So actually, the European locomotive is starting to move in harmony. Now, it won't be smooth and it won't be a straight line, but it will happen.
Okay, thank you so much, David, for speaking with us. That's an interesting view. A lot happening, in the German markets as well. So that's one to watch. And of course, any announcements over the next 12 to 24 hours on Ukraine, Russia will be exciting. So thank you for that. We'll take a very, very short break, but markets are looking exciting. Just look at where the Bank Nifty is right now, inches away from the 50,000 mark on the Bank Nifty, the 22,800 mark, happily breached by the Nifty. What should be your buy today, sell tomorrow call? All of that after this break. Stay tuned.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the
Right, welcome back. You're watching India Market Close, and it's a very strong day that we're seeing where the Nifty 50 is concerned. A good solid move. We're sitting pretty. 22,800 breached now comfortably, it seems. Hopefully only gets better from here. And to join us in conversation, distinguished panel. Kush Bora has been there all through, but we are also joined in by Amrish Baliga now, independent market analyst. Amrish, what do you make of the move today? What really is the trigger in your view?
No, I think the trigger possibly could be the macro data which has just come out. But at the same time, I think the market was oversold. And at levels of that 22,000, 22,200, 300, I think there was a decent amount of value buying which had happened. So this, I mean, the way I see it is, this is more of a bounce back. I don't think this is a fresh move up. So, I mean, I'll not be too surprised if it doesn't go beyond 23,000, 23,500. I think that's the level where it can go to maximum. And those who have, I think, bought at lower levels, it'll make sense to at least book some profits at about 20,000, 20,500 levels. Because, like I said, I don't see a fresh move further from there.
So, hi Amrish, Tamanna here. What macro data has got you enthused?
See, I mean, the trade data which came.
Yeah, the CAD, current account deficit has shrunk. But also on the back of imports coming down, which would in different times, maybe.
No, there are two ways of looking at it. I mean, one is because imports are coming down, it's expected that possibly we are, heading for a slowdown. But then, see, if you're talking of longer term, I really don't expect India to slow down. That growth which we are seeing will continue. Whether it's 6.5%, 7% or 8% or 6%. India would be growing faster than most of the other economies around. So if you're talking in the longer term basis, clearly, I think the money has to come back to India. I think we are bracing for a sort of a tough time only in the short term, possibly the next quarter or two, maximum 3 quarters.
Okay, I'm very tempted to ask Amrish if he's deploying cash right now before we get to our next report. Let me actually do that very quickly. Amrish, are you beginning to deploy in the market right now, or are you saying let me shore up for the next bump in the road?
No. In fact, I was sitting on a decent amount of cash.
Yeah.
Right from possibly June, July last year. I was saying that markets are overvalued and we had gotten to about 40% of cash. And it was tough sitting on cash from June, July to about August, September, when the markets were seeing new highs. But then, yes, we were able to deploy most of it in the last couple of weeks. In fact, by the end of last week, we were nearly fully deployed. We are just sitting on about 10% cash right now. But like I said, right now we are expecting this bounce after such a sharp fall. So maybe at levels of 23,000, 23,500 levels, I'll again increase my cash levels by another 10 to 15%. So finally, I would be at 20, 25% at index levels of 20,500.
Interesting. That's great. Before I grill Amrish a little more about what he is liking and where he is deploying, I'm going to go across to Mahima for our bull versus bear segment. We've put the spotlight today on Godrej Consumer. The stock has surged almost 3% on a Goldman Sachs note, which is quite excited about GCPL. They're saying that the last quarter results is more of an aberration, more of a blip, isn't it, Mahima?
Absolutely. They're saying that, going forward, they're expecting a bounce back in Godrej Consumer's overall performance. Now, in terms of the bull versus bear case, Q3, of course, has been muted for the counter. Overall, we've seen volumes of flat in Q3 YOY basis, but volume recovery will be seen in 2 quarters going ahead is what the management has guided. In terms of the international business, Indonesia and overall Asia business has done well. Indonesia volumes were up by 6% and sales were up by around 9%. But Africa business, US business and Middle East business is where the concern really is because the sales there had fallen by around 8% and this is in INR terms. In terms of the household insecticides, which is one of the major parts of business, urban slowdown has impacted the overall performance in terms of volumes as well as sales for household insecticides. But household insecticides is now showing an overall market share gain, and this will be overall led by a pricing as well as volume growth going ahead is what Goldman Sachs believes. In terms of the margins, EBITDA margins were impacted by overall increase in palm oil prices, but price hikes will be passed on to customers, especially in soap, is something that Goldman Sachs believes, and EBITDA margins on the back of that will see an improvement going ahead. In terms of the bull case where new products are concerned, it will give them an overall superior advantage going ahead. Premium products will also bring in some kind of margin expansion, but in terms of the past performance for premium products, especially in Q3, growth was not as much as what was expected and what it had been in the past as well. Lastly, in terms of the bull versus bear case where brokerages are concerned, Goldman Sachs has maintained buy with a target price of 1370, whereas on the other hand, Macquarie has maintained a neutral stance and cut their target price to 1125. And in terms of the stock performance, it's still around 7.5% above the 52-week low mark, which has not been the case for a lot of FMCG companies. But valuations for the company do not look cheap at all. It's still trading at a 64 times trailing 12 months P. So this is the overall view as to how things are faring out for Godrej Consumer.
Thank you so much for that, Mahima, for breaking that down for us. Aditya Shah, let me come to you with regard to the fundamental view on this one. GCPL, and if not, the larger consumer basket, how are you playing those? Aditya Shah, I believe you're on mute.
So can you hear me now, Harsh?
Yes, please.
Yeah. As Mahima also said, all of these stocks continue to remain extremely challenging and expensive. Godrej Consumer trades at about 64 times multiple. So from my perspective, it is really very expensive. Within the FMCG space, I would really look at some QSR at the QSR space as well as the FMEG space where a lot of correction has really happened. But I will not tend to invest at any place where the valuations are extremely expensive, because we're already seeing that the market may pump those stocks up in the shorter term, but in the longer term, if the valuations are expensive, stocks will undergo a time correction. So I will tend to give a pass to stocks that are really very expensive.
Kush, what about the fundamental view on this one?
Technical.
Godrej Consumer in particular?
The technical view, you mean?
Oh, sorry, technical view. Apologies.
I'm getting to the fundamental side of things as well, but it'll take some time.
Apologies. Yeah, please go ahead.
So for me, Godrej Consumer is at a very crucial support zone from a technical standpoint. A couple of factors playing for it are, the upward sloping trend line, support zone kicks in exactly at this, 1080 odd mark. Also, the retracement level of 50% is also acting up. So for me, it's at a very crucial juncture. At such a juncture in the market which is slightly dicey, I wouldn't want to venture a trade. If this does kind of gives this, if this support is broken and this resistance or rather this rally fails, then you're looking at levels of 950, 920 as well. So significant downturn possible if this support zone is broken. So I would wait and watch. This is just the fact that the support acting up are the first signs that perhaps some base formation of them is in place. But for the moment, in a market like this, I would just wait it out. If the closing comes anywhere close to the 1050 mark, in the coming days, then perhaps you could see some more downside on this one. So critically, rather sensitively placed, I would wait and watch for some more time before buying into this one.
Okay, Godrej Consumer, of course, in focus. The other stock in focus, and I just want a quick view on this before we get to our next report that we've got for you, and an interesting space there is ICICI Bank. I mean, what's happening with ICICI Bank today is astonishing. Aditya Agarwala, come in on the charts very quickly before we get, more sort of wider, better views on BFSI. You already said Nifty Bank is something that you would go long on, but ICICI Bank in particular, top of the heap there?
To a certain extent, Tamanna, I'm not too gung-ho on the stock. I think upside is capped to 1350, at max 1360 on the upside. On the downside, 1200 is a good support. I think stock will still consolidate for some more time before you see the kind of sharp up move. In the meantime, I think there are other pockets within the large sector banks which will take leadership, like Kotak Mahindra Bank and HDFC Bank. I think these are the two banks which will slightly outperform ICICI Bank from current levels. So for those reasons, maybe I'll just take a small trade for a target of 1350 on the upside at max from current levels.
Okay. What about you, Aditya Shah? Are you liking ICICI Bank right now? I mean, a whole clutch of BFSI is sparkling today, so is Shriram Finance, but ICICI Bank particularly?
I have repeated this time and again that 2025 will be the year of larger private sector banks. In the meanwhile, when the microfinance and the smaller private sector banks continue to bleed, this year will be the defensive. This year will be the larger banks, and in 2025 you have to look at microfinance and smaller banks, which are then available really very cheap. Mind you, some banks like IDFC is now available at price to book. So that's where you need to also focus on. But ICICI Bank, HDFC Bank, and Kotak Bank continue to be the top picks within the larger private sector banks.
In that order, in that particular order, Aditya?
Yes, ICICI Bank does not have any problem as HDFC Bank has, or Kotak Bank also. Now the 811 ban is removed. It will take certain amount of time before Kotak starts to come in and that growth starts to come back. So in my perspective, ICICI Bank will continue to lead the bank nifty until the other two banks get their business in order.
Okay, ICICI Bank top pick there. Well, from banks to hotels, quite a bullish day on the street, and Macquarie is quite excited about Lemon Tree Hotels. They've maintained an outperform rating with a target at 210 rupees. with a 63% upside potential. Why such a bullish call? Anushi joins in with more details.
Hey Tamanna, so it's a big upside that we are looking for Lemon Tree Hotels, and as you mentioned, it's a 63% of an upside of the target price of 210. A couple of factors in play here for the company. Firstly, is the stock has the potential to double from current levels with the kind of PEG ratio it currently has, which is a price earnings to growth ratio at around 1 times, which is there. So doubling from here onwards is a potential for the stock. Even if you look at the current pipeline, which is in consideration, it indicates that the number of rooms are expected to increase by 50% by 2028. So there is a lot of expansion happening in the company, along with multiple expansion taking place from 2028 onwards. There's also potential M&A in focus, along with that update on the Fleur IPO, which could drive further upside for the stock as well. Even if we look at the balance sheet numbers, we look at the cash flow numbers, FCF margin, the free cash flow margin, it's one of the highest around here in the coverage company that the company has, with a potential of 40%, and this FCF margin is expected to drive ROC from 12% in 2024 to from 12% in FY24 to 24% by FY28. And even if in terms of valuations we consider, now the stock is currently trading at a 50% discount, the company's group, and this is on a EV to FY27 EBITDA that we are looking at. So favorable valuations along with multiple expansion plans, and what we are looking at is also healthy FCF